Welcome back to Squawk Box. I want to talk markets as we get ready for this September jobs report this Friday. Joining us right now is Ed Jardini Research President. Good morning to you.
Good morning.
You want to talk jobs? You want to talk jobs ahead of this week? What are we actually going to see? Because I think it's going to have maybe an impact on at least the Fed's thinking a bit, probably not
Absolutely.
This month, but then also may have an impact, frankly, on politics in this election cycle. So what are we going to see?
Well, I think the consensus is that we'll see something like 140,000 increase in payroll employment, which would be better than what we have seen on a three-month average. I think the three-month average was 116,000. But wages have been rising faster than prices, so real wages are up, and that's really why consumer spending continues to increase. You know, employment is on the margin. If we have 140,000 on the margin, that's a good thing. But if we have a real wage increase, if wages are increasing faster than prices, that affects everybody, and that's in a positive way.
So how do you think the Fed thinks about that piece of this equation, right? There's the inflation component, there's the employment component, but if we're really talking about the wages component, that's actually sort of a different overlay.
It is a different overlay, and the Fed really hasn't emphasized that much. You know, I've been doing this for a while, and one of the old adages that does work is don't fight the Fed. And the Fed, particularly Fed Chair Jerome Powell, has come across as very, very liberal on the mandate. He's concluded that the mission has been accomplished in terms of bringing inflation down. And now the fight is to make sure unemployment doesn't go up. It's well meant. But the reality is layoffs are extremely low. The economy is actually doing quite well. It's just that the number of job openings has declined. And so people are staying unemployed longer. And I think the Fed perceives that if they lower interest rates, they'll create more jobs. And they could. But I think there's also a skills mismatch in the labor market. And if that's the case, then a lot of this liquidity that's being poured into the financial markets, not just by the U.S., but now by China, is going to continue to drive stock prices higher. And that, I think, we're already...
But speak to the skills mismatch piece of it. Is that just here in the U.S., you think, or you think that's everywhere?
I think it's probably everywhere. I think clearly our economies on a worldwide basis have become much more high-tech. That's where growth is coming from. Goods production is already highly automated, and now we're going to probably have robots increasing the productivity in the manufacturing sector. So what we really need is a lot of very skilled workers, particularly in the area of technology, or at least with a technology background. And if that's the case, we have a lot of work to do to augment the productivity of workers with technology.
Okay, so what is your betting line for the Federal Reserve through the end of the calendar year 2024, and speak to what we may see or not see before or after the election?
Well, I think I'm in there with the consensus that, again, I'm not going to fight the Fed here, and the Fed's very much committed to keeping the economy growing, which is a good thing. So I would say 25 basis points in November, and then maybe not in December. I think
not in December.
Maybe not, because I think the economic indicators are going to remain strong. I mean, we all saw last week that the economy was revised upwards. GDP is up stronger, gross domestic income is stronger, and most importantly, personal income turned out to be revised up, and people are saving more, and yet consumption is held in awfully well. So I think the economy is growing 3% in the third quarter. It'll do that in the fourth quarter. And I think the Fed's has already done quite enough, but it's going to do more based on what they're saying, and 25 may be it.
Okay. Ed Jardini, it's great to see you, sir. Thank you.
Thank you.
A big day for the NASDAQ market site in Times Square. This is the home of Squawk Box, of course, and the NASDAQ is set to celebrate 25 years in this location and what they like to call the new Wall Street. President of the NASDAQ, Nelson Griggs, is going to join us to talk about the boom in tech investing, IPO listings, and much more. And then Ways and Means Chair Jason Smith joins us to talk taxes, the election, and beyond. Squawk Box will be right back.
He's
Welcome back to Squawk Box, everybody. Today marks 25 years of the NASDAQ market site lighting up Times Square. Joining us right now is NASDAQ's president, Nelson Griggs. And Nelson, good morning.
Great to be here. Thanks for having me.
So 25 years, that takes us back to 1999 that this location has been here. NASDAQ obviously a lot older, back to 1971. But this has become a mainstay in Times Square. Obviously, it's our home too. Right. I look pretty routinely at the pictures that are on the way coming in here, and you've got photos of the opening bell ringing for NASDAQ IPOs, including Jeff Bezos from Amazon, including Howard Schultz standing there with Starbucks. You've got eBay. You've got Bill Gates ringing the opening bell here too.
I've seen Jamie Dimon.
Jamie Dimon is in the Starbucks one.
Starbucks one, exactly. Wow. Good.
Watched all these pictures pretty frequently. We've come a long way. What is new? What is different?
Gosh.
What should we be thinking about?
Yeah, what is new, I think, is every day the excitement that happens in this building. So I've been with NASDAQ for 23 years, so a lot of that time. And just as we watch NASDAQ grow, but really the companies grow with us, it's just remarkable who comes in here. Not only we do about 500 bells a year, we do 2,000 events here. You host your shows, Fast Money does. Just the activity level is just awesome. And the fact that we get to see these names you mentioned, but also the new companies going public and watching what they can do to change the world, it's a fascinating place to work and to be every day.
There were some highs when those earlier bell ringings came. We talked about it, but that was before the collapse, the 2001 bubble bursting. These issues too. Been through a lot since that time, and the IPO market has been pretty dry. Below the 10-year average for quite a while, but we are seeing a few signs that things are starting to pick up, and you've got the Fed cutting rates. What does all that mean?
Yeah, that's right, Becky. If you think about it, we obviously got a very active years in 2020 and 21. Almost we'd say too active. Then 22, 23, pretty big slowdown, and now we're doubling last year off a pretty low base, but we've had about 110 IPOs on NASDAQ, 17 billion capital raised. We've seen the biotech market kind of heat up a little bit before the election. Half the capital raise is private equity. That's not real normal. So it's the VC market, the tech market that we really think is a 2025 story. But right now, all the signs point to green in terms of the indicators we watch. So we do anticipate a much better year next year.
What's been holding things back? What's different? Why is it going to be different?
I think, again, you had that glut of so many companies went public in 2020 and 21. That was part of it. And then you just look at the performance of the broad market. We finally started to see the broadening out of the market kind of second half of this year, but it was really concentrated for a while in the top stocks. So a new IPO is a harder thing for the buy side to digest, and so we're just really seeing that's a factor, but also it has moved a bit in terms of what the buy side expects. So they're looking for larger companies, they're looking for companies with a real clear path to profitability or very close to profitability. So the buy side's pretty fickle. They change quickly, and they change these companies very quickly.
That's what's made it more complicated, is the buy side wants to see companies that can actually make a profit before.
Well, if you look at it, it was all about 2020, 21 were about growth, and more growth, and more growth. And then it was like, well, we'd love to see the growth. We also want to see a path to profitability. So it's really that combination looking for in larger size companies. So again, we're starting to see somebody out and do pretty well.
Do you remember who was here and made the decision that Times Square was a place? Because think of it. We look at it now. It's a perfect fit. And in '91, it wasn't quite the deuce. It wasn't quite the straight. It had already been cleaned up. It was okay. It wasn't that big.
But this was part of remaking Times Square.
It was part of it. But look at how the neon. You got the New York Stock Exchange down there with the big pillars and the statues of the people like this, and then you got the NASDAQ, the home of Amazon, the home of all the tech stocks, with it made perfect sense. But it was a little bit of a stretch.
Back then it was a little bit of a stretch.
We still deal with some Times Square issues. I don't know.
It is New York City, right? But at the same time, there's been also 20 trillion of AUM, assets under management, in Times Square area alone. So we do kind of view it as a little bit of the new Wall Street, but also the excitement here, the buzz when things are really clicking is exciting.
What was the anxiety about doing it? Because remember, this building became the home to Skadden, the big law firm. Condé Nast moved here. You guys moved here. I think Reuters moved across the street originally. I mean, there was a move.
Taco Bell.
There was a move to but there was a move to totally. But 25 years ago, this was a completely different place.
Absolutely.
By the way, the New York Times used to be just down there. They moved over there. I mean,
Yeah.
it's a whole
Pictures of us. I keep thinking of
I thought that.
Yeah, I can't see the pictures, but I think we're ahead of our time a little bit.
But were there people inside the company that were saying this is crazy?
I think you looked at where it was, as you said, a lot of changes in Times Square over the last, 2 decades.
It was a
Made
big
it
bet.
much
You
more.
couldn't
It was
shave
a
before
very
you went on the
big
show,
bet.
boy.
And I think as I now go around the globe and see this tower everywhere and the imagery of Times Square, but also it really is that assets under management that followed this, all the names
Right.
you mentioned. So it just has become an area that is it's
Can I ask a
exciting.
terrible question because I do
Yeah.
know this. Real estate here
Yeah.
used to actually be very cheap. So one of the reasons in
Used to
truth,
be.
that I know that like Skadden and Condi moved here originally was because the real estate guys were offering a deal to be here.
Yeah.
Do you guys own this piece of property or do you
No,
lease
we,
this piece
we,
of
we
property?
lease it, long-term lease.
Okay. Has that changed? Because obviously Skadden left.
Yep.
Condé Nast went all the way downtown because that's cheaper too.
Yeah.
What about you?
We recently did a relook of what our best location is for NASDAQ and determined
Yeah.
this was going to be our home.
Okay.
So we not only, we were multiple locations in New York as a company, but now our entire headquarters is here. So we have not only this floor, we have the second floor where Fast Money is, we have a big event space on the 10th floor, we have our corporate headquarters on the 26th, 27th, 28th. So this is home for NASDAQ.
Who's the landlord
So
here?
you got a good deal, I would assume, to
We feel very comfortable with our long-term lease here.
long term,
but,
like Hong Kong, or what are we talking?
I don't know the exact numbers, Becky, but we're here for the duration. We love the location. We love, again, you look at that iconic tower. I know it. See it every day, so we
This
get
is
used to it.
perfect
But as
for-
I go
for-
around and people put their pictures up there, it's a thing that makes people smile.
This was already like this. You didn't do this for us, right? Right? The
They didn't do it
fishbowl.
for us. They did it for them.
Yeah,
Well, I
it
hope,
works for
I hope we
us.
find this is a pretty good mutual partnership here. The excitement around having you here is awesome.
When you moved
I
in
love
here,
our
you
seats
knew
here.
you knew Elmo would walk by naked.
I didn't. We didn't have a vision of Elmo walking by,
But he,
we,
by definition, is naked, so that's not a big deal.
Covered up.
I haven't.
It's covered for
seen
he's not
Elmo.
anatomically correct. He's,
Yeah. Yeah, but we're excited
He's
for
3 years old.
We're excited for the future here. We're excited for what the market's gonna be in 25. Pretty decent little end of the year here, coming with some IPOs.
Yeah, right.
So we'll see.
Nelson, thank you. It's great to see you.
Great to see you, and
we
we're-
look
it's-
forward to the opening bell a little later this morning.
We're excited to have you. Yeah, great. Thanks so much.
Thank you.
You are welcome. Thanks, Nelson. Still to come this morning, former FEMA Administrator Craig Fugate on the cleanup efforts after Hurricane Helene. But next, House Ways and Means Committee Chair Jason Smith on the election and Vice President Harris's plan to repeal the Trump tax cut. Squawk Box will be right back.
Yeah. Damn it. Oh yeah, taxes. Time to pay my quarterly taxes. Oh well.
right, Squawk, got news breaking at the top of the hour. DirecTV buying Dish and Sling from EchoStar as part of a two-step transaction. DirecTV is going to be paying $1 to buy the pay TV business called Dish DBS. That includes Dish and Sling TV, while agreeing to assume about $9.75 billion of Dish's debt. Now, Dish and DirecTV launching an exchange offer at a discounted rate for the debt to help extend those maturities. For the deal to go through, Dish DBS debt holders will have to agree to take a haircut on that debt by about $1.57 billion with the exchange offer. And I know it's complicated, folks. Dish is attempting to convince its bondholders to become holders in the merged entity. Now, EchoStar said the deal will help cut its total consolidated debt by $11.7 billion and reduce its refinancing needs through 2026 by $6.7 billion. The deal also provides an exit for AT&T, which has been trying to shore up its own balance sheet. It's going to be taking a 70% stake, or I should say TPG's getting a 70% stake in DirecTV. That's a $7.6 billion transaction that's separate from this. The CEO of EchoStar is going to be on Squawk on the Street at 10:30 a.m. Eastern Time in an exclusive interview. And of course, all of this is going to be either going to happen or not happen, largely depending on whether regulators are going to allow it. EchoStar, we showed you that stock earlier. It had been down. Now it's up, what was that, about 2-3% there. 3.5% now on the back of that news. AT&T up just marginally.
You know, we did point out, we didn't say it on air, but Stanky has been working took us off trying to get that stock up for how long now? 2 or 3 years, trying to reverse a lot of things that did happen. It was $14, it's now 22, so it's a $157 billion dollar company, still yielding 5%. Remember, the dividend was it going to be maintained? Was it
right.
Then with the Time Warner deal or with the Warner Brothers deal? I think it.
What are we at? So we're at 22.
22 up from 14.
5 years ago, though.
5 years ago, it was. 4 years ago, it was 22.
5 was 28.
No, it's back to where it was 4 years ago.
4
Took
years.
that long.
5 years.
But made a round trip to 14 on the way. But it's been slow going and trying to repair the debt. Focus it's no longer a big multifaceted media concern. It does what it does. And I think you got to give them some credit for getting it back at least to a $160 billion company from 100 for AT&T, which was
My bell.
Michelle, my bell. Son de mon bell also.
What is that one?
Michelle, my bell. I think it's a different my bell.
Okay. Barclays downgrading Procter & Gamble from overweight to equal weight. The analysts there are saying it's more of a valuation call, but it does have concerns about P&G's organic sales growth trajectory versus some of its peers over the next 12 months, and citing its exposure to China and other slower growth markets having an impact on sales. Shares of Procter & Gamble are up about 18% since the beginning of this year. They report quarterly results on October 18th. You can see that stock today, $172.50.
Oh, the big winner in all this? Probably
T-Mobile?
TPG.
TPG.
TPG bought it for a song. He's actually buying it for down even less, and it does throw off a lot of cash. Coming up, what the expiration of the Trump tax cuts in 2025 would mean for the country. We're going to hear from the Ways and Means Chair, Jason Smith, next. And later, tech investor Bradley Tusk will join us. We're going to ask him about his new book, Vote with Your Phone, Why Mobile Voting is Our Final Shot at Saving Democracy.
No.
It's an interesting read and a provocative idea. We'll talk
Don't
about
get off on this democracy crap. That's what it is. God, I can't stand it. Can you stay out of politics? CNBC would be so much better, easier to listen to. Don't need millionaires telling me about democracy. Have a good day.
Over the past several months, the House Ways and Means Committee has been traveling around the country and holding roundtables in Washington to get ahead of the 2025 Trump tax cut expirations. Joining us now on what they're working on, Congressman Jason Smith is the chairman of the Ways and Means Committee. It's good to see you, Mr. Chairman. A new wild card thrown into it is President Trump's possible embrace of getting rid of the SALT cap, which also would add to the deficit, would it not?
It's definitely not a wild card. We've set up these 10 tax teams, like you were referring to last April, to travel the country, to listen to stakeholders, to do site visits. We've been to 19 different states, over 100 different visits, to look at the entire tax code. Not just the expiring provisions of the Tax Cut and Jobs Act, but everything, to see what kind of tax package works for 2025, and that includes SALT, which, as you know, SALT is expiring at the end of 2025, where there will no longer be a $10,000 cap. So it's going to be front and center in all the discussion. So it makes sense that he's talking about it.
Some of the appealing parts, across the board almost appeal about 2017, was that it did simplify taxes in terms of deductions, et cetera, putting a cap on those. What does it look like, and can we even project what it looks like when we have no idea about the makeup of the White House or Congress next year?
In 37 days, we'll have a better understanding of all the players on the field to see what direction do you go with the expiring tax provisions. We did simplify the code back in 2017. One of the biggest impacts of simplifying the code was increasing the guaranteed deduction. 91% of all Americans use the guaranteed deduction when they file their taxes. Only 9% of all Americans actually itemize, which use all the deductions. Unfortunately, that provision gets cut in half.
What you hear when you, on one side, characterizes what happened with the tax cuts is that I think they conflate corporations with the wealthy. They say it was a tax cut for the wealthy. At the same time, if you think we're in a great economy right now, and I see that said a lot by, that Bidenomics is working, this is 3% GDP, unemployment's very low. I don't see any credit given to the 2017 cut in corporate taxes, down to 21%. And I think that, I don't know, is a good economy because of the Inflation Reduction Act? Is it because of what pro-growth policies did Biden pass to account for the economy?
Let's just say right after passage of the Trump tax cuts in 2017, we saw the greatest economy in my lifetime. Real wages increased by $5,000, which is more than the combination of the 8 prior years of the Obama administration. We saw record low unemployment, the lowest poverty in recorded history. Inflation was normal. These were things that really helped real Americans. Every American, Joe, will face a tax increase if we do nothing in 2025. So that tells me that it wasn't just the wealthy, it was the poor that also received a cut in
But
taxes.
how would you pay for extending the tax cuts and getting rid of the salt cap?
We're gonna have to look at everything. I think whenever you're looking
That's a
at,
big number, though. Is it not? What would the number be if you got rid of the salt cap and you extended the tax cuts? It's trillions of dollars, isn't it? Over 10
it's
years.
about 900 billion over 10 years is the salt cap elimination. You're looking at 4.6 trillion dollars worth of unpaid for tax expirations that we have to address. So we have to look at everything. Everything is on the table.
Do you think tariffs can pay for that? Are you?
I think we're going to have to look at absolutely everything. There's not one thing that can pay for $4.6 trillion.
Like what though? Do Republicans aren't willing to raise taxes anywhere?
Well, I think there's hundreds of billions of dollars out there that the administration has tried to use for student loans. I also believe if you codify various aspects of the 301 tariffs, that can raise a lot of money in the hundreds of billions of dollars. There's multiple things to look at. I also believe there's some deductions that we should be getting rid of that are out there that are not necessary. We need a flatter, fairer rate.
Okay, so what kind of deductions do we get rid of?
Well, for one, salt is going to be in the middle of the road. The president's called for us to address salt. There'll be a cap on salt.
Oh,
It's
there'll
not
be a
going to be
cap.
unlimited. There will be a cap on salt because there is no way in a Republican House of Representatives that you can pass an unlimited salt deduction.
So what kind of number do you
Higher
think
cap
it'll
or a lower cap than where it is now?
I would say definitely a higher cap. There's going to have to be some wiggle room. If you look at the salt cap that was passed in 2017, it had a marriage penalty. Republicans are supposed to be the party of families. There should not be a marriage penalty. And there's other provisions that you can look at. Inflation's gone up over 20% just in the last 3 years. How much has it gone up since 2017? A lot of things need to be addressed when looking at the salt deduction.
be? When you look at the individual tax rate on the highest end, what do you think it turns into?
Of the individual tax rate?
Yep.
Well, every individual rate will go up. If we do nothing, it'll be 43.4% will be the highest end. My goal is to make sure that we extend what the 2017 tax cuts did with the individual rate, but we got a lot of work to do, and it also depends on what happens in the next 36 days.
If you make the corporate tax rate,
corporate tax
make the
rate.
corporate tax rate 15%, which is what former President Trump wants
Right.
if he becomes the president. What does that do in your mind overall to revenue?
So what he's
And,
been
and I'm curious, just recognizing that the BRT, if you remember back in the day, 2017, 16, was willing to or wanted what they thought was 25%.
So I'll just say, I believe joint tax, I know joint tax was completely off when they scored the 2017 Trump tax cuts. In fact, they were off by $900 billion, almost $1 trillion in just revenues 2 years ago. That's a big number to be off. So we see that those Trump tax cuts definitely were pro-growth and created a great fuel to the economy. The 15% tax rate that President Trump has suggested is for companies who do their manufacturing in the United States. It's not across the board 15%.
You don't see that as industrial policy? That sounds like a Democrat initiative to me.
It's an incentive to make sure that we support American-made, American manufactured goods. That's why I think you see a lot of his trade policy as well.
There's certain things that should be done other places. Maybe not everything, and I wish everything was made here, but you know, the whole comparative.
Yeah, like what do you think about like Deere tractors? What do you tell the farmers who are going to have to pay more for the Deere tractors? There's more people who have to buy the tractors than are going to make the tractors, right?
So, as someone who owns a John Deere tractor
Okay.
on my farm,
Yes.
in my
Nothing runs like a
Missouri,
deer.
Nothing runs like a deer. They've made it clear that they're going to continue to manufacture in the United States, which I hope they do. Because when you look at our exports throughout the world, it's farm machinery, it's aircraft. That's what most of our products that are going. We have a little bit of agriculture. Unfortunately, we're at a $32 billion trade deficit on agriculture, which is the worst it's been in over a half a century.
So you think just strategically we'd be better off focusing on agriculture manufacturing devices like a tractor than actually the agriculture itself?
I think there's
In terms of it as a business, would you
I
say
think
the
it's more
agribusiness?
machinery than a device.
Excuse me?
Andrew, there's three things that we have to make sure our country is very focused on. When it comes to our food supply, so that would be agriculture, manufacturing. When it comes to our healthcare supply, pharmaceuticals, drugs, healthcare supplies, and when it comes to energy. If our country is not independent with food, healthcare, and energy, that means we're relying on another country. It needs to be our friends. But
Jason,
we need to
are you a free
focus on
trader
this.
though? Are you a free trader, or like when they asked McConnell about tariffs, he goes, he punted and said, "I'm a free trader." You a free trader or a tariff guy?
I'm a free trader, but I believe in fair trade. For example, the country of Thailand imposes a 50% tariff on U.S. beef, but a 0% on Australian beef. That's not fair.
Okay.
That's not right. So
So it
reciprocal
sounds
trade.
targeted though, like not across the board, which Trump has talked about.
Tariffs are a tool to make sure that American manufacturers, American farmers are treated fairly in all businesses. And as long as everyone is free, then it'll be fair. But not all countries are being fair.
Tim Smith, thanks. You like coming into it's 25 years old, the NASDAQ. It's a big party,
It's
anniversary.
pretty neat. It's a lot different
A
than
lot of
Missouri.
lights.
So
Yeah, a lot different. Well, but you get to show people everything in show me state.
the show me state.
You do. Good. Thank
You're
you.
showing me today.
I am. I'll try not to show you. All right. Squawk Box, we'll be right back.
A new poll out today showing a major shift of Latino voters supporting the Republican Party. Our senior economics reporter, Steve Leisman, joins us right now. He's got the details on that. What'd you find, Steve?
Fascinating stuff, Becky. The economic woes from inflation I think they're accelerating. They seem to be accelerating a shift of Latino voters towards Republicans. What they did is it cut in half a Democratic lead with a critical voting group. That's according to a joint poll we've conducted with NBC News, CNBC, and Telemundo. The survey of 1,000 Latino registered voters nationwide finds Democratic presidential candidate Kamala Harris leading Republican Donald Trump 54-40. But that's considerably less than the 36-point lead enjoyed by President Biden in the lead up to the 2020 election. Though it's better than President Biden, of course, performed against Trump before he dropped out. But this is part of a trend. Biden's lead was almost half again the 50-point lead that Hillary Clinton held over Trump in 2016, showing Latinos remain the Democratic camp, but in diminishing numbers. The diversity of the Latino vote, you can see it in these subgroups. Men 18 to 49, they break for Trump, 51 to 42. Women, the other way around, 40 to 52. In Florida, they break for Trump, 52-43. California, the other way around. College men break for Trump, 42-58. Non-college men break, that was for Harris, break for Trump. Non-college men break for Trump, 51 to 38. Harris has a strong and substantial lead on key character issues by 53 to 23. Latinos say Harris would be better addressing concerns of the Hispanic community. Harris enjoys a 48% positive favorability percentage, 32 for Trump. By better than 2 to 1, Harris is seen having the temperament to be president and has a similar advantage on who would be more competent and effective as president. Harris also leads on treating immigrants humanely by 39 points, abortion by 32, even crime by 5 points. So what's going on? Well, Trump has a 13-point advantage on securing the border. And now, look at the most important issues for the Latino community. Take a look there. By far, it's the cost of living, 34%. Jobs in the economy, 20%. Look how far down immigration and border security are. Just the fourth most important issue, actually less or lower than it is for the broader population. Okay, Trump leads on these two top issues by 9 percentage points on the cost of living and by 4% on jobs and the economy. So the survey shows Latinos mirroring the broader population on the importance of the economy to this election, and that's helped former President Trump make further inroads into this critical and growing voter group. Guys, 14 points is a good lead, but not when you may need 36 to win.
But that goes back to James Carville. It's the economy, stupid?
I think so. I mean, it's just, they look, their views on the economy are the same as the rest of the population. That's a problem for Democrats because they're supposed to be a Democrat-leaning group. They're not. The Democrats in our CNBC August survey, 42% thought the economy was good or excellent. This group, just 23%. They look like the rest of the population.
Our board said 52-40, but you said 54-40. Do you know whether the board
54-40.
So the board was wrong. The board was wrong. It said 52 to 40.
It's a 14-point lead.
14 is 54.
Yeah.
Can I just ask, on that first board, you were comparing it to how the Latino group actually voted last time?
No, it was the
What
polling.
polls
The
showed
polling
was
was, yeah.
okay.
Yeah, and
So
you can
how
also,
did that match up to what the actual vote
it was pretty close. I think it was 44 in the exit poll. That's the only way you can really figure out how they voted is through the exit polls, which are not reliable. Anyway, I think rather than the exact numbers, I think the order of magnitude is what we're talking about here. That it's diminished. There have been big moves in overall, and men are now even with Trump and Harris are even among Latino men. Big lead last time. Women, the lead has shrunk.
This confirms a lot of the polls leading up to this, in the black community as well, in terms of narrowing the previous lead. But that, I don't know if it was that narrowed as what you just showed. Pretty amazing.
It is pretty amazing. The question becomes where these votes are distributed. And
Yeah,
the
because
extent to which they
there's
matter.
7 states with
electorally.
80,000 votes that matter from
Right,
from the last.
and by the way, it's interesting. I did the math. If you had if you doubled the Latino vote, then that decline in the lead wouldn't matter as much, right? Because there'd be more votes.
Yeah.
And it is growing, but not anywhere near at that. But they are, by the way, one of the youngest demographic groups out there. I just want to make one more point. Which I don't know that anybody around this table shares this belief, but if you look at this poll, I want to say businesses and politicians treat the Latino community monolithically at their peril. There are so many differences, and we have a story we're going to do this later in the day. And by the way, all this is online. You have evangelical Latinos and you have Catholic Latinos. Very different. You saw the differences there between Florida and California.
Maybe that's just like every other population. That's
Every other population. Now,
you don't see businesses catering necessarily to Italian Americans or Irish Americans or other things. You're just Americans at some point.
at some point, and probably as each generation goes by, they look more and more like the broader population.
Steve, thank you.
Pleasure.
Coming up next, right after this, investor Bradley Tusk has got an interesting idea about voting. We're going to talk about it. And then later, Gina Raimondo is going to be weighing in on the election, plus mayor of Asheville, North Carolina, on the devastation left behind from Hurricane Helene. We're going to discuss that as well. Squawk Box returns after this. Welcome back to Squawk. We're just a little over a month away now from the election. Our next guest making an interesting pitch for mobile voting in the elections to come. Joining us right now is Tusk Ventures CEO Bradley Tusk. His new book, Vote with Your Phone, Why Mobile Voting is Our Final Shot at Saving Democracy. It is out now. It's a provocative idea. A lot of people have been talking for a very long time about how this could one day be the way we do this. Of course, this and has also been one of the great worries about whether people would believe in the democracy and whether they'd believe in the vote. So what say you?
So I would say this. I think we would all agree that politicians basically make decisions based on the next election, right? It's fair to say. And we would agree that because of gerrymandering, basically primaries are the election that really matters. And just as a fact, primary turnout's about 10 to 15%. So who is that? It's the far left, it's the far right, or it's big special interests, whether it's the NRA or teachers unions or whoever. And they dictate not only who wins our elections, but then ultimately what those people do once they're in office, because all they want to do is make sure they win the next primary, which means keep the base happy and keep the special interests happy. And so we're always going to be in a world where either we have the total dysfunction and chaos of DC, or totally one-sided government, whether it's state of Texas on the right or city of San Francisco on the left. And the only solution is you got to change the underlying incentives and inputs and significantly increase turnout to move politicians to the middle.
Okay, so but the question
Yes.
is with Russia
Yep.
and Iran and China,
Yep.
apparently all very interested in the outcome of our election and willing to do things that are
Yep.
completely and utterly untoward.
Yep.
How much would you worry that we would all be voting here, and so the great news is everybody's voting,
Right.
but then all of a sudden, even if the Iranians or the Chinese or the Russians don't really get in,
Yep.
but the speculation gets
Sure.
out there that they have, that people don't believe in the vote,
Well,
which is
all right.
what we have even right now.
I was about to say, first of all, I'm not sure that would be much worse than the status quo. But even putting that aside, a few things. One is, so we've been building technology according to the recommendation of the U.S. Vote Foundation that is end-to-end encrypted, end-to-end verifiable, multi-factor authentication, biometric screening, open source, it's air-gapped, and this is all philanthropic. I've paid for this all myself out of my foundation. We're going to make it free and open source to anyone who wants to use it. So number one, I would argue it is far more secure than the existing voting technologies where mail trucks get lost and polling places get shut down and things like that. But beyond that, my argument is let's start small. School board elections, city council elections. I'm pretty sure Vladimir Putin is not that interested in the
How
Queensboro
does it
president
work?
election.
Only because I've got like 15 mobile devices.
Yeah, so
How do you keep
here's
them from
here's
voting
how it works.
14 times?
So you would, let's just use New York City because we're sitting here. You download the app from the New York City Board of Elections. And the first thing they would say, okay, is Becky a registered voter in New York City? You determine that. Then is Becky really Becky? So there's multi-factor authentication like you would get from Google or Amazon or anyone else.
Which I have to show my driver's license or what?
Well, first thing is you just have to be able to show that you're even from your device, which is why, just in the way that any website will text you a number, then it could be driver's license, it could be biometric screening, fingerprints, iris, a lot like Clear at the airport, to determine you're Becky.
So more than if I even showed up at a polling.
Yeah.
And this goes back to then the whole idea that people don't want to ID anybody.
Well, look, you're going to have to make some
Call the
choices
Democrats.
between having an app that people have confidence in to get more turnout and rules around that. I absolutely agree. I certainly prefer that we use biometric screening because then we know that you're you. The ballot pops up on screen. You make all your choices. Because it's digital, we don't have to worry about hanging chads or straight
I'm
pencil
cool with that,
marks.
but I don't want you to have my biometrics.
Well, you don't have to vote this way.
Yeah,
So
I would
look,
go into the.
you don't use Clear at the airport or TSA or any of that
I'd
stuff.
rather go
You
to-
just wait in the really long line.
No, I fly often enough that I only fly United and I'm 1K there. So.
Okay, fine. So look, there's a lot of people, like for example, I dropped my daughter off at college about a month ago.
Yeah.
She's never going to do absentee ballots. She's never going to go somewhere. She has checked her, assuming she were awake right now, which I'm sure she's not, but if she were, she will have already checked her phone 5
But
times.
would you
since we
worry
started
about
talking.
biometrics getting hacked at some point?
No, because you're using biometrics to get into your phone all day, every day. It's the same thing. You might not be, but the vast majority of people are. And to the point, let's meet people where they are. If younger people or people deployed military or people with disabilities for whom voting is difficult
That
want to be able
goes
to
to the
vote on their phone,
platform.
let's
Let
let
me
them
ask
do
you
it.
that.
For you,
There's
go just wait in line, whatever you want.
There's going to be an argument that some people
Yep.
don't have a phone.
So
What do you do there?
97%, according to Pew, 97% of American adults under the age of 50 have
Have
a
a smartphone?
phone. 76%
So
over
what do
the
you
age
do
of
for the older
65. Well, keep all the phones we have. No one's arguing to get rid of it. But if you
Right.
said, look, we're going to have mail-in, I would argue every state should have mail-in and in-person voting
Right.
and mobile voting, and let's get
It's
as
more
many people
secure and it
voting as
asks for
possible.
more than you
Let me
have
ask
at
you-
polling stations.
For sure.
Let me ask you this.
Exponentially more.
Let me ask you this.
Yeah.
There's two other issues that relate
Yeah.
to this. One is whether the government or somebody will be able to track your vote. So one of the things that happens now is it's very, very difficult. You go into the voting booth and that's supposed to be between you and your vote, and that's it. And because it's on paper and you walk out, it's very hard for
Right.
people to realize what's going on.
Right. So this is
Electronically,
exactly like
this is something that scares people.
Right. So the way we've built it, it's exactly like a mail-in ballot, which is once it hits the election office, it's encrypted. They don't decrypt it until they take it offline and air gap it, so it's not even accessible to the internet. Then they print out a paper copy. The copy they print out when they decrypt it has no identifying markers at all. It just gets mixed in with all the other ballots. So
Right.
it's just like if you mailed in a ballot, it would have your attorney address on it, but they have
this
no
goes
way to know
back to the
you.
IDing issue, which is obviously
Yeah.
there's a huge debate in this country about IDing,
Yeah.
about IDing people and whether that actually prevents people from actually voting.
Well, we should-
Your argument is that because more people have phones,
Yeah,
it
by the way,
overcomes that
it's-
issue.
It's a false argument because the argument right now would be, hey, let's either have no security requirements because we want a lot of people to vote, or really strict security requirements to make it hard to vote. Let's make it really easy to vote, and let's make sure that you're you. That's what we should be doing.
Okay, can I try out an idea on you?
Please.
That I've been playing with for
Yeah.
probably 15 years.
Okay.
It's a little bit like yours, but a little bit different.
Yeah.
I always thought we should use the ATM network as a potential voting booth. They exist. There's a massive infrastructure across the country. We run trillions of dollars over it virtually every single day.
Yep.
There are cameras on virtually every ATM machine.
Yep.
So you could actually have some kind of security if you thought people were double voting and doing other weird things. And lastly, what you could do, which I think would be very interesting, is actually offer every single person a paper receipt. Because the paper receipt could have a number on it, which then you
Yep.
go check your own vote
right.
on the system afterwards. If you thought that the Russians were hacking the system, you could go see that your vote actually
So I
was
should
taken.
mention the system that we're building has a tracking number that every single voter gets when they
Great
submit it,
minds.
so you're
Great
already
minds
ahead of your
think alike.
time.
Okay.
Look, I think that would be better than what we have right now, but I still worry, and I'm not worried about the presidential election, which probably doesn't ever need mobile voting, to be honest. They have plenty
Really?
of turnout. Yeah, because that's 60-something%
So then you
turnout.
don't think this really should be used for even the president? That's where everyone's head goes.
No, I'm worried. You know what city council primary turnout was here last year? Take a
Next
guess.
to nothing.
7.2%. Any of you could have won a city council seat with 7,000 votes in a primary. That's why our government is so screwed up, because people are so indebted to the extremes who bother to show up in that stuff. So look, would more people vote at an ATM than a polling place? Perhaps, so that might be better if it could be secure. But would a lot more people, if they were, while they're waiting for their coffee or they're sitting on the bus or whatever it is, if they
Don't
could
wanna do it.
securely vote, could do it? And by the way, if you just told me we'll have mobile voting for state and local primaries, given how out of whack our state and local governments are, where they're so extremely held hostage to one side or the other, that would fix like
Can I ask you
70%.
one other question? And it's
Yeah.
good for democracy to have more people voting, you would argue.
Yes.
The costs, so I believe that our whole election systems are so corrupted by money.
Yep.
The cost of running an election
Yep.
for a city councilman, for example, I would assume the number would become astronomical because all of a sudden you have to really reach, and look, you want to reach everybody, I'm not
Yep.
saying you don't, but I'm saying all of a sudden it changes the complete dynamic of the cost of these elections.
Yeah, sure, but again,
Maybe that's a good thing.
you could have the cost of administering the election goes way down, right? So you could put that money into matching funds for campaign finance, or you could put spending caps on the race itself. Plus, also the cost of reaching people digitally is a
should be
fraction
lower.
of what it is. If you want to advertise on this show right now, it's really expensive because you guys are reaching the whole world, right? Whereas if you want to just target one voter in one city council district, that's like fractions of a penny.
Right.
So I'm not sure that it really would be that expensive. And for governments, we've built this technology. I've paid for it out of my own pocket. It's free. We're just going to make it completely open source and available.
Right. Our viewers are very valuable.
That's why people pay the
why
big
the
bucks.
rates
Yeah,
are so high.
Absolutely. And I bet every one of your viewers right now has a smartphone. I bet 98% of them don't vote in state and local primaries, and I bet half of them probably would if they could do it easily and securely.
Bradley Tuss, thank you for making us think this morning.
Thanks for having me, guys.
Appreciate it.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Today's big corporate story, DirecTV is buying Dish and Sling from EchoStar. As part of the two-step transaction, DirecTV will pay $1 to buy the TV business called Dish DBS that includes Dish and Sling TV, while agreeing to assume about $9.75 billion of Dish's debt. Dish and DirecTV are launching an exchange offer at a discounted rate for the debt to extend the maturity. With this exchange offer, Dish is attempting to convince its bondholders to become holders in that newly merged entity. EchoStar said that the deal will help cut its total consolidated debt by $11.7 billion and reduce its refinancing needs through 2026 by $6.7 billion. The deal also provides an exit to AT&T, which is selling its 70% stake in DirecTV to TPG for $7.6 billion. The CEO of EchoStar will be on Squawk on the Street. That's coming up at 10:30 a.m. Eastern in an exclusive interview.
Let's get to Mike Santoli. He's down at the NYSE. Hey, Mike.
Hey, Joe. We've had about a week and a half in the markets to, maybe rethink the response to the Fed's big rate cut. Didn't really do so. And in fact, since then, if anything, the economic numbers have been a little bit better than expected. So we have a picture of the S&P 500 of a market where the Fed is cutting rates into an earnings upswing in an economy that maybe wasn't quite at stall speed. You see the new highs we've been making, I think 43 this year. Today's the last day of the quarter, of course. You have a little bit of downside pressure. Really, the action has been overseas, obviously in China as well as Japan. Take a look at the equal weighted Russell 1000. One feature of the third quarter is that it's been a broadly kind of inclusive rally, and this is finally making a new high after it hadn't done so since late 2021. About 70% of S&P stocks are actually outperforming the S&P index over the last 2 months. So we got the broadening out. The Magnificent Seven has taken a rest. We'll see if that's been enough to sustain this rally, which, you know, is still facing some valuation pressures, and of course the month of October. Take a look at 10-year Treasury yield. Just a quick note, we've kind of been rising in yield since the Fed meeting. You see that on the far end, and that's probably not a bad thing. Obviously, you're kind of solidifying inflation expectations around current levels, but also, you know, it's no longer the bond market saying the Fed's making a mistake and the economy is much more vulnerable. So obviously not a threatening level, 3 3/4, 3.8 or something like that, but got to keep an eye on the yield curve, Joe.
Yeah, we do. I wonder if those are the highs, Mike. Nobody knows. We will see.
Yeah.
Friday might make a difference. All right, thanks. Coming up, the mayor of Asheville, North Carolina, is coming up next, and then former FEMA administrator Craig Fugate is going to help us understand the huge cleanup ahead. Stay tuned. You're watching Squawk Box on CNBC.
You got this.
The devastation in the western part of North Carolina caused by Hurricane Helene is being described as catastrophic. Joining us right now on the phone is Esther Mannheimer. She is the mayor of Asheville, North Carolina. Asheville has a population of a little under 100,000 people and is, of course, known for its art scene. The county that the city is in has reported at least 30 deaths related to Helene. And Mayor, thank you for being here in this difficult time. The pictures that have come out, the video that's come out has been horrifying. You've seen it firsthand. Can you tell us where things stand right now?
Well, I will say that the pictures don't fully capture the catastrophic damage that we've experienced here in Asheville. It's unprecedented. It's exceeded any historic storm on record. We've had the combination of incredible flooding and also damage due to winds, down trees. No neighborhood has been spared. The power and water is out, and we're entering a desperate situation.
Have you even been able to locate all of the people in need or find out exactly who's missing at this point?
So no, there are still areas of our county that cannot be accessed because roads were washed out. And making matters even more complicated is that we do not have communication. So people can't just pull out a cell phone and contact one another. You see all kinds of folks that are putting out messages who do have the ability to do so, saying, I haven't heard from my mother, I haven't heard from my brother, I need to make contact with them, and that is still an ongoing situation. The only reason I'm even able to talk to you is because I'm in downtown where there is power and some Wi-Fi service, but otherwise, just if you can think about a challenge, we are experiencing it right now.
Every major road, interstate, and highway into Asheville has been damaged and is considered impassable by the authorities. How is help getting to you? What could you most use?
So we do have I-26 that runs down out of Asheville into South Carolina. It has been opened. So we can receive assistance that way. Also, we are receiving some assistance that's being flown into the airport. So we do have the ability, not the best, because 3 out of 4 major highways into the city are blocked due to landslides or washouts. And so it is challenging to get assistance in here. We are still waiting for the majority of what we need being water and food. And that is a challenge to get those resources in here. And we're desperately in need of that, and we're waiting for that. We are going to have the governor of the state of North Carolina here today, according to what he's been able to tell me. He will be here with his team at around mid-afternoon.
Mayor, I'm not sure for anybody who hasn't been following closely, they realize this is not just Asheville. This is North Carolina, western North Carolina, a huge area that spans probably about 11,750 square miles at this point. Millions of people. That's an area the size of Massachusetts, its surrounding states like Tennessee and Atlanta. What would help? People out there want to help. What would you suggest they do? Are there organizations you would suggest they give to? Or I take it you don't want people driving straight into town.
Right. We do need to coordinate with any major organization that's coming in to help. Of course, we have the Red Cross here, and there are other large organizations that are coordinating to provide assistance. That's obviously taking some time. The governor has asked for folks to donate to the North Carolina Disaster Relief Fund, and that's at nc.gov/donate. So that is a way to help with resources that we're in dire need of. So if folks want to help in that way. Locally, I want to tell you, I have seen amazing things from people here in our community helping one another. Pooling resources in neighborhoods, making sure to check on neighbors, trying to make sure that elderly neighbors are checked on, that someone's bringing them water to be able to do basic things like flush their toilets and have drinking water. It's truly amazing. And And over and above that, our first responders are doing an incredible job. They are several days into this now, and they are non-stop. And we have support from outside organizations, other fire departments sending us resources, the federal government as well. So it's all hands on deck, and it is a well-coordinated effort, but it is so enormous. I can't even describe to you. And as the rivers recede and you can see all of the debris, people's homes in the river just decimated, cars overturned, it's hard to understand the scope of what it will take to go through and check every part of our community and make sure, unfortunately, deceased folks have been recovered, that folks who are alive but cut off have resources and are reestablished with contact.
Mayor Manheimer, we are so sorry to see what you all are dealing with there, the fallout from all of this. We wish you well in continuing with this efforts at this point. And again, for anyone who is looking to help, as she mentioned, the governor there has asked people donate to nc.gov/donate. Mayor Manheimer from Asheville, North Carolina, thank you.
Join us
Thank
now.
you very much.
Thank you. It was more on the recovery efforts from Helene, former FEMA administrator Craig Fugate. Right now, what are the most important things we should be doing, Craig?
Well, right now it's still a response, and I think that's, it's hard for people to start talking about recovery when you still haven't even gotten some areas. But all of this is going to be based upon getting in, as the mayor pointed out, you got to get that critical infrastructure up, particularly that water system. You can ship a lot of water in, but until that system's up, it's hard to get to the next steps. Another key thing is, if you're not part of an organization, I think the governor and everybody else would tell you, just give them time. Don't try to get in there. Give generously to those organizations, as they pointed out, North Carolina Recovery. Money's your best way to help right now. And if you aren't able to make contact with family, there's a lot of things that North Carolina has information on their website, how to find out or get information about what's going on. Communications is going to be very spotty. But I would caution people, there's a lot of people missing. That's not unusual when communication is out. It doesn't mean that everybody, we've lost that many people. Unfortunately, they're going to find more fatalities as they go in these areas. But communications will be a huge piece of letting people make contact, let people know they're okay.
We've been hearing about the sort of the intersection of private insurance and then federal flood insurance. Do we have a solution inside? And I think the property and casualty insurance market had been stabilizing until this event. Now all bets are off again.
Well, I think this will be, as we get into the next couple of weeks to the next month, it's going to be a huge issue of how many people did not have flood insurance that had flood damage and find out that their homeowner's policy will not cover that. This is a huge issue for the nation. We're seeing more and more extreme rain events that are flooding well outside of what's called the special flood hazard area. And that's really an insurance rate map. So a lot of people don't think they're in a flood zone, but in these extreme rainfall events, there are areas that have never seen water that are flooding. And because they don't have insurance, it's going to slow down recovery. It's also going to mean that the federal government is going to have to spend more money to help these communities recover. FEMA's programs will not make these folks whole. That's really, that emergency response. I think we're going to have Congress look at the needs that all the states have been hit, particularly HUD, Community Block Disaster Grant dollars, to help these communities rebuild, because the housing losses are going to be staggering. And without insurance to rebuild, it's going to be very difficult for folks to get back to where they were without significant federal assistance.
And the whole idea of insurance is to spread the risk around. We even see insurance companies, then they go and reinsure the insurance that they write. There's a way to do this in terms of an indemnity. Who needs to get involved if the private companies don't? It seems like it's something that Congress would have to do.
Well, that was the origin of the federal flood insurance program, because the insurance industry, after major floods back in the 60s, began to back out of that market and left it open. So the federal government stepped in. I think there are other ways to do this, perhaps looking at federal reinsurance when the reinsurance markets cannot be affordable. The other problem is as I'm in Florida, our insurance rates are sky high, even if you can get insurance, is the market's reacting to the increasing number of disasters. And we have not quite found the balance between how and where we build to what's insurable risk, what the markets can afford. So if we're not going to change how and where we build, I'm afraid that the federal taxpayer is going to have to assume more of this burden.
Well, we've got plenty of federal taxpayer. We don't want to spend, obviously, but there's a way to do it. And we know what our, what our yearly expenses are, that, as a percentage of GDP. There's definitely enough to, if it's handled properly, to cover this, I think, Craig. But we appreciate your time this morning. Thank you.
Thanks for having me.
Okay, well.
Coming up, Commerce Secretary Gina Raimondo is going to join us live in just a moment. Then, as we near 1 year since Hamas's October 7th attack on Israel, a new report finding prominent social media platforms are still failing to act on anti-Semitic hate reported by users. Anti-Defamation League CEO Jonathan Greenblatt is going to join us to talk about the data. Stay tuned. You're watching Squawk, and this is CNBC.
Business.
Welcome back to Squawk Box. Checking Bitcoin right now. We're at $63,839. Crypto-related stocks also under some pressure ahead of the opening bell this morning. Let's show you some of the rest of them as you look at Ethereum and Solana and others. I don't know if we have Solana there, but you can see MicroStrategy, which of course is a leveraged bet, if you will, on Bitcoin, down about 5% this morning.
It is the final day of the third quarter. That means it's the final day of September. And you can figure that out if you go January, February, March,
April.
and then you do the
We
double
gotta
count
put
on the
together,
last,
double count on the
or double count on the last.
Yeah, just-
Only 30 days in September. And I always ask you this, you never get it right.
You never get it right.
You never get it right.
What's that?
What's the only month of the year to have 28 days?
No, it's how many months have 28 days?
How many months have 28
All
days?
of them.
All of them. What could be ahead for the
Why
rest?
don't we have symbols here? We need a
Could
little.
be. Liz Young Thomas is with us, head of investment strategy at SoFi. I knew that. How are you? Good morning.
I'm good. Hi, Joe.
We had a great run up to the easing cycle. Does it continue, or is it like so many things where we've already anticipated it and already traded on it, and now the going gets a little tougher? What do you think, Liz?
I think the biggest gains leading up to the easing cycle have probably been had, but that doesn't mean it slows down necessarily in the immediate term. So usually after that first cut, when you look out 30 to 60 days, the market is flat-ish to up, and then about 3 months out is when the market decides whether or not these cuts were needed because things were cooling too quickly, or if they were cuts because we could do it, not because we had to do it, in which case the market ends up being much more positive. So there's a few other things going on, though, that obviously are a tailwind for this rally. We've seen tech give a little bit back, or at least slow down its gains and not be leading the market as much, which you would think is a negative, but what we've seen also is that a lot of other stocks are coming up and really pulling their weight. And with 80% of the S&P still trading above its 200-day moving average, there's a lot of internal strength behind the rally, not to mention the optimism over China stimulus. So I think in the near term, we've got a lot of good things going for the market.
It seems like valuation concerns, it never helps you really with the timing of when to lighten up, although, watching what Warren Buffett does can help you sometimes. And we've already seen maybe him lightening up a little. But the reason you like rates to come down is because multiples can expand. But in the United States, aren't we at about 21 or 22 already? Why should even, unless it spawns more higher earnings, it seems like multiples are already pretty rich.
I would agree. Multiples are definitely rich. If we compare it back to what we do most often right now in the early 2000s, not nearly as rich as they were then. But when you look at where we are today, we're above the 5-year average, we're above the 10-year average. We're not quite at overbought conditions on the S&P, but we're up there. And when you talk about Warren Buffett, he's the longest of long-term investors, so he's obviously not trying to time the multiples on markets. But what you do want to see from this point forward, if we are able to secure a soft landing, you want to see the market start to trade more on fundamentals and not on multiple expansion, which might actually mean mathematically that multiples don't expand that much more from here, but earnings get more steady and stable. And you see some of the other sectors besides tech come in and show some more earnings strength. So we've seen little glimmers of that. We've got obviously a lot of strength in the industrial stocks right now, but not so much strength in financials. So there are still some conflicting signals from the market, but we don't necessarily need it to be multiple expansion. You do want to see fundamental expansion as well.
Well, that's it. Then it seems like you really got to do some homework and research, because it's not going to be like a tops down move in the markets. You're going to have to look for the companies that are benefiting and posting better earnings gains. Who does that include? And do you have to think about the election? Do you have to think about what goes into deciding which sectors are going to have faster earnings growth?
Yeah, well, the other thing you want to keep in mind is if stocks expand just on multiples, they can give it back very, very quickly. And frequently, if it's mostly multiple expansion, when you do have those little bouts of volatility, the ones that have run the fastest go down the fastest as well. So it leads to more volatility in the short term. So who can benefit? If tech continues to give some of this back and not lead the pack, what I think investors are going to start to do is look for growth in other places, especially as US GDP growth has slowed down a bit, still stable, but has slowed down a bit. So where can you find that, and what kind of environment are we in, and what sectors would do well in that environment? And the one that continues to bubble to the top for me is healthcare. You can find growth still in biotech and pharma. Healthcare is traditionally a defensive sector, but tends to do well in environments where the yield curve is steepening, particularly a bull steepening environment, which we have been in for a while. So you want to look at healthcare. The other thing is, I would say, when everybody is so certain of an outcome, you want to make sure that you're still considering the possibility that it doesn't happen. And right now it seems like the market, the Fed, are very certain that we've hit soft landing. So what would you want to hold just in case that doesn't come to fruition? I think you can take advantage of some of the rise in yields in the 10-year, but you still want to look across the Treasury curve from the 10-year down and look at the short end of the curve and find some opportunity there, just in case the Fed has to cut faster than we expect.
Liz, thank you. They're good. And tomorrow's October 1st. Don't forget that. How can you go wrong? We haven't talked about this, Thorkin.
Yeah.
How can you go wrong with healthcare? Did you see who died over the weekend?
Chris Christopherson.
That's unbelievable. Number one. Beverly Hills Cop. Detective Taggart. Remember the guy?
Yeah.
Yeah.
He's
He was
also,
on
also in the most recent Beverly Hills Cop that was just on Netflix.
He was, and he was also in Midnight Run.
Yep.
But he was 76 years old. I know that sounds old to you. It's not.
No, it's not. It's not at all.
So how can you not go into healthcare? Everybody's a geezer, headed there.
For whom the bell tolls.
Yeah.
All right, when we come back, Commerce Secretary Gina Raimondo will join us. First, though, as we head to a break, let's take a look at what you could hear from our Squawk Pod on your favorite podcast app. You can listen anytime. We'll be right back.
Calm.
Welcome back, everybody. Joining us right now is Gina Raimondo. She is the current Commerce Secretary, but she's joining us this morning in her personal capacity as a surrogate for the Vice President Kamala Harris's campaign. And Commerce Secretary, thank you very much for being here this morning. I realize you're here as a surrogate for the vice president's campaign, but there's so much news of the day that I feel we have to ask you about. I wanted to start with this potential strike at the ports that's expected to take place tonight at midnight. Obviously, this is the first time since the 1970s that you would see strikes all up and down, not only the East Coast, but the Gulf ports. What would this mean for commerce in this country? What would this mean for businesses if we go into this strike? And what do you know about it?
Yeah, good morning. So as you said, I'm here in my personal capacity. I would say, look, it's not a secret that this would be, depending on how long it lasts, could be incredibly disruptive to commerce. As you well know, that so much commerce moves through the ports. And if it goes a few days, I'm sure companies probably have their plans set. But especially we're in peak season, getting ready for the Christmas season. If a strike were to drag on, I think it could be really very, very disruptive to commerce. So I do hope that the parties, stay at the table and resolve it as quickly as possible. Hopefully averting a strike, but certainly, keeping the length of the strike as short as possible. The knock-on effects through the supply chain become quite extensive.
Where are the issues most prominent? Where have you been kind of focused and hearing on what would happen if the strike goes, let's say, longer than a week?
Again, I have not been very focused on that. I would refer you to the White House or the Transportation Secretary.
I know the administration and the president himself has said that he is not going to push the two sides together. He's urged them to talk, and I just wonder, have you heard from business leaders? You probably are the person in the administration who has business leaders ear more than just about anybody else in terms of what this might mean for them.
I'm smiling because, I want to stay in the bounds of the Hatch Act here. So if you wanted to have me back as Commerce Secretary later in the week, maybe we could talk about that. But as I said, I haven't been particularly involved.
Okay, we would love to have you back later this week. Is there anything you can tell us just about what's happening in the southeastern part of the United States? Obviously, this is huge, and we are still trying to figure out exactly what's taken place there for recovery of people and trying to get things back and up and running. But I would imagine that that's going to have a huge impact on the country too.
Yes, I would say it seems to be quite devastating, and just my heart goes out to the people there. I was the governor of Rhode Island, which is the ocean state, and I know firsthand from dealing in the aftermath of hurricanes, nothing like what they're seeing in North Carolina. Unless you're on the ground and see it, it's impossible to know just how disruptive, devastating, and life-threatening this is. Forget about commerce. So I have total confidence that the president will be on top of his team to deal with this, and Roy Cooper, the governor. But right now, I just think we need to be focused on the real suffering that is happening there and do everything we can to help them.
Thank you, Commerce Secretary. Why don't we talk about why you're here today? And again, you are here in your personal capacity today to talk about what you see in the economy and as a surrogate of the Harris campaign. What do you see as the potential impact after the election on this front?
I see huge, you were just asking me about disruption associated with storms and ports, and I think that's what you'll see with President Trump. I mean, he is erratic. His plans on tariffs, I think, will be very, very negative for this economy. Not only will they raise prices on everything, he's talking about a tariff on all imports. I mean, that's insane, right? That will raise prices of everything for everyone. It'll also hurt our manufacturing industry. People don't talk about this, but a lot of things made in America rely upon imports of, components and such. It's going to it's going to cost manufacturing jobs. It's going to raise prices on everything. It could kick us into a trade war with certainly China, which we don't need. I think every business leader I've ever spoken with, I used to be a governor, I used to run a business myself, you want predictability, right? You want somebody in the Oval Office who will engage with you, who will listen to you, who will be predictable, who will be smart and thoughtful. That's what you'll get in Kamala Harris, right? You will be able to talk to her and her team, reason with her, lay out your issues, and you will have somebody who is not erratic, who is practical, who's focused on solving problems. I am so deeply worried about the effect on the economy of President Trump. I think it's quite stunning, actually, that you have 400 economists coming out backing her plan and saying his plan will cause economic disruption. I don't think it is at all an exaggeration to think that Trump as president would tip us into a recession. I mean, we've talked
because of the tariffs alone. Because of the tariffs alone.
Yes, I do. Because of the tariffs alone, I think he's talking about depending on the day, of course, but he has talked about a 60% or 100% tariff on goods coming in from China. That alone, I don't think we realize the disruption that will cause. A tariff on all imports. First of all, that's anti-American. That would disrupt our economy, global economy. So I think that alone could kick us into a recession for sure. But also, I just think, look, we have had a soft landing, okay? Inflation, we haven't slayed it totally. It is on the way down. We need stability, predictability. And what you will have in him is unpredictable, chaotic, based upon how he feels on a particular day. And I do worry that the tariffs, but last week he said a 200% tariff on John Deere. Where does that come from? That will only raise prices and put people out of work at John Deere.
Well,
so
we've had surrogates on.
It is way too risky.
When we've had surrogates on for the Trump campaign, they have said that he doesn't really mean any of these things. They would just be tools for negotiation.
Then why does he say them? Why would I believe that? He says it. He's doubled down on it. He repeats it. By the way, he was president. We know what that resulted in. Massive deficits.
Seems like you kind of forgot that earlier. Yeah, and the tariffs that he did put on were continued by the Biden administration. There was no recession. Real wages were actually up. Stock market did well. A lot of very positive things happened. Record low unemployment until the pandemic. So it's just weird to act like it's a complete wild card what kind of president he would be when you've got a blueprint right there of what kind of president he would be. And Kamala Harris has been vice president for 4 years, and we've seen exactly what kind of vice president she would be.
Right. What have you seen? You've seen more manufacturing in this country since any time since World War II.
I've seen real wages go down. I've seen, crime.
That's not true.
What's not true?
I just don't agree with that.
Real weekly wages have gone down. Average weekly wages are still down from when Biden came into office.
When Biden came into office, we saw sky-high unemployment, sky-high
pandemic, but
inflation.
Prior to that, but before the pandemic, it was 3 points.
You can't discount the Trump administration. You can't say the economy was great during the Trump administration if you somehow exclude the pandemic and then turn around and say...
If you want to do the pandemic, fine. But prior to that, the economic policies resulted in a very good economy.
But then you can't then say, well, the economy was somehow terrible during the Biden administration and pretend the pandemic didn't happen.
Part of the inflation that caused real wages to be down is from the pandemic, but piling on all the stimulus and all the spending is what really exacerbated that situation. We've seen both presidents.
None of those things were related to the pandemic.
I just don't think you can say it's going to immediately be a recession when that didn't happen the first time.
Secretary? Madam Secretary?
I would just say 4 years ago, we were saying, could there be a soft landing? It's been a featherbed landing. Inflation's on its way down. Manufacturing is up. By the way, deficits exploded under Trump.
Manufacturing's been flat for 2 years.
And now there is more new manufacturing construction in this country now than at any time since World War II. It's a fact. Manufacturing jobs are on the rise. Wages are on the rise. Prices are coming down. Deficits are high but headed in the right direction, and tariffs will hurt this economy, hurt working people, raise prices, and I worry tip us into a recession.
Gina Raimondo, I want to thank you for your time today. We do appreciate it, and we'd love to have you back.
Bye, guys.
Thank you.
Coming up, the CEO of the Anti-Defamation League explains new data just out this morning on how social media networks are failing to act on reported anti-Semitic hate. We'll have that story and more when Squawk Box returns after this.
Should you lead?
Welcome back to Squawk Box. A new report by the Anti-Defamation League finding that nearly 1 year after Hamas's October 7th attack on Israel, major social media companies still failing to take action against anti-Semitic hate on their platforms. ADL looked at Facebook, Instagram, YouTube, TikTok, and X and put out a report card this morning. X failed with a grade of F. TikTok and Facebook both earned C's. Earlier research from the ADL showed nearly half of the Jews have seen anti-Semitic content or conspiracy theories related to the Israel-Hamas war. Joining us right now exclusively Jonathan Greenblatt, CEO and National Director of the ADL. You say half of the Jews. I'm Jewish. I see this stuff all the time. When you say X gets an F and you say Facebook gets a C, let's just rank them. Go down the list and let's talk about what we're seeing here.
Sure. So Facebook and TikTok on this test earned C's, Instagram and YouTube earned D's, and X got an F. Now, what we did is we took the 5 most popular social media platforms and we looked at, Andrew, what happens when an ordinary user reports violative content, in this case, anti-Semitism. And as you sort of highlighted at the top, there has been a tsunami of anti-Jewish hate since 10/7. We've seen it on college campuses, we've seen it in political spaces, we've seen it in public places and online. It has literally been a torrent So, and what I'm talking about are conspiracy theories that say, you know, Israelis are stealing Palestinian organs, or the Jews did 9/11, or using Zionist as a slur. So we simply ran tests to see how did a platform respond when an ordinary user reported problematic content versus through their trusted flagger programs. These are the established channels they have with organizations like ADL. So in brief, it took over a week, but when using the regular channels that someone like you would do, if you flagged bad content, nothing happened over a week. When we used the trusted flagger model, about 60% dealt with the content was dealt with. But Andrew, that isn't nearly enough.
So, but
hundreds of millions of people use these platforms, and they need to be safe from hate. Very simple.
Let me just understand this though. You're measuring how long it takes for this stuff, once it gets flagged, to be eliminated, or how much of this stuff people are seeing before it even gets flagged?
Well, we do both. Our Center for Technology Society this time looked at what gets dealt with when it is flagged. So that's what this was about. If you or your friend or a college student or an ordinary person flagged clearly violative content, what happens? And unfortunately, Andrew, the answer is nothing. For the ordinary person, nearly not enough is done. Now, I should be clear about one thing. These platforms, nearly all of them have strong policies in place, but they don't enforce them. It is the lack of consequences that needs to change, and it needs to change now.
Can you answer the first part of the question? And I don't know if you've looked at this before, just about what people are actually seeing before they even report it. If you were to grade these platforms, how would that look?
It would be very, very bad. So especially since 10/7, we've seen state actors, non-state actors, ordinary people flood these platforms with misinformation and abuse. Now, I will share that tidal wave, Andrew, there are some good examples. So this weekend, Instagram took down a post that was published by the SJP, Students for Justice in Palestine chapter at the University of Michigan, that literally called for death to Israel, burn the colony to the ground. I mean, that is clearly an incitement to violence and wasn't appropriate. But, you know, the vast majority of the time, Andrew, the platforms simply do nothing.
But how would you, but if you're giving X an F and Facebook and TikTok a C, which is the best rating for getting rid of the stuff, would the grades be similar for what people are seeing initially? I ask because there's been a huge question mark about, for example, TikTok, and you talked about government state actors, and whether the algorithm is somehow being misused to show more people on TikTok, you know, content that is trying to persuade them of things that the Chinese government wants. And I'm curious if you think that they would be, you know, they seem to come out pretty well in this on a relative basis. I know none of these are great grades. And I'm curious whether they would come out the same way if you're just looking at what people are seeing.
None of these are great grades, and none of these would get you into the kind of schools where anti-Semitism seems to flourish, by the way, like the Ivies. But stepping back, like, I can't comment on the Chinese government and TikTok, but what I can say is that company, for example, has policies in place and is doing more on enforcement than many of the others. Now, I think the reason why X performs so badly is because they no longer take down misinformation. There's a very different, they took down the Trusted Flagger program. Now, I've been in touch with X management. I know they want to do better. And we want all the companies to do better. Nobody wins when your social media feed is awash with anti-Semitism and hate.
Jonathan, we got to leave it there. We appreciate you joining us. Thank you.
Always. Thank you, Andrew.
Okay, we're coming right back after this.
a lifesaver.
Let's get a final check on the market this morning. We are uncharacteristically seeing some red this morning, down 90 points now on the Dow. NASDAQ indicated down 63 or so. S&P off 16. That partially due, maybe. We've got the 10-year stubbornly up near 3.8%, even though we are in an easing cycle. But we also have that scary month that includes Halloween starting tomorrow. A lot of times we've seen maybe stock market activity not so great in October, but September turned out fine when it was all said and done. Let's look at oil, which has not been an issue in terms of inflation fears. 68. We'll get a lot, maybe more clarity on Friday about whether we have anything to worry about with the labor market. And if it's 140, I don't think anyone would necessarily complain. No, 140,000 jobs.
140,000 jobs.
140,000 jobs. We can look at the dollar and gold if you want. We've got, no, we can't. Make sure you join us tomorrow. Squawk on the Streets next.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla. Jim Cramer's back. David Faber here, post 9 of the New York Stock Exchange. Final trading day of September and Q3 as we get set for a big week with the jobs number, JOLTS, a VP debate, a potential port strike tonight. Futures are lower. Powell speaks at NABE this afternoon. Our roadmap begins with the China stock surge, notching the best day since 2008 on hopes for some further stimulus moves.
Plus, it's a big merger. Satellite TV rivals DirecTV, Dish parent company EchoStar reach a deal that would create the largest paid TV provider in the U.S. CEO of EchoStar will join me exclusively. That'll be in the next hour. And automakers are under pressure this morning. Stellantis shares plunging ahead of the open as it follows Volkswagen with a significant warning on profits. We'll be looking at the whole group.
Let's begin with markets in this rally in China. Jim, welcome back.
Thank you for having me.
A lot happened in your absence.
Okay, so I get up, I'm in Italy, and I get up on Tuesday to this bizarre Baba Black Sheep meme. And I'm thinking, who is that from? And it's from Tepper. Now, of course, Dave Tepper. Now, of course, if I call him back, then it would be divorce filing papers. And you know what, David? Those are a bummer. So don't even think about it. But it was Tepper just saying, look, you got to go all in. So let's give him credit. He came on TV, but he had been in for a long time. He was in the 70s. He was in even when, I have to tell you, when it dropped to the 60s, he was there. So he has every right to crow. And I talked with him this morning, and he says, look, hope there's a pullback. That's all I can say. Hope there's a pullback so we can do some more buying.
People are throwing in Tepper, obviously the stimulus, but also Micron and Meta, the Meta event.
Yeah, I mean, look, I think that there was a lot that was good. The only thing that was a little negative was Friday evening, we found that Novellus, we hear that the H20, which is their kind of stripped down chip, Chinese are saying no to it. But, you know, David, we have been faked out many times. But the one thing that Tepper said, and Tepper's a great money manager. We know he wasn't as bullish. It's been since 2010 that he's wanted to come on. That was the Bank of America buy. And what he basically said was, look, it's very unusual for them to buy, then buy, then buy, and positive, and positive, and positive. I know that they were very worried about being downgraded from the MSCI index. I know that people felt that there was too much money being lost in the market, but these unlimited buybacks funded by the government, you know, we don't have those.
No, not right now.
No.
Not right now.
Oh, not right now.
Well,
So we had one 2015, 16.
We kind of did in COVID there, I think. There was a period where the Fed was basically like, buy anything you want.
Well,
but
they
it was
did.
brief.
They did
I forget what that program
I think the
was
Fed
called.
likes Starbucks.
But your point's a good one. We obviously talked a great deal last week in your absence about that incredible rally in Chinese shares.
Yes.
And by the way, the impact it was having not just on Chinese stocks, but on companies that are closely related and or selling a lot of their goods there, whether it's Freeport-McMoRan and copper,
right,
or whether it was the operators in Macau being Wynn and...
Well, but MGM, but yeah, I'll tell you what,
Not MGM.
No, Las
No,
Vegas
yes,
Sands,
yes.
which is no longer, it's like Macau Sands. But I'll tell you what, MGM, this is what I think is what people are interpreting. They want to buy extraneous ones. Now, of course, they want to buy Baidu and JD, but this Starbucks catches a bid every single day, and the problem there was China. And
well, they have a lot.
Well, they have a lot
of problems. We didn't notice the Starbucks moving nearly as much as so many of the other China-related stocks. I mean, when I think about the big ones,
when you think of Wynn, Estee Lauder,
Estee Lauder had a big move last week.
Based on what?
Based on the fact that the
that's
Chinese
why
consumer is going to come back in some way, in a significant way. Now there are plenty of doubters still in terms of this package of stimulus measures that either has been announced or is expected will be enough, Jim.
Right.
There's still some
I mean, no, they've all been failures because we have our own Eunice Yoon talking about $6-7 trillion. This is well below what's needed. Let me give you one that I know you're going to disagree with entirely, and I don't mind that one bit because I've been away for a week and I've really kind of recovered from the negativity. Apple.
Okay. What about
let's get away from the Apple. I told the lead times of the 16. I mean, no. If China were to come back at all, if Apple had any luck in China, then do we really care about whether Verizon has good sales?
B of A this morning, Savita, based on mutual fund positioning, funds appear better positioned for a head fake than a sustained rally. Her point is that if this does continue, there's going to be some long onlys that need to play.
Right. Well, I think that, again, Tepper this morning saying, Liam, you better hope for a Baba pullback. Baba being the most visible. What he's really talking about is, he mentioned Benjamin Graham, who was, I know a lot of younger people think that who invented the graham cracker. That's completely wrong. He's about value investing. And
Graham and Dodd. Right.
Yeah. And
the people who, Warren Buffett based his approach on.
Well, but we always
think their class, one of theirs classes at Columbia, right? Didn't he?
Yeah, but what's amazing is that when you go read the book. I mean, I had to read the book when I was at Goldman. Had to drop the Goldman thing. Didn't mention Harvard yet. And what was really pathetic was that it talked about how you have to have companies with huge cash positions that sell at single-digit multiples. Well, Baba.
It does?
Yeah. You got to back up your cash. Do you want to see the Baba Black Sheep thing he sent me? I'll send it to you during the commercial.
Well, it had a very strong week as well.
Oh, no.
So did Pinduoduo, so did Tencent, and on from there.
They have to have a pullback.
Yes. Look at that. I mean, that's quite a month.
Yeah, I can't just say buy it at 113. What happens is if they take a day off and don't say something positive. How many times have they sucked us in? Now, this has been a great rally. Happened in a couple of days. But, and Tepper's not selling. It's just that I think that you're going to get, maybe you have a kind of a interregnum where it doesn't move up.
Yeah, interesting. The other point that B of A makes today is they're saying be aware of tax loss harvesting in October on names that would be sort of tangential to China. EL, Lulu, Boeing.
That's very interesting because we do know that the mutual funds, that's when they take their losses. October is their month. That's one of the reasons why, the hidden reason why October has been erratic. Now remember, September's worse than October in terms of predictions of negativity. But
now September's over and it was actually a fine month.
And we're going into some of the best 2 weeks of the year.
Yes, we are. And we're already up to Dow's been up 10 out of 11 weeks. And we're going into this period that is nirvana. And I come back and I say, if you go back over the incredible Tepper experience, the Tepper
experience, is that what we're calling it now?
It's a ride. It's universal.
It's like a ride.
Well,
the cars can actually do the boat ride.
The Panthers had won. The Panthers had won. That was in itself seminal. It was a seminal move by the Panthers. Okay, but it could have been one and done. We don't know. But it was to talk about how you kind of have to get along everything. Japan. The only one you seemed kind of hesitant was U.S. Hesitancy.
Well, our multiple's pretty high, even when you back out our highest market capitalized companies. We're still 18 plus times for the other 493 of the S&P. That's not cheap.
It's 908, and you've not mentioned that Apple's expensive.
Well, how about looking at the quarter as we wrap it up? 60% of S&P components outperforming the index. Talking about the broadening that we were waiting for.
Yes, the broadening no one cares about. I'm going to hit a little quiz here for Davis. Dave. No one ever calls you Dave. I like that. Number one performer, S&P 500 in the third quarter.
In the third
I'm going to give you a hint.
Quarter?
One of the Great Lakes. Erie Indemnity. Erie Indemnity. Insurance company. No one.
No.
All right.
Can I move on now?
G Vernova. How about Palantir?
Yeah, it was a very strong quarter, and obviously, as we know, Constellation, Vistra. And if you make a nuclear plant or recommission one, you're in good place.
Yes, but here's one David's bailiwick. How about this one, David? The number 6. 1, 2, 3, 4, 5, 5. Kellanova.
Yeah. Kellanova.
Snacks.
Yes.
You know how you use plastics?
Yeah.
Snacks.
Yeah. Well, that got a bid, as we know from Mars. All right, guys. Speaking of bids,
speaking of bids,
let's.
Island.
Yeah, there you go. I know.
Okay, thank you.
He's very anxious to talk because it's been a week.
Yes.
It's been a week. So, I'm going to talk about Dish and DirecTV here. We've got one public company, one that's private. We've got a deal. EchoStar, the owner of Dish, is selling it to DirecTV essentially, but it's all the assumption of debt. It's a very complicated transaction. But looking at it from afar, you're talking about what is EchoStar, a highly indebted company. Many doubts, frankly, about its ability to service that debt, significantly reducing its debt load, and perhaps even more importantly, its near-term maturities as it jettisons its cash-flowing business, namely direct broadcast satellite, to DirecTV, creating what will be a large company with roughly 20 million subscribers. But of course, both of their subscriber counts have been moving like that, as our viewers probably well know. You can take a look at EchoStar's stock price there in terms of how it's responding. We told you some of at least the likelihood of the deal on Friday. It was in the market as well. Let's go through some of the details now. Again, it's quite complex.
Take this one slow, because I tell you, I've read it 5 times.
It's quite complex, but the ultimate goal here is to provide, for EchoStar we'll get to, but for DirecTV, well, there it is. And they are doing an exchange offer, essentially. EchoStar eliminates $9.75 billion of face value debt on its balance sheet. It goes over to DirecTV, but Direct is saying to those debt holders, yeah, we will take it, but we want to roughly, let's call it 10% discount to the face value, and then we'll take it on as our own debt, essentially. And if you're one of those debt holders, you're happy about that. Why? Because you're talking about a company that is going to be about a little over 2 times levered, as opposed to one that, well, when you include all the intercompany stuff and everything else, probably close to double digits levered, or at least it was. So that's a key part of the deal. And they're talking, of course, about cost synergies of as much as $1 billion a year for Direct. Now, Direct is a private company. Remember, it is still owned 70% by AT&T, but not for long, and 30% by the private equity firm TPG, which does manage the business, so had management control. That's all changing as well, by the way, because DirecTV, or TPG, is buying the 70% from AT&T for $7.6 billion. That'll be over a period of time in the years ahead, and they will own all of it. That's been agreed to as well. It's a separate transaction. Now, as for the EchoStar deal, that's where things get quite complex. But essentially, all of this being done to significantly reduce indebtedness of the company and eliminate near-term maturities, put them in a position where they can try to create that nationwide competitor to AT&T, to T-Mobile and Verizon in terms of providing a nationwide 5G wireless service. They have the spectrum to do it. The question is, do they have the money to do it from a marketing and equipment and everything else perspective? This gives them the runway potentially to do that. We will be discussing this in detail with the company's CEO a little over an hour from now right here on Squawk on the Street. As for what they get, $5.1 billion in, there he is, $5.1 billion in new capital is coming from existing debt holders. And I don't even have this down there. They're also essentially refinancing an additional $5 billion in existing debt. It's mostly in converts that have near-term maturities. They're pushing that out also to 2029, replacing it with some new converts, some new debt, and then this $5.1 billion is secured by Spectrum as well. It's going to have a lower interest rate. They're also getting a $2.5 billion loan led by Angelo Gordon and a number of other firms. That loan is going to let them pay down the November maturities they have. That was scaring people, of course, because there were some questions as to whether they'd even be able to do that. That's off the table now. That is done. And then you see kind of the net result here, right? They reduced total debt by $11.7 billion. They reduced the refinancing needs by $6.7 billion. And Jim, the hope is that they reposition themselves. Now, don't forget, they get rid of all their cash flow too, because of course that's the Dish business. But they reposition themselves, and this is, I'll pose a question to you, as kind of a growth stock, where you got to put a wireless company together fully, but that's kind of the way they want to be viewed.
But why would a bondholder agree to that?
Because there was a chance this company's going to go bankrupt.
Could default.
Yeah. So now you have a much stronger credit profile in DirecTV, which is going to just be over a little over 2 times leverage. You saw as well, going to take in, not going to have to pay those dividends to AT&T any longer, by the way, that they've been paying. And have as much as $1 billion in cost synergies. So you do that if you take that reduction in face. Why not? You move it over. You also agree to some of these things with EchoStar now because they're in a better position to service their debt. That said, you got to be a believer that they're going to be able to roll out finally, and they got an extension from the FCC in terms of making these licenses for the licenses and for the build out for another 3 years. But you got to believe it's going to happen.
Well, maybe the government will favor a stronger competitor by putting this together. While I was away in Italy, I bought Starlink for my house. 50 euros a month.
Right.
For everything.
And that would seem to represent a significant competitor here. Hence, the worries about antitrust should not be as strong as the worries about antitrust 23 years ago.
Exactly.
Yes.
Exactly.
I've been talking about this deal, or at least a similar deal, for a long time. Take a quick look back in the Wayback Machine. There's never been a story that I hate more than the GM story. Let's not.
How about the
18 months?
How about the AT&T broadband? So he loved that story.
Well, that I'm still affectionate for, but it's starting to.
Are we in shock that Jurgen Charlie Ergen actually? He's the cheap guy that you told me about with the
He's the guy who makes his upper management share hotel rooms.
And this is it a shock that EchoStar did prevail after what looked like just a shot in the dark with that bear hug?
It is a surprise. It is a surprise. Now, of course, it would only be fitting, as this has gone on for so long, this endless auction of GMUs, that ultimately some sort of regulatory problem will crop up. That continues to be now the question for this deal, now that GM has agreed to sell GMU's DirecTV to EchoStar. Never got there. That was, of course, the other way around. We're talking GMUs. Right. That was DirecTV, and they had a deal to sell it to EchoStar, and the government said no, and that deal died. This time, it doesn't appear that the opposition would be as great, but Jim, again, in this regulatory environment, it's hard to say.
Hard to say. David, how much does it matter that DirecTV lost the contract for football to
I don't know, to YouTube.
Yeah, to YouTube. Yeah. I only say that because a lot of us had that strictly for the NFL. And wow, once you had it, get rid of that.
Both companies have seen their subscribers
I got rid of that
decline.
Dish. It's like a frisbee.
Dramatically. Dish from 14 million to 9 million, and Direct is about 11 million. It had been as high, I think, as 20 at one point. Obviously, sold by bought by AT&T at an enormous price. And then sold, and now you've got the completion of that transaction. They're going to have taken in about 27 billion in total at AT&T over time.
And Carl, Starlink, Death Star. Correct.
Wow. Starlink's a threat to everything.
Starlink's a Death Star for everything.
Speaking of that, we're going to get to some news regarding Tesla coming up in the week. We'll talk some autos as well with his warning out of Stellantis and Aston Martin. We'll get to Carnival earnings, got an upgrade of Disney, downgrades of Procter and JPM in a minute. on this final day of the quarter. Jim had mentioned some of the S&P gainers for the quarter. Take a look at similar names leading the NDX for the quarter. PayPal, Dash, Tesla, which we expect deliveries from later in the week, and of course Constellation Energy, a huge story as we watch the evolution of nuclear energy. We'll get the opening bell and Kramer's Mad Dash after a short break.
Oh, yeah. First thing I see, I just paid my taxes. That's been on my mind this morning. Good morning, retail traders. Looks like we're holding the 200 right now. If we don't, we'll drop to the other support, maybe the 200 EMA. Okay, what do I need? Water? What time is it?
All that we are.
All right, let's get to our first Mad Dash of the week. Want to talk a little PayPal?
After I praised you on EchoStar, your head got bigger.
Yes.
Although that was that tie was a disaster that you're wearing there.
Back in 2001?
Yes.
Yeah.
I got to do it again. You had this interview with this guy Alex Chris of PayPal, and a lot of people kind of like didn't think of it. It was
I'm not thinking of it either.
holy. This guy's going to energize this company. He's going to make new deals. Maybe makes things fly with Amazon. Maybe he talks about cross-border with China. Well, David, this is the best performer in the NASDAQ, and it should be. Why? Because a new CEO has come in and really energized this place. Talking about
Oh, in the past 3 weeks? Come on, give me a break, Jim.
I have to just talk about how sometimes a new CEO can come in. And we saw with Brian Nickel and Starbucks. Now that
But we didn't see it with Disney.
He came in from Chipotle.
You all really piped up old Disney. Sorry, gotta let you go. Good morning, retail traders. Nile needs to hold 717. NVIDIA could drop a little bit more. Be a strong buy at 116. CCL Got a little volatility today. Earnings came out. Tesla double top. Intel, a little pullback on Friday night, so that doesn't hold gains very well. MU had that big pump last week. I'm looking for 50% pullback. PLTR, we're at support, but I don't know. They were pumping Uber. That didn't work out too well. Coin can drop to 178.76. Looks like QQQ broke resistance. We can see a double bottom on the SPY, high or low, maybe at the shoulder. 570. I don't think the QQQ will gap up, but we'll see here. Maybe an inverse head and shoulders on it also. Hope everybody had a great weekend. I got a lot of work done yesterday and Saturday, so Apple's got a little bit of action going on up and down. Good morning, room. Good morning. A lot of Israel stuff happened this weekend. I'm taking these leaders out, man. I'd hate to have that job. Especially that guy, I mean, that one in the Hezbollah guy thought he had it made hiding down there in a big old cave. Under people, civilians, cowards. What kind of men would hide under a woman's skirt? I sure in hell wouldn't. In fact, it makes me more mad. Punks. So we pulled back to the 50. We're already off to a slow start here. Might have to, I don't want to ditch this thing, but might have to. Because this thing's just slowing down my computer. I'll get rid of it for now.
Investing. 1 p.m. Eastern, only on the Schwab Network.
Much better. We got a breakout on Apple. Okay, SPX breaks resistance. We'll go higher here. Pretty good little pullback. $57.29.78. SPY We broke that real fast. And then these people could jump in this trade are scalpers only right now. I noticed that dip on AMD this morning. We got a double bottom on Meta. Little volume spike on about China. Bob's pulling back. K-Web's pulling back. These stocks had too big of a run. Too big, way too big, too fast. China. Merritt's at down 86 cents. CLSK down 64. And JP Morgan down 450. So it's getting close. SMCI up $1, $2. $9.71. Coin's got a double bottom at 180. A little bit lower at 179.50. Well, they try to bring this up every morning. SPY. I need to put a Q-tip in my ear. Don't let me have my platforms up. God darn it. Oh, there goes your spike. October 1st. The China stocks I'm watching is BABA, PDD, K-Web, and JD. I don't want to get overblown on them. I was looking at the 568 put at 106, and it's at 1013 now, 112. On a SPY. IWM broke out. Today's the 30th. SPX is still bearish. It's established a resistance now. I think I'm gonna go in there and make me some. The hardest part about my new diet is I just love to eat. I feel full, but this PX, it's kind of quiet right now. I'm watching the SPX here. We're coming back to retest the old resistance. 57.29, 78. That was the old one, but this could be the new one right here. We've got the VWAP on the SPY. I guess I could use that. $568 would have been a good scout. Okay, we're at the VWAP. It was just triggered again.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street.
Where is the heart of Wall Street? I thought it was New York. Baby. Turn on my YouTube yet. Robotaxi 1010 Tesla. Good morning, Mustang, Mannequin, Parge. Turn on my YouTube yet. Luna. $57.50 calls on SPX. How long has it been? Yeah, I'll wait. I'll try to wait here before I go and make my burrito. The old Jim would go in there and grab a couple chips or got an inverted hammer. So with this run that Tesla's had, it could be sell into the news kind of situation coming up, but we probably get all, and we got cars, the numbers for the cars are coming out this week. And we've already been told they're up in China. And with this stimulus package, now we have a new high. Not a new high, but a new high. And I see where support could be, and it looks like we landed right on it. Perfectly. Yep, we sure did. So that can retest. And then we got Nile. Did I add Nile to my list? I think I did, yep. Okay, Nile's coming close to support. 717. This also had a big spike. I gotta get me a clipper for my nose hairs. Encourage people to have weird weddings. It's like they're putting their girls out there to say, hey, I'm next. Pick me. I'm looking for the SPY to come back and hit the 200. I got 570 for solid support. October 1st. And if we get a knife, this here 572s will be in play. So October 1st, 572s. Not in them yet. IWM really looking good today. We got a flag and ascending triangle on the QQQs. I'll go in there and get my water ready and have a jasmine tea or a coffee. How was that coffee? K-Web double top. We got JD at the 200. We got a triple top on PDD. And Baba's at the double top. So I think they're kind of overextended, but we'll see here. We're definitely back at resistance levels. I'm going to look at the shorten of the K-Web. K-Web's had a real good run. Come on, you freak. October 4th, the 36 strike. Got a little spread on it. I didn't want to see that. Yeah, they got a little spread. It was just now at 110, now it's at 113. I always like to see that spread tighten up, but it's got an 8-cent spread between the bid and the ask, which means it's very volatile. Now the calls are a little bit tighter, but not much. I'll show you what I mean by spread. When the bid and the ask, it was 8, now it's 5. But I'd go down on that one. So 2 weeks it's gone up. See how much it's gone up? $10. This is when your tape watching skills come in handy. And Baba broke that 100, and that's been a long time. Very tempting to go for it. It just jumped to 104. Tailweb puts. Nope. October 4th. $36 on the strike. If it goes below the 9, I'll jump in it. Or I can take the risk now and go in small. Ah, hey, hey. I'm going to go in there and oh, here we go. Getting to my price right now. Can it give me 104? Give me 104. Give it to me. If we get a little bit more spike, I can get in at 104. What's Tesla? I'm going to put Tesla over here so I can watch it. Okay, SPY's closing in on the 200 here. Let me get my SPY ready. We can go lower. I mean, I got 569.65 for this baby. Good morning, Carlox. EC calls, huh? Never heard of that. Well, this strike should pull some of these stocks back that have had this notorious run. U.S. Delt Helpers. Yeah, what's up? Don't tell me I'm starting to get these scam calls. I have no debt. It's got bad since this AI. I can't find anything to play yet. Kind of at a standstill. Got a flag on SPY or SPX. So we'll know something here soon what's going to go down. Oh, look at that. Pretty Girls, Air Shocks, Big Tires, and CB Radio. And don't forget about the 8 tracks. And then came disco. You kids don't know what it was like back then. It was fun. Boy, did we have fun. We didn't drug the chicks back then, like Diddy did. We didn't have to. $5 billion a day. Whoa, that's a lot of money. That could put us in a recession with the debt we spend. I got into debating myself of cold water or warm water, or lukewarm, or whatever warm, room temperature water. What's better to drink? I've been drinking refrigerated cold water for years. Spy back at the VWAP. Just not wanting to do much here. We're going to know any second what's going to go down here on Sesame Street. It's not as plain and simple on the SPY as it is the SPX. Where's the SPX? It's definitely a flag. I triggered the 200 SMA a bit ago, 9 minutes ago, so I'm gonna wait. If anybody knows for sure what's better to drink, cold water or room temperature, let me know. Private message me. Okay, we're going to know any second. Where's my SPX? It's K-Web dipped a little bit. Could have got that at 110. Pretty stag. Puts on DIA, Dow Jones. Pretty flat right now. Above its Tubus, and trim tree. Not much going on here. So I'm going to go in there and turn that. Oh, here we go. Double bottom. 1, 2, 3 bits. The 5745s or the 5740s. I'm looking at the 5740s. I gotta pay quarterly taxes, doo-dah. Doo-dah, who wants to pay my quarterly taxes? Has anybody got $5,000 I can borrow? I just don't know. This strike's kind of got me going to be a bear. But I think we could scalp this for a few bucks. $5.50.
Danger, danger, Will Robinson.
Yes, danger. Spy's at the 200 also. It's just a perfect excuse to kind of stall out because we've had such a great run and we're still not mentioning much about the election. I mean, I've been through a lot of these
That does
elections.
not compute.
Yep, I've been through a lot of these election periods where there's always a pullback. Especially during that Hillary one. They thought she was going to win. Trump won, bam, we got tanked. And then he came right back. Damn it, I should have got them. I knew it. Now, 550 was on my finger. The 5740s. So I'd be in and out of this by now. At least sold one of them. Zippity doo dah, zippity day. Just uncertain. And the spy's under the 200. What's China doing? China's got a double bottom on Baba. Double bottom on JD. And a head and shoulders on PDD and K-Web. This is a descending flag, or it could be a fallen wedge. Heard J-Lo was a slut this weekend. Never did have much respect for that girl. The head of the Longshoremen Union insists that the additional to pay raises to be guaranteed. No, oh boy. I sent emails out to all my businesses and told them, man, I can't take it. I got to have at least 15 to 20% raise because this inflation's not coming down, and I'm making less money than I was 4 years ago. So vote Trump. So that's what I told every one of them. If they don't like it, too bad. Because it can get a lot worse. Well, we didn't hold support. Well, let's see here. Danger. So on the spy.
Danger, danger, Will Robinson.
Yes.
Danger, danger, Will Robinson.
Chicago PMI came out. It was up. U.S. officials confirm Israel raids inside of Lebanon. So they're still at it over there. They'll be going to Russia here soon asking for help. We have 3 black crows on SPX, and I have a solid at 569.65 for the SPY if we don't hold this 200, and the 570 is the first support, so we could drop 40 cents pretty easily. What's my excuse for missing Nile move? I wasn't watching it. GME popped. I actually called Nile out under 5. Way before all this action happened, but I didn't take the trade. I think it was Tesla's my excuse. I was all over Tesla. And I love Asian people. I love them so much. My first girl I ever kissed was Asian.
It's all fake news. It's phony stuff. It didn't happen.
Well, I have to take that back. I think my mom's best friend was the first girl I ever kissed. Damn it, these are at 6:20 now. Could have been Miss Johnson in 3rd grade. She might have been my first one. So it could be a little scalper day today. If we break the 50, we could run this up to the 200. The SPX. If we break the VWAP, we could probably take it to each one of these levels here. On the SPY. 1, 2, and 3. Okay. It's dead. Go, baby. $6. SPX scalping the September 30th strike 57.40 at $6. $6.50, $6.40. Don't do it. I'm gonna get my coffee started. Damn, I smell good today. $6.20, come on, don't do it. I'll stop out of this sucker. I ain't playing no games. Could have added 1 right there. We're above the VWAP on the SPY. SPY broke VWAP. I don't know what tree fork is. I have to look that up. Boom, baby. 760. Bam, out, 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 out. $7.90. Okay, I'm off to the beat. Oh, I didn't want to remove that. Now you can probably get a put. Okay, I mean, that's pretty good. That's patience. I mean, that was beautiful trade today. I used the SPY as a once we broke the 200 on the SPY, I more or less wasn't 100, never 100% sure, but I was 100% to get into the trade. So I'm quite impressed. I waited and waited and waited, counted to 3, and then we dipped down below it, and I said, okay. Then that one candle came back strong, and I said, this has got to be good. And then we stayed above that flag. See, that's a decent, it's hard to say what kind of flag it is, but it's definitely a 1, 2, 3 descending, triple bottom, and then made number 4. And I wanted to make a little bit more. And we just now come back to the VWAP, so it's talking to us. I'm gonna go in there and get my lunch started. Get that. I don't feel hungry, but I gotta get this meal in before I start my fast. That or just go in there and get a sugar coffee. You know, I'm almost convinced that I'm gonna stop drinking coffee, but I don't want to.
Fascinating.
Yep. I've been a coffee drinker for ever since I was 8 years old. Let's see what old Anthony has to say today. Oh, Jenny's back.
$136 price target on Alibaba. The median is 111, so only about 70 cents away from where it's currently trading. Maybe, yeah, actually 30 cents now, and from where it's currently trading. Obviously, other analysts might play catch up as well, but what are the levels that stick out to you after this impressive run higher for Alibaba?
Kind of reminds you of NVIDIA when every analysts continue to raise their price targets higher and higher here. So, look, I mean, the stock's doing a really good job, obviously, over the last week and a half. But we did have a base.
It's done too good of a job, baby.
Now, instead of looking at a one-year daily chart, we're looking at a 3-year weekly to get a little bit of a better perspective. The current area, or the first area of resistance, 103, is something that we've already went through.
This is the weekly.
Utilize that as
the guy's smart.
Area before trying to push higher. Next area of resistance is going to be $120. That's going to be the 200-week moving average as well. So that would be the first test in a very long time of that level. And then that's where it gets a little bit thin, kind of moving higher in that 130, 140 range. Now, the RSI is completely overbought at this point, so I would suspect maybe a pullback in the coming weeks. And I would also look at that MACD, which actually did just have a pretty nice bull.
Him and I are on the same page.
26 EMA, and then crossing that zero line here. Caroline, this is a hard one to be able to fade at this point. I mean, obviously, there's a lot of enthusiasm taking place. A lot of new
support at 102.82.
I would look at that 120 area as the big area of resistance.
Yeah.
Where the stock might see some headwinds and maybe retrace back lower here.
Yep.
But if we do not get any bad information coming out of China and the stimulus narrative stays intact, this one continues to be a little bit of a beneficiary of that.
Yeah, certainly so, and up about more than 3% right now. Kevin, Jenny, also known as Kenny, thank you both so much. All right, up next, the Market Meetup panel will discuss the action so far today and look ahead to the key labor data later this week. That's next on Morning Trade Live. We'll be right back.
That is very obvious resistance right there. He's 100% right. Do. And we got a gap right here, so it could fall short of that fall short. In fact, I like that a lot. I'm gonna put an alert. I don't want that. I like that a lot. That support level, that bottom of that gap for support to stay bullish.
I'll be right back.
You'll be right back? Where are you going? Where are you heading? Swanson. Swanson, you got your mic on. Your boss just said you're going to be right back. I'll be right back, baby. You know, I was on open mic one time and I said, this guy made a call and he was the room monitor, and I said, F-U-C-K. And I was about got kicked out of the room.
Shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market.
Who is this Kevin Hickey?
On the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Morning Trade Live. It's market meetup time. Joining us for that is Alex Coffey, co-host of Next Gen Investing, and Joe Mazzola, Director of Trading Services at Charles Schwab. Joe and Alex, great to have you both here with us. Alex, let's start with you. Just want to get your sense on today's market action, in particular this turnaround that we're seeing in the Russell, because that seems to be where the action really is today.
Yeah, I think it starts with a turnaround in the bond market. The bond market had been weak the last few sessions, but a resilient treasury market continues to bounce back. You're seeing some of the life come back into small caps, I think, tied to that. But to me, I just continue to look at the S&P 500 as well. Seemingly every dip is scooped up almost quicker than the one before. The sustainability of the rally, though, as it stands right now, on the short-term basis, when you have the Russell 2000 as the leader and kind of worldwide, you have China being the leader. To me, that calls into question the sustainability. You really need the U.S., I think, out in front. That's been the recipe for this outperformance that we've seen the last few years. I'll believe the staying power of the rally overseas when I see it actually last more than a few weeks.
Joe, how are you looking at that Chinese stimulus as a means for a catalyst for the U.S. market? and beyond, because Kevin Hinks pointed out it wasn't really translating into strength here or also in Europe. So how would you look at that?
I mean, I think last week you could make a case that tech stocks were buoyed by some of that stimulus in China, especially given the fact, I mean, look, the Chinese index is up about 20% in a week. Yeah,
So?
I would agree that that's probably not sustainable on a long-term basis, but even today you're seeing some of that, a little bit of that follow through. It might not be broadening out into the U.S. markets, but I think it gave a little bit of rocket fuel to what you saw, particularly kind of midweek, at the beginning of the week, midweek last week. Didn't carry forward into the end of the week, as Alex mentioned, as you saw kind of
More coffee?
peter out. But, look, when you look at the September that the equity markets have had,
Bob Barker, he went to college here, Springfield, Missouri, at Drury College. I love Bob Barker. I frequently watch that show.
you're starting to already.
And I got real good. And that job and watching that show led me to be an inventory specialist.
Is basically around the 80th percentile, meaning that you haven't seen hedgers, come into the market with the same type of activity in the last year to the same extent that we're seeing over the last couple of weeks, really showing that whether it's the non-farm payrolls on Friday, whether it's kind of some of the PMI data that we're going to get this week, or it could even just be maybe a little bit of concern with earnings starting in the next 2 weeks. Hedgers are stepping in, trying to maybe lock in some of those gains.
Concern.
So, Joe, does that mean we could see some volatility in
Yes.
October? Absolutely. There's another thing that's happening today.
Yeah.
And that is the JP Morgan Hedged Equity Index, which is basically a big collar that is put on the S&P 500 quarterly. Well, as we know, today's the end of the third quarter. Those positions are rolling. So the 5750 calls, which is kind of the upside of that collar, basically what happens is, the funds, that index that sells those calls is a way to buy some downside puts. So if the index is selling that calls, that means the market makers are long those calls. And what's been happening as we've been around, vacillating around this level, is when the market makers are long those calls, they hedge the gamma. So they sell the futures when it gets above and they buy the futures when it gets below. That kind of tightens the range. Well, with those calls expiring today, and they're going to be rolling today later on, you could see more volatility throughout the course of the month.
Okay, so Alex,
I still can't get my mind off that guy last week that told me that the market, that he more or less called me an idiot because I said we were a little frothy. And I've been talking about my strategy for over 10, 15 years about being in the now. There's traders out there that don't believe in being in the now. I mean, I traded with one guy that don't mean a damn thing. I mean, if you don't keep up on the news, the trends, then you're not a good trader. You can almost predict sometimes what's going to happen before it even happens. So I still can't get that. I blocked him because he upset me so much, and I kept thinking about it all weekend, and I still can't get it off my mind.
Is any real surprise there, but as we get closer to November, that's going to be a bigger question mark as to what happens in November. Do they skip a meeting? Do they do 50 in December? Do they do 25 in both? Do they do 50 in both? There's a lot of question marks still now going forward, but the one key answer is interest rates are moving lower. And whenever I look for investable or tradable opportunities, Caroline, I like to look for things that maybe perform well in several scenarios. So whether or not we got a hard landing or a soft landing over the last 6 months,
Tesla
because
knife.
we felt that the interest rate complex was moving lower, that's good for treasuries.
Jimmy
that's
said it.
Good for gold.
Sell under the
and
news.
It's also good for utilities. I heard you talking with one of your guests earlier on in the program. Utilities also has that fun sort of AI almost call option to it as well. So those have been three areas of the market that have been doing really well in this current regime. And so far, it seems like that's all continuing.
But I think the big question is how much more can this market run on rate cuts? Because you could attribute the September gains to the 50 basis point cut as well, Joe. So I guess how much of that is priced in at these levels?
Well, just to kind of continue and expand on Alex's point, if you look at the sectors that are showing the strongest market breadth and kind of relative strength right now, 5 of the 11 GIC sectors right now are trading with 90% of their stocks above the 50-day moving average. A really good intermediate term indicator. That's utilities, real estate, materials, industrials, and consumer discretionary. So basically, yeah, I mean, you can see right there from the data that it is definitely an interest rate sensitive type of play that's happening in the markets, and a little bit of a bit of the cyclicals as well when you look at industrials and discretionaries.
But Alex, we talked about this earlier in the show with Kevin Hanks too. How important is tech involvement going to be for this market to continue to move higher, given this broadening out that we've been seeing? Tech hasn't necessarily been in all that much favor.
Yeah, if you're passively invested in something like the S&P 500 index that tracks that, or something of the like, or you're tied to the NASDAQ 100, is extremely important. But if you're a self-directed investor who kind of goes anywhere and invests more specifically into some of these different factors that we're talking about, you can avoid tech underperformance. But for the broad-based indices, I think it's paramount. It's really been the recipe over the last few years has been a concentrated mega cap rally. So it's going to take a lot of work from those other 490 names or whatever number we want to use to make up for any weakness that we see there. But it's not like Apple's struggling at 231.
No, and Apple, the best performer of the Mag 7 right now, up 1.6%. Otherwise, it's only Meta that's higher of the group. We'll leave it there. Alex and Joe, thank you both so much. And thank you for joining us on Morning Trade Live.
I really do.
With us because Trading 360 with Nicole Bettolini is coming up next. I'll see you back here on Market on Close.
You ever just want to tell someone that you love them? Caroline, I love you. I'll do anything to get you in my heart. And I don't want it to be material love. I want it to be the real love. I'll buy you a yacht. Just go out with me once. Okay, I'm watching Tesla. Dang, SPX is at 740. It's gaining mustard. Okay, Tesla. September the 4th. The 265 strike. At 520. $5.30. October the 4th. Strike. 265. 525. 5.25. A little early. With a tight stop. Okay. Break it. Might add one more. So I again made some more ground beef and liver. This time I didn't put as much liver in it. So right now it's lunchtime, Fat Cat's lunchtime. Come on, baby. Break. Blanket. They told me that no, it's wasn't going to happen, but it has. We need more. Okay, I'll be right back. What's this PI doing on here? Oh, it's China. Okay.
For his success. So I think he'll do everything he can to support the stock market and want to see it go up. If we have a Kamala Harris administration, I think that bodes extremely well for private investments, particularly infrastructure, as I mentioned, real estate in particular is the way to go. I think we're going to really hit some inflationary times 2-3 years out. It's time to start positioning.
Then the Fed will have to raise again.
That's right. That's right. Or not raise, and then we get into a hyperinflationary situation. I'm not sure they for political reasons, they will want to raise. And we all say that the Fed is not political. But at the end of the day, you have to be mindful of what's happening.
Do you think that a lot of financial advisors could be going more into sort of alternative investments or private equity somehow? How would you like to see financial advisors be working a little differently? We always just sort of thought of bonds and equities, and that was it, right? How has the landscape changed?
Well, look, bonds and equities, when you mention that, it's really in the context of public securities. And I think what we're seeing is the beginnings of a massive reallocation of capital from public securities to private securities. And I think we've hit that tipping point, as Malcolm Gladwell likes to say, there's a tipping point.
Right.
I think we're just about there. And I think we're going to see a reallocation into private investments because that is the core engine to our economy. Public companies, have gotten very large, but it's the medium-sized companies, most of whom are private. 7 times more private companies than public companies in the middle market space. And I think that's where people have to be thinking about investing.
How does a regular middle-class person understand how to do this? How do you do this?
Well, that's where their financial advisor comes in.
Yeah.
You've got a viewership of very sophisticated people, and their job is to educate their clients. And one of the things we're doing at Access Capital is helping advisors get up to speed on private investments. But we believe that is really in the best interest of clients' portfolios over the long term. They're living longer, for one thing, and there's a real risk that investors outlive their assets, particularly if we hit a hyperinflationary environment over the next 5-10 years.
We've sort of left SPACs behind to a certain extent, but IPOs, M&A activity, do you foresee that picking up?
Yes, but at the margins. I mean, IPOs are not what they used to be. So many private companies can continue to remain private because the liquidity exists today that didn't exist even 5 years ago in the private markets, and it's only getting better and better with secondaries. The secondaries market for private investments is fundamentally altering the capital markets because companies no longer need to go public. They can get liquidity for their investors, through secondary trades.
How about investing abroad? Do you like emerging markets?
I do.
Do you like certain parts of, I shouldn't even say emerging markets, I shouldn't lead the witness.
Yeah.
What do you like abroad?
Well, look, I think of it from an overall asset allocation point of view. The reality is if you have 100% of your equity allocation in U.S. securities, whether they be public or private, you're missing two-thirds to three-quarters of the opportunity around the world. So I would take a very diversified approach. Having said that, not a huge fan of Europe. Big fan of Southeast Asia, big fan of Australia. But I think one needs to create a balanced portfolio and invest over the long term. And that almost requires an allocation to international investments.
Yeah, yeah. And what about commodities? When you said commodities, was that for both candidates or was that more of a Harris play?
Well, look, I think there's going to be the way I look at it is the party's going to come to an end. With Kamala Harris, it'll come to end at midnight. With Trump, it'll come to end at 2 in the morning. But it's going to come to an end. And when that happens, and by the way, let me put some dates on that. I think for Trump, we're going to have 2 or 3 years of solid performance in the market. As his administration winds down, I think all bets are off. So, look, I think commodities, gold.
I like that.
We've all seen what's happened to gold.
This guy's a good thinker.
I think that's just going to continue. I think it lost its luster for the better part of 30 years, and I think there's a fundamental reevaluation of gold right now.
People are watching, obviously, copper as we saw rates coming down. That was sort of on people's radar. Silver, do you like those as well, or not so much?
I like silver because it really represents one, a store of value, no differently than gold, but it's also a commodity that's in regular use.
Yeah.
So I happen to be a big fan of silver. And I think the disparity between silver and gold is pretty wide right now. There's a lot of room for silver to catch up.
Because silver's way behind. I mean, gold is at these records. And as you say, store of value, it makes me think of Bitcoin. That's a conversation I've had many, many times. It's in the 63,000 range now. Is that something are you interested in crypto or digital assets, or not so much? And if not, why not?
Well, I view it from a national security point of view. First of all, I think we have to maintain the hegemony of the U.S. dollar, and anything that's a threat to that, I'd be in favor of trying to put a stop to. And I just fundamentally, as an American, I don't like the idea of anything attacking the U.S. dollar. We live a great life here in the United States because of the hegemony of the U.S. dollar. So I'm fundamentally opposed to Bitcoin. Having said that, no question, people view it as a store of value and as an inflation hedge.
Yeah, but I understand what you're saying about the dollar as more and more folks are using that as the way to pay.
That's right.
Okay. Joe DeGrosso, thank you so much for being here, CEO at Access Capital. Thank you. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Kevin Green will take us through the technicals. Don Kaufman will take us through the trades. Toll Brothers, Silver, Tesla. Next.
Blanket. 1, 2, 1, 2, 3. Break it. Ha 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 ha. 550. Break it. Do. Da-dun, dun, dun, dun.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So glad you're with us. It's time for the Big Three.
I love you.
3 stocks, 3 charts, 3 trades. Kevin Green is here, and he'll go through those charts for us. And we have Don Kaufman, co-founder of Theo Trade. Good to see you both on this Monday. Don, it's the last market day of the month. I know we're going to talk about Toll Brothers, but just a quick market thought, please.
Yeah, one of the things I think a lot of traders, a lot of investors alike are not necessarily looking at right now is volatility, which is actually coming up in what's been a very slow last week of trade. So we're coming into the end of the quarter. Markets feel incredibly slow, but take a look at something like volatility futures and you'll see they're in a fairly wild backwardation, which is indicative of risk is here, risk is now, risk is imminent. And again, with all of the economic news breaking later this week, I think you have to anticipate things are going to get a little crazy in this market.
Okay. We did have the VIX just creep slightly higher to that 16 level, though it's somewhat flat at this moment. But there's the VIX on there that says 19. So it depends what we're looking at. But the big picture is, are people going to get nervous? And so let's take a look at Toll Brothers, where you're feeling a little bearish today. Why is that?
Yeah, so what we're going to look at in a moment are some of the technicals in here. And the technicals, I would have to agree, is just, it's abundantly bullish, right? Meanwhile, I'm going to be taking a bearish stance inside of Toll Brothers. Now, my bearish stance in Toll Brothers, it's not today, it's not tomorrow. I'm going to give myself plenty of time. I'm going all the way out to the December 20th expiration. And I'm doing that simply because, look, the Fed is cutting right now. 50 basis points, I think, is kind of a stark warning. The economy could possibly be slowing down. We have economic data ahead of us. If that economic data this week supports anything in terms of an economic slowdown, I think you have to see some of the home builders pull back quite substantially. So I am going to go out to the December 20th expiration. I'm going to be buying the 145 puts, selling the 140 puts, just a $5 wide put spread for a $1.50 debit.
Yeah, so you're expecting a pullback, a slowdown for some of these names. Kevin Green, good morning to you. Some of your thoughts on this chart, please.
Well, Don's right. I mean, if you're looking at the overall trend, Toll Brothers has been to the upside here, but I could actually make a little bit of a case that maybe we have a consolidation coming up. Maybe not a significant pullback, but a consolidation. So when you're looking at the one-year daily chart, a couple of things really stand out to me. The stock usually actually does break out for about 2 months and then consolidates for about 2.5 to 3 months, and we just have not seen that consolidation as of late yet. And we also have this kind of formation where the primary trend line from those highs is starting to converge with that lower trend line here, and we're coming up to a little bit of an apex where we could either see a breakout or a breakdown. And when you're talking about a breakout, it just seems like the fundamentals as far as from a multiple standpoint might be a little bit stretched. So I'm looking at the 147 area as the immediate area of support. That is the 20-day moving average, as well as coinciding with that lower trend line. And then the next area of support, that 120 level, 187, which is the 200-day moving average. Last but not least, we are actually seeing a bearish divergence between the RSI, meaning the RSI is making lower highs while the stock itself is continuing to move higher. And we also have the MACD looking like it's losing steam here a little bit, still testing an uptrend, but once again, it does appear that it is going to cross that 12 EMA below the 26, even though it is above the zero line. I would say follow the trend. Trend is your friend, but you can make a case for consolidation in the near term, and Don's trade really tries to capitalize on that.
Understood. I mean, I will add that Wells Fargo just recently on the 27th put an overweight, they have an overweight rating. They did raise their target up to 170, so they were seeing the upside potential. Don, final quick thought.
Yeah, the aspect that really needs to be thought of in here is that we're seeing profit warnings all over the place. I'm going to talk a little bit more about China in a few moments, but profit warnings in retail and so forth, and yet we have home builders basically at all-time highs. And again, you have to kind of go back and ask yourself, why is the Fed actually cutting? If you think it's simply to save a degree of employment, that's fine. But again, that economic data later this week is actually going to tell a much deeper story on that front.
All right, so everybody's waiting for silver to hit all-time highs. It did hit a recent high in early summer, but gold has been pushing up against the highs. But you think, just like our prior guest, Joe DeGrosso was saying, he liked silver. You like silver as well?
Yeah, I still think we're in somewhat of an inflationary environment, and as such, we're going to see silver not only play catch-up, which it has been doing with gold to the upside, but silver breaking above the 30 level. This trade is nothing more, nothing less than silver just popping above kind of that 30 level. When I'm saying the 30 level, I'm talking specifically about the ETF SLV. In this case, I'm just going to go out to the October 18th expiration, so it's relatively shorter term. I'm going to be buying a 29 call, selling a 31 call. So just a $2 wide spread, looking for a pop above the 30 level. This trade, what's nice about it, it's a relatively inexpensive, a cheap shot to the upside. It's a 55-cent debit, looking for a breakout in SLV to the upside, largely predicated on the fact that, again, we're nicely poised. We're sitting in and around that 28, 29 level. All engines are going. Again, with the economic data later this week, you may get that pop to the upside, especially if you get a breakdown of the dollar.
Breakdown.
And, right after the rate cut, people were running to silver, to your point. So you're watching that 30 level on the ETF. Let's see what Kevin has to say. Kevin?
Well, silver's had a really nice run over the last, say, 3 months, 4 months, Nicole, and we probably should not expect that that's going to stop anytime soon here. When you're looking at the chart, it does actually like to consolidate before having a breakout, and we are pretty much in that breakout pattern right now. And one thing that I'm just kind of noting at point B, which is going to be on that 1-year daily chart for the SLV, is going to be kind of this cup and handle pattern that's taking place. Basically, we hit the highs of 29.56. We came back, consolidated a little bit, tried to, and we are right now to break through that 29.5 level. But if we do not, and we come back down at around $27, this still is a bullish formation where we can then break that neckline, that 29.50 area, and then try to get up to those levels that Don was kind of talking about. If not, and we break below that 20-day moving average, we break below $27, then you're looking at $24 as an area of support. Anything below that, we kind of have a volume gap there, and that's where you see maybe a full-on reversible. Right now, this is actually very bullish. RSI is making relatively higher highs and higher lows, which is another bull sign. The only thing that I get a little bit concerned about is MACD, where it does look like it is hinging, where the 12 can cross below the 26, which is bearish. And if you're kind of looking at silver in the past, it has been able to respect not only the RSI levels of overbought and oversold, but also MACD crosses. So that's just one area to keep your eye out on, but overall, this is still bullish.
Yeah. Okay. Very interesting. Let's see. Final quick thought here. Don Kaufman.
Yeah, as I was saying a moment ago, it's the dollar that's really going to catch my eye regarding silver breaking to the upside, and that is I would look for more dollar weakness in the very near future. We're coming right up against the 100 level inside of the dollar, so if the dollar starts to break down, obviously that's going to force some of our metals a little bit higher. Again, in this case, still rather bullish in SLV here in the very near term.
Next up, we're taking a look at Tesla, where a lot of folks have been noting and you have a bearish trade here, and that Tesla's been obviously ramping up the 1010 robo-taxi event. Then we'll have earnings. The deliveries were looking pretty good, but you're hearing from a lot of the automakers with trouble. Stellantis with a profit warning. GM and Ford have been under pressure.
I get out here with 580.
Have talked about China being a little bit of a weaker market, and can Tesla really power through? Is the robo-taxi event or earnings going to help, or is that all priced in? So tell me a little bit about your thoughts on where Tesla's headed. It's at $259 today.
Yeah, Nicole, you're front running me on all of this. You're spot on with that because that's exactly what I'm looking at. In fact, when I was thinking about Toll Brothers, I was thinking about this. You have China that is under massive stimulus right now. You're actually hearing from like the German economy that's incredibly slow or flat. You're actually hearing from all the major car manufacturers that a slowdown isn't just imminent. Several have actually warned twice in the last several months, whether it's Ford, whether it's GM, even Aston Martin today came out with weaker numbers. So across the board, we are seeing a slowdown. Now look, Tesla, I know it's much more than just a car manufacturing company. I know that the robotaxi is coming out, but the stock has been in an absolute tear lately. And look, I'm not one who likes to take the other side of Tesla, but in this particular case, I think it warrants it. I think we're actually looking for a very short-term, though, pullback in here. In this case, when I say short-term, what is right in front of us. Before the earnings, okay, the robotaxi announcement coming out, I'm aware of it, but I'm actually going to take an October 11th position, which is, again, very short term. I'm going to be buying the 250 puts, selling the 245 puts. Just a nice, compact $5 wide put spread done for a $2.10 debit. Not looking for a huge pullback here, just somewhat of a pullback against what has been a wild rip to the upside. Eventually, people are going to realize, yeah, they're still in the car manufacturing business and they have huge exposure to China. At what point is Tesla actually going to say that they are feeling that exposure at this time?
Yeah. Let's see
China.
what Kevin has to say about
China.
Yeah, so Nicole, perspective is everything. So we're going to look at a 3-year weekly chart for Tesla. We know that, 2 years ago we were in a downtrend.
Come on, baby.
We had
What's a little bit more?
A channel line, a descending channel that was taking place. And then basically by the end of 2023, we tried to test and get out of that channel, tried to retest that 290-ish area, come back and try to retest 300. But we had a failed breakout, and that failed breakout then resulted in another descending channel or bearish channel to the downside that lasted for a considerable amount of time. We are trying to break out of that now. So I think the first area of resistance is going to be $290. The next one is going to be $300. But what I'm just keeping my eye out on, if we are actually having the same type of reaction that we saw in 2023, around June of 2023, are we going to have a failed breakout in another channel to the downside, or are we going to have a rip higher? Those two areas of resistance are going to be the key ones for me. If you're looking at the RSI, kind of in a wedge pattern here, making lower highs, but also making higher lows. So we are making, we're pretty much coming up to the apex here the next couple of weeks. MACD is actually bullish right now. It's a 50-50 decision here. Near-term trend is bullish, but once again, those areas of resistance have been key rejection levels for this stock and has put the stock in very bearish consolidations for 6-7 months at a time here, which is unfortunate.
Yeah. And John, I don't know if you want to add something on Tesla, but I would love a thought on.
Yeah, get somebody on there that's positive about it.
Port shutdown.
Screw these bears.
Today, JP Morgan is saying it'll be $4.5 billion even. That's the top side per day. An economic impact. You're talking about pharma, retail, auto. I mean, every sector. Any thoughts on this?
Yeah, no, absolutely. Look, this is not going to be good across the board, though. I have to think that also following the storm that hit, this is incredibly inflationary. It's actually one of the reasons I'm looking for any type of inflation hedges right now inside of my portfolio. I think it's inflationary in the very near term and incredibly devastating if this lasts more than 2 or 3 weeks. For about approximately every week that those ports are shut down, the backlog is probably going to be about a month. So we are looking at massive delays. And again, coming into the holiday season, I know that a lot of people are receiving products and so forth from China, which is not necessarily going to be impacted, but anything coming from Europe is. And you're going to be looking at a lot of car manufacturers that are going to feel some pain in the very near term.
Yeah, I mean, they're saying like it could help certain companies, but obviously could put this pressure, this economic impact pressure. I mean, would you be selling the market if this goes on daily?
Man, that's good for beef litter.
If each day, let's say you're in the third day of this.
You know, it's funny you say that because I'm less inclined to sell the entire marketplace. This is going to be very sector specific. Because is this going to impact, NVIDIA? Absolutely not. And right now, tech owns this marketplace, hands down. $3 trillion market caps are what own this marketplace. You're going to have to be incredibly sector specific. I would look at retail specifically. Things like Best Buy could actually be interesting shorts in the very near term.
Okay. Thank you for that. Don Kaufman, I threw you a curveball, but it was on my mind all weekend, and we didn't really talk that much about it. Thank you. Don Kaufman, Kevin Green, good to see you both. Thank you so much for the big three today. Coming up next, we're going to spotlight the media space. You have DirecTV agreeing to buy Dish Network. I want to look at the streaming.
Little bit more, baby.
The landscape
Blake
of
it.
that group. We'll be right back.
Now this is my resistance. So if you took Tesla, get out, take profit. Because it's been working like clockwork. 200 SMA. I should have added on. And this dip, but I didn't. Boom, 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 boom.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get.
Tempting to have another one of them.
It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time to spotlight the media space. Jeff Kagan's with us, wireless and telecom industry analyst, columnist with RCR Wireless. Thank you for being with us. It's amazing because the talk about DirecTV with Dish has been going on for probably 2 decades. And now it sort of comes to fruition for $1, but they're assuming a heck of a lot of debt. Why now? What do you think about this?
Well, I like to pull the camera back and take a longer term historical perspective of the changes that are happening. These changes have been impacting and affecting the telecommunications industry for decades already. And the pay TV industry, it used to be cable TV was dominant. Used to be telephone was dominant until about the year 2000. That's when things started to go haywire. And that's when, today, if you look at the cable television companies, the smaller cable TV companies have less than 10% market share of pay TV customers. They're getting out of pay TV altogether. And the larger companies, the Comcast Xfinity and the Charter Spectrum and the Altice, they have more market share, but they're still declining as well. So they have to all figure out new paths, new ways. And the telephone companies like AT&T and like Verizon both have the same problems. They're losing telephone customers. Wireless is growing, but now it's not growing as quickly. The wireless industry has grown in ebbs and flows over the course of the past several decades. But the past decade has really been pretty slow with growth. And that's when AT&T got out of the traditional wireless, well, they didn't get out of this wireless space, but they added the entertainment space. They acquired DirecTV. They acquired Time Warner. They acquired Warner Brothers Studio. They acquired CNN. They started getting into this entertainment space, and it looked crazy. I remember when they acquired DirecTV. It was about 9 years ago. And that was the beginning. That was when we all thought that these industries were still normal industries and they were still on the same track. They're no longer on that track. Today, streaming wars and streaming is taking over. So, Comcast and Charter and Altice and Cox and all the rest of them have to figure out new ways to replace the income that they're getting from those customers. That's why we're seeing, on the wireless side with AT&T, they're getting, and with Verizon and with T-Mobile, they're now looking at FWA, fixed wireless access, which lets them offer wireless broadband. Well, today the broadband business is the main service from the cable TV industry. Cable TV's main service is not cable TV; it's broadband. So all of a sudden, there's a big threat to that. So now the next step with the broadband side for the cable television is DOCSIS, and it's wireless DOCSIS. It's letting them have, and this is a brand new technology. FWA is brand new, but this wireless DOCSIS. I was at a show this week that, and I met with a couple of CEOs from a couple of companies that are offering it. So this industry has changed so dramatically in the past 9 years, and it's going to continue to change over the next 10 years. So we're just in the middle of the whirlwind of change.
Look, I mean, EchoStar, the stock surged nearly 10% on Friday, and now the ticker symbol being SATS, S-A-T-S, is down 11.5% today. EchoStar owns Dish, and so you mentioned AT&T, and they had to agree to sell off 70% of DirecTV to make this all sort of happen. Many moving parts. It seems so difficult and complex and intertwined, so different from that of Disney Plus and Netflix. Are we done with this? Because it's so intertwined.
We're not done. We're just in the middle of it. They always say you don't want to look at and see how a product is made, how a cook would create his dish, and it's just a mess. And right now we're in the middle of this mess, and it's going to continue to be a mess as everything continues to change, and it's going to continue to change even in new ways that we're not thinking about today. We count on these CEOs to know the direction. We count on the CEOs to know what tomorrow looks like. Even they don't know what tomorrow looks like. If they knew what tomorrow looked like, AT&T wouldn't have bought DirecTV. They wouldn't have bought Time Warner. But they didn't know what tomorrow looked like. They bought it and they made a mistake.
Yeah. Look, a couple of decades ago, there was a lot of talk, the possible combination. I told you, Toby, right? From 2 decades ago. And at that time, in 2002, the Federal Communications Commission blocked the proposal, but MoffettNathanson now saying it's hard to imagine that the regulators would in fact block the deal now because the synergies may be less likely and somewhat more limited than people may imagine. Are they going to get the regulatory thumbs up?
It's hard to say what's going to happen because nobody really knows.
I know, you dumbass.
Time for that, so I hope it happens. But we have to realize that the average person, the average investor, the average regulator doesn't really understand what's happening. Even the experts don't really understand what's happening because we can't see into tomorrow. We don't know the direction. Multiple different directions, and they can all be built out and they can all be successful. The question is, which direction are we going to head in? And do the regulators, which is what you're talking about now, know? They don't know. And they'll never know. And
I know.
Never know. So we're trying to wrap a rope around this and control this blazing stallion. But it's
I will teach you
of a mess. It's in the middle of a transformational period, which is going to last several decades. We're just in the middle of it, so don't think it's over. We still have to deal with it for the next many years to come.
We've shown so many of the streamers as you've been talking. I was just reading about Paramount actually parting ways with Nielsen over the audience measurement, over a pricing conflict. But Paramount obviously has had the deals of its own. What's best position these days, and what may be sort of really, gasping for air? the best.
Well, the things that are the things that are gasping for air are yesterday's technologies. If you look at the telephone, we look at the cable television, they're all dropping market share like crazy, faster than they can hang on to it. And that's going away. So, for instance, if you still have a plain old cable TV, you better get used to streaming. You better get used to new technology, because it's going to be, eventually, it's going to be pulled. You're not going to be able to have it anymore. New technologies like streaming services can win. Will they? Who knows? Because
I know.
They have to make the right moves. They have to welcome the customers, and the marketplace has to be healthy in order for...
See, me and this guy could have a real good argument back and forth. He's one of them guys that can't predict a trade. He's not in the now. So I don't want him on here anymore. Titellini. I want you to make sure he never appears his face again. And quit smiling.
Bullish case for Autodesk. We'll be right back.
Do-do-do. We are not flat. The Dow is down, like Mike said. Do-do-do-do. Do. Did anybody see my Tesla chart? I'm going to type in nailed it. Now I've had my burrito with beef liver. And I broke the carnivore rule, and I bought me some light sour cream to put on it. And I put a little mustard on it. I think I can deal with that. Because beef liver is kind of hard to... Anybody in here ever ate it? Beef liver? Mustang, you ever had beef liver? Be honest. Meta, do you see where support is? You got to look for a pivot point, 569.95, but you don't really want it to break. Oh, you have? Growing up, I was force-fed that shit. You eat it, and you won't leave the table until you eat it all. My mom, she did not know how to cook. I said, Mom, are you going to burn it for me? I'll eat it if you burn it. To crisp. Turn it into a potato chip. I haven't had beef liver in 53 years. 54 years. Now I've ate it 2 weeks straight. I'm doing an experiment on my body. The landlord knocked on the door and says, Jim, what the hell are you cooking? You're stinking the place up. Meta off the 63. Your lease says you can't cook beef liver. Okay. Nicole?
Normally a winning month, or at least of late. Any final thoughts about the month that was, or what you're looking forward to here?
Yeah, I do think that the market
I'm gonna go out and check my mailbox, and I'll be right
Nicole,
back.
Given all of the things that are still kind of hanging in the balance, from geopolitics to domestic politics to ultimately whether or not we get the soft landing or we get the hard landing, it does feel like the market is becoming increasingly confident to certain that there's going to be at least a soft landing for the economy, which I think is good. So to see China bounce back as well. But I heard one of our colleagues, Joe Mazzola, talking this morning, expecting some volatility to pick back up. We'll see if that does take place in the month of October, which is also seasonally a little bit more bumpy than some of the other months.
Okay, thank you for that, Alex Coffey. Great to see you. Appreciate it. Good look there at Autodesk and Example Trade.
Back to 6.
That's our disruptor. In the meantime, up next, our 360 round, the outlook for Apple after the iPhone 16 launch, rolling out of Apple's AI, Apple Intelligence. More details next.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime,
Damn it,
anywhere,
wrong
on
chart.
any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your
Wow.
portfolio with the Schwab Network.
Beef liver gave me the goosebumps.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m.
I love you,
Eastern.
Jenny.
only on the Schwab Network.
You have the best looking chicks on Schwab.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Keep reminding us.
Welcome back to Trading 360. It's time for our 360 round. We're looking at Apple. Of course, we had the big glow time event. The 16 is out and other products as well.
Oh,
But
what did I
thinking
just
about
miss
Apple
there?
Intelligence. What does this really mean for Apple and the demand?
Somebody spiked it up.
William Kerwin is with us, equity analyst at Morningstar, and Andrew Grimm, CEO
But that's
at
a
Jackson Square Capital. William,
controversial
so
candle right there.
you know, there's been somewhat of a pause on the 16 for the intelligence part. I think people thought maybe if they bought it, they would have Apple Intelligence on day one. But there are high hopes for a smarter Siri coming. Tell me a little bit more about this.
Yeah, thank you, Nicole. So it's important to know that the iPhone is
Lamb liver is better.
driver.
I'll give that a shot.
Half of their total revenues, and so as the iPhone goes, Apple's health will go, and we think Apple's stock will go. Now, what we've seen is that this delay of Apple Intelligence, which really is just for about a month, it's set to release sometime in October, has delayed some demand for the new iPhone 16, but we continue to expect that the unlocking of these new software features with AI and all the tools that come with it will drive a stronger growth cycle for the iPhone this year and continuing into next year, especially with that delay. So maybe a bit of a slower start, but our other expectations for a strong cycle here remain consistent.
Is it good enough? Is it okay that we have to wait for that, William? I mean, you know, is it enough?
Well, we think it is, and you know, the upside, or maybe the optimistic take to this, is that we're getting a lot of iPhone 16s in the hands of consumers even before this software rolls out. So you have more people, when it officially does roll out, that can use it on day one there. So it may have slowed the amount of people that wanted to get the 16 right when it released, but we'll see a large user base, and Apple always relies on that word of mouth to drive more demand for those units going forward.
All right, so it's enough, but just to be clear, I mean, you have 2 stars and a price target which is much lower than where it's currently trading. Is that right, William?
It is, and it really just comes down to
This is the end.
I think Apple is a fundamentally extremely strong company.
So
we have a wide
I'm going to give you an
rating
exit
on it,
idea
and we expect strong growth.
here on the video. I'm going to give you a little trade idea here. This is something that I've been working with. This is the 200 EMA that I have here in that spotted line, and then this is the 200 SMA. So I'm trying to come up with a strategy about the two. Which one do I prefer? Which sometimes it doesn't matter. Sometimes it does. So you got a snake. We're going to draw that in real fast. She pulled back to the 200. We got the 200 EMA. So I'm going to draw this trend line in here. This is the 200 EMA. So we came down and hit the 200 EMA and popped up. Had a little, not really broke out yet. It hasn't quite broke out yet. But we're got to wait for a flag. So it came back down and created a higher low inside of that snake. And then she finally broke out. So I get a knock on the door. I say, Jim, we broke out of the snake on the video. Should I take the trade? I said, no, wait for it to form a flag. What do you mean? Well, I'll show you. So you want it to form a flag. So there's your flag. And if you can count to 3, you can trade with me. So we come back up here and we have a 1, 2, 3 down here at the bottom. 1, 2, 3 right there. Inside of that flag. So this is a symmetrical flag out of a snake. So when we come down here and we seen the 1, 2, 3, and she came out and broke out, and then she came back again and retested that 3 spot right there. So that would have been the time to take that trade maybe, or even down here off this triple bottom. And watch it come up, and then if it had a confirmation of breaking the 3, 1, 2, 3 here, and then pull back to support, it's very strong. It held that support level. It's called retest. They'll like to retest. So what, 5, 10, 15, 20, 25, 30, 35, 40 minutes watching that trade. Maybe you not took it when I took it, or I didn't take it. And then it comes up and it has a 1, 2, 3 triple top. Comes back and retests again once you get a double top. So a double top is what? It's an exit idea. A triple top is an exit idea. One, two, and you get out of the trade. So you got your snake, breakout, pull back, boom, to a double top. And that almost all your trades look like that. If you just take time out and watch them, it depends on if, this was after the initial breakout. So we knew we were kind of bullish and people were just taking profit. And it pulled back and hit the 200 EMA, and I would have probably took that trade right there, somewhere in here, at the higher low, because I know this pattern so many times. So my strategy is all about chart patterns, moving averages, and being in the now. And then you're out at the double top. Double top or triple top. Hey Jim, man, I stayed in the trade at a double top, but it retested the 63. I'm going to see if we hold up, then I'm going to get out of here at the triple top. If Kamala wins this election, I'll never forgive America. Never. I was listening to a guy last night on the radio. People are dumber now than they were back in the 70s and 80s, and we got all this new technology, and people are dumber now. He was a school teacher. He says, I've seen it happen myself, in my own eyes. I feel sorry for these young kids. A lot of them. Some of them, there's some out there that I can't, bash, but we got all these stupid college protesters protesting against the Jews. I mean, man. Pro-terrorist. Woo! You've been on a roll, shitty kitty. Don't ruin it.
Good afternoon, traders. Welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions, and we'll have some option strategies today. We're going to talk retail today. We're going to lead off with Amazon, which has had a good run so far this year. Pull back a little bit today ahead of their Prime Days next week. And then we'll also cover Lowe's, which is hitting all-time highs in today's session, even though we've seen some decreasing sales numbers from the home improvement retailer. And like Foley will break down consumer sentiment data on Home Depot, which got a big price target hike today with that stock up about 15% so far this year. Now let's take a look at the major indices, which are hovering around the flat line. The S&P 500 flat, Dow Jones Industrial Average off just about over 100 points, 0.25%, NASDAQ 100 down to 0.1%, and the small caps, the Russell 2000, slightly in the green. Help me break down the market.
Home Depot price upgrade.
That's Kevin Hinks. Kevin, pretty quiet. I thought it was going to be like a little bit more volatile today, just due to the end of the quarter. Good September so far for equities, but it's just kind of a ho-hum day.
Well, there's not much to move the market other than there could be some fireworks at the end of the day,
right,
leading into the close.
Hey, sir. How come y'all never do geopolitics in your trades? Could you give me a good answer for that? And did we not have a strike going on with the freight system, sir?
I think Jerome Powell has told us to focus on the labor market, not on inflation, and therefore for the next 4 days we're going to get a lot of information about the labor market. So ahead of that, I think stocks are drifting here. I think you've got, continuation. Here's the thing, Tom. I looked at the market earlier, and it's pretty interesting. It's got a lot more mix than it was earlier, right, as the stocks open. I had 9 of 11 sectors in the S&P down early in the trading session. Now it's 6 to 5 up.
Right.
So it's gotten much more close to unchanged. This is just, I joked last week about a real boring day, and then it got very exciting. Well, this is a boring day.
So hopefully that
I hate to put the stamp on this so early, but this is a boring day. There's just not, things are moving, but they're small and they're not very significant. Tough to get anything going today. I think the trading week starts tomorrow.
Yeah, a lot of data starting off with manufacturing numbers from PMI and ISM. Tomorrow, some construction spending, but then the jobs market data starts to pick up here a little bit. To help us expand this conversation, let's bring in our next guest. That's going to be Alex Coffey, senior equity contributor here on the network. Alex, give me your take here. I was mentioning to Kevin, the S&P 500 up about 1.6% so far this month. So it's had a good month of September. All three of the major indices, the three major ones, extended their gains to a third straight week last week. So the optimism's still there, which has historically been a pretty volatile month.
Yeah, you look at, I guess,
620.
the backdrop, it does feel a little bit complacent. I look at the VIX one day to get an idea of kind of how volatility is on a really short-term basis. That's VIX 1D on the platform. It's sub 10 again.
Yeah.
You look at volatility relative to volatility on volatility, or VIX to VVIX. Now, it's not a perfect contrarian indicator from an overbought standpoint. But when it starts getting in this relationship of 6 to 7, basically if you took VVIX divided by VIX, it's over 6 right now. It's starting to tell you that volatility is starting to dry up, the market's starting to drift a little bit, and we know that environment can last for a really long time. But you look at the backdrop, geopolitical flare-ups and issues still continue to exist. domestic politics are going to take center stage, and whether or not that impacts the market or not remains to be seen, but it has potential to. And then you look at the fact that the market seems to be trading now as if the soft landing has already been landed. It's connected to the gate. People are getting off the plane already, and I'm just not so sure it's not being or we're not underpricing the possibility that there still could be a breakdown in the U.S. economy. There's just so much historical data that suggests when you start to see interest rates react the way that they have the last few years, it's not because things are doing well. Now, again, it could be this longer-term stagnant kind of anemic growth situation that we saw in the 2010s, and that was great for markets, or it could be something a little bit bumpier. Time will tell. I guess when I look at this market right now, I see a complacent market, and it might just be as simply as what Kevin said, which is we're just waiting for some of this info to come out. And
yeah.
Well, these guys, whose side are they on? They're good. They're a lot better than CNBC by any means. Let's see what they're saying over here. If they're saying anything at all. They're probably talking about interest rates.
Yeah, and for Joe, I've got some questions. I was unsure as to what you were saying. If we get a strong jobs report, then you're going to be forced to you're going to look at going to the lower quality.
No,
is that what
if you get a strong jobs report, you have to be open to the premise
Okay.
that the market will begin to allocate in lower quality areas of.
Okay, but let me ask you this: that if you get a strong jobs report,
they're going to get. Everybody knows that they're prepping for Christmas season. Okay? They used to say that all the time. This is the season to start hiring for Christmas. We could get a strong jobs report, but it ain't going to mean shit.
But here's my point. The simplest way in this market, the simplest way to make money on an enduring basis is buying quality. Buy the quality names, stay with the quality names, and sure, they may underperform in September like we saw, but overall you'll do much better off, unless you're a trader.
Surratt, Piper Sandler says today we believe October will be more of a treat than a trick for investors. We believe pullbacks within the context of the long-term uptrend should be viewed as buying opportunities. Canaccord, don't fight the Fed. It's an opportunity, they say, to position for a fourth quarter rally, which they say is possible. I think most would agree with that. What's your view?
And what happens if Trump gets elected?
In August, everybody was, hey, look at September, it's going to be really bad. Well, September wasn't that bad. So now the question is, how do we go into this for year end? I do think there's opportunity in the market. The economy is slowing, to Steve's point. We have to look at employment. We have to look at housing to see where they're going to be. And I think there are going to be pockets in the market. You have a tailwind with global central banks now cutting rates. So I do think you're going to have opportunities there, and I am more bullish than I am bearish.
Okay, so let's talk about positioning. As Canaccord, as I said, says now's not the time to fight the tape, but they present this as an opportunity to position for the potential of a fourth quarter rally. So on that note, Shan, I want to know where we should position. Pasquarello also points out that in this quarter, which is ending today, the character of the market changed, but the direction of the market did not. You look at the equal weight S&P, it's up 8%. Cap weighted S&P is up 5%. That's because mega cap tech didn't perform as well in this quarter as it did in prior ones. Sector winners, okay, utilities, best in the quarter, up 18%. That's the best quarter since 03. It's a new high today. Real estate's up 15%. Industrials 11%. That's a record high. Materials and financials round out the best 5 sectors of this quarter. Technology's picking up the rear. It's only up 1%. Some would say
picking up your rear, buddy.
You have had the broadening. Well, I want to know what to do now.
Yeah, well, I think, Scott, I think the challenge is you're going to hear a lot over the next couple of weeks about value outperforming growth in the third quarter, and I think it's important that we don't conflate cyclicality with value. If it was truly a play on valuation, you would have seen much more pressure on the mega cap tech stocks, and instead, what you're seeing is that you're seeing that acknowledgement that there is some deceleration in those earnings for mega cap tech, and there's acceleration in earnings expectations for those other parts of the market. But
that doesn't mean that you necessarily need to have a binary decision on owning technology versus some of these other sectors. I think you're still seeing some of those.
None of them are saying the same shit.
You're seeing low rates continuing to drive, obviously, real estate and utilities, but you're also seeing, maybe, that's also driving financials. The real estate experience from a credit loss perspective isn't as bad as people were expecting. So you see real estate and you see banks getting a little bit of support. You look at industrials, you look at materials. That's on a reacceleration of this theme around reshoring. So I think that there are a lot of places, to Surat's point, where you can position for a still resilient U.S. economy, which is likely to continue to benefit from this cyclicality, and that if there is meaningful additional pressure on some of these technology and comm services winners, then I would expect that it's likely that investors would come in to pick up some of that. Just given the fact that there is nothing necessarily pointing to a protracted weakness for those stocks, just an earnings deceleration.
I'm not presenting this, Joe, as binary. It's not like one or the other. It's a matter of, look, you had outperformance by these other groups in the quarter. As we said, equal weight beats the cap-weighted S&P. We haven't been able to say that in a long period of time. Now we've said it. And if you look at the groups that outperformed, I simply want to know, not either or, it's what's going to get you the best returns over the last quarter of this year. Is this trend intact where equal weight beats market weight or not?
I sure hope that it is, but look, I think that it's important to understand that for the broadening out to continue, you're going to need further evidence of one of two things. Number one, the Federal Reserve, to your point, Steve, is there with more aggressive rate cuts than maybe the market is expecting, or at least meets the expectation. In lieu of that, if you don't get that, then you need stronger economic data. I'm not in a place where I'm ready to say to myself, okay, as it relates to risk to reward, that's where I want to look towards. I want to look towards those two things. Even though quality is a factor in this quarter, has underperformed the S&P, underperformed small caps, I'm still looking to stay high up in quality because I think that's going to be important as we move towards the end of the year. Remaining high up in quality. The other thing that I think is important real quick is, and you know that I believe this, I believe when you go into the fourth quarter, you want to own stocks that are showing strong performance year to date. You want to buy that momentum. You don't want to sit there and try and buy the laggards.
Well, year to date, or what about month to date?
I think you're looking at year to date.
Year to date.
No,
year to date?
I'll tell you why year to date is important. This month is a significant month for mutual fund managers. This is where the tax loss harvesting happens. And that's
You mean October.
This month. The month of October is where that tax loss harvesting happens, and it happens based on where we are for the year. I don't think you want to step into those laggards.
What about lately? Because the misnomer here is that, okay, tech has not performed as well as some of these other sectors in the quarter or mega cap. All roads always lead back to mega cap. But Surat, if you look at other tech names month to date, Oracle's up 19%, Palantir's up 17%, First Solar's up 12%, Jabil, Micron, AMD, Salesforce, IBM. All of those stocks month to date are better than any of the mega caps. Like your Oracle, at the top of the list, 19%. It's not like tech hasn't done well, it's just the most marquee of names haven't done quite as well.
If we sat here in the first 3 quarters and said you could have the market go up and you could have cap weighted be less than equal weighted, we would all be happy there. I mean, we wouldn't say, hey, the worst case was that if all the big caps didn't do well and the others did well, but you wouldn't have any indication in the market. So I think this is good, and we need more broadening. It doesn't mean to say the large caps are not going to, the high quality that Joe's talking about can still do well. You just have to pick your spots and say which of those stocks are going to do well.
You've been talking about names like Palantir, up 17, as I said. First Solar's yours, AMD, up 11. Chips have been squirrely, but you'll take that. Anybody would.
Yes, we also added Oracle several quarters ago. Again, examples of going a little bit outside of the Mag 7, looking for the opportunity in the technology sector, finding companies that have strong momentum, and I think that momentum stays in place. I don't think that message is that the Mag 7 are so bad. I mean, when you look at the Mag 7, tell me that they look so awful. Meta is near an all-time high. Apple's all-time high is 237. What is it, 233 as we're sitting here right now? So I think, to your point, where you started all of this, it's not binary. It's kind of a universe of all. And if you want to kind of lean in one particular direction over the coming quarter, you need to have the evidence. You need to have the evidence that what we've witnessed in this current quarter can continue in the fourth quarter. I think it's guilty until proven innocent that this could extend itself into the fourth quarter.
You know, I just think it's difficult to, following on what you said. Take CAT. I look CAT every day, and the reason I do is because I messed up trading in it. I sold it the wrong time. I bought it the right time, just sold it the wrong time. And right now, you've seen the multiple, the PE increase by 50%. I mean, that's kind of alarming. So now they have to show they can produce the earnings to support the multiple. I think that holds true with the other industrials. Now, the market's been discriminating, and we take a look at, name we talked about here, Cliffs. And Cliffs has done nothing but gone down this year. So going back to your questions you started, you asked Joe. I knew the answer to that. And the reason why I don't move off my positioning is, number one, I don't want to pay taxes. But put that aside, is because I don't know the answer. If tech will, I don't want to say come back because it's doing well, but it'd also be alarmed if tech
Spy,
the market every
we have an overhead resistance right now, Yoko.
Right.
How about this?
That's
Yoko, overhead resistance right here. If we break it, we move up. 572.18. $572.18 as of now. 572.18 Jack. Overhead resistance on the 1 minute. 572.18. We break that, we'll see your 72. I actually got 572.59, but that could be from a previous resistance. We have to break 572.17. Jack. CBC, your people are so confusing. You keep talking about and talking about it, talking about it. These guys on Schwab are done talking about it. I'll be right back. I'm going to check my mailbox. It might be 572.24.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. And we're talking Amazon. They've got Prime Days that kick off next week, October 8th and 9th, ahead of the holiday shopping season. It's had a good run so far this year. Let's bring in Caroline Wood, Senior Markets Correspondent here, help us break down this story. Caroline, nice price target hike out on Amazon also today, and it's had a pretty good year.
Yeah, it certainly has. Shares are up about 23% year to date, but under pressure today. It's the worst performer of the Mag 7 today, despite some bullish analyst activity. An analyst over at Truist boosted its price target on Amazon to $265 a share. That's up from $230. Currently trading around $186 right now, so more than 40% upside from current levels, according to Truist. The analyst there says Amazon remains its favorite mega cap stock, one of the best ways to play cloud, AI, digital ads, and global logistics, and thinks Amazon's North America revenue is tracking toward consensus estimates, reflecting what it calls a resilient consumer, sustained growth in advertising revenue, faster growth in web services, higher operating margins year over year, and says this comes even as the company invests aggressively, of course, in artificial intelligence, in its AWS unit, logistics, and its broadband efforts. Also points to Amazon continuing to gain share of global e-commerce and improve its value proposition to both merchants and consumers. We know value is very important right now. In terms of other analyst activity, I will say Citi also came out and said that Amazon remains one of its top picks, along with Meta and Uber. So Citi has a buy rating on Amazon and a $245 price target, so a little bit lower than Truist's. And there's also there's a report in the information from Bank of America analysts pointing to the fact that Amazon's streaming video service Prime could be on track for upwards of $3.5 to $4 billion in ad revenues by 2025. Pointing out that Amazon Prime drew more than $1.8 billion in ad commitments at an upfront event, exceeding its own targets and putting it well ahead of Netflix, which of course is a key rival in the streaming space. So quite a bit of bullish analyst activity, not giving a boost to shares today. They're down almost 1% right now, but up more than 4% in September, up almost, as I said, almost 23% year to date, and up 46.5% over the past 1 year.
Caroline, this company is the leader in cloud, right? 30% to Azure's 25%. They claim they're putting 2 times as many features, AI features, on the cloud as other cloud companies, right? They're doing twice as much with AI. In terms of e-commerce, they just keep making money. They just keep, making efficiencies more. You mentioned what really they don't even talk about is Amazon Prime and how they're slowly but surely. Remember, live sports that Netflix is trying to do now. They did that. They started that a year ago and got involved in that. So whatever this company does, it seems to lead in. And if they continue to cut costs when it comes to e-commerce and make that more efficient, more automated, that's going to show up more in the earnings per share. And this is a company that just does everything well, and they keep pressing the gas. Like I said, competition from Google Alphabet, and Microsoft Azure, even Oracle, you could say is competition, but they're still the leader, Caroline.
Yeah, certainly so. And as Tom pointed out as well, there's the Amazon Prime Day events next Tuesday and Wednesday, the 8th and 9th, that are another catalyst for specifically the e-commerce division. I know you were kind of covering all of those, so something to keep an eye out for, because Amazon seems to get my money every day. It seems like I'm constantly ordering off of Amazon, but I know that those Prime Day events seem to really drive traffic and in turn, create orders for Amazon, eventually money. And, in the live division as well, there was that Wall Street Journal report. I don't know if you saw it over the weekend, that Amazon is actually in talks with former NBC news anchor Brian Williams to potentially host a live stream during the election night to have coverage. They said the sources over at Wall Street Journal say they're not trying to get into streaming news, but more of like an event situation type of thing. Obviously they're already with the NFL. They have the NBA contract as well. So that could be interesting as well, because there are a lot of people who cut the cord years ago, like me, and who don't necessarily have as easy of access to some of those network, the cable stations, and also for an international audience who wants to tune in and see what's going on election night here in the U.S. Could be a way to get viewership that way as well. So yeah, they certainly have their hand in a lot, and that's likely why we've seen shares perform well this year. But also, if you take a look at the breakdown, analysts, not just the ones that I mentioned with the, they already had buy ratings, but boosting their price target. There are 66 analysts that cover Amazon on the street, and 63 of them have a buy rating on shares. So, with 265, I mentioned the Truist price target. That's actually the highest on the street. And JMP also has a $265 price target. So that's the street high. But, analysts on the whole, very bullish on this name, despite the fact that it is up over 20% year to date.
Yeah, and Adobe came out with that pre-holiday shopping metrics. They expect online sales to increase about 8.4% year over year.
Is it me, or are they getting better at delivering quicker? It's amazing how quick. Someone said to me, someone ordered something to my house, and they said, you must have a hub right near you because it's amazing how quick everything gets to my house.
And also how spoiled we are.
Yes.
Because if something doesn't get delivered to me, the next day, all of a sudden I'm like, oh, it hasn't even shipped yet, because Amazon has totally spoiled us in that department.
We are spoiled because we live by big cities or in big cities. That helps also. All right, great stuff. Thanks to Caroline Wood, Senior Markets Correspondent here. Alex, let's bring you back in here for this discussion because it's had a good run. It's off its all-time highs. But break down Amazon for us, and you got an example trade.
Yeah, it's basically right at its 1 month exponential moving average, which, if you look back over the last year, has acted as a level of support for the name. Hard to say a lot of things negative about Amazon. I mean, you guys just described how quickly things get delivered. It's got a stranglehold on e-commerce. It's breaking into more and more entertainment. It's got Whole Foods. It's got AWS, which is of course paramount for small and medium-sized enterprises in terms of cloud, which we know is essential as time goes forward. So it's got a good position in the market. I looked at selling a neutral bullish spread, basically right at the money here, looking for that level to hold. The 185, 180 October monthly put vertical here. About $1.70 credit was at least before the show. That would bring us a break even of 183.30. $330 in risk, a max profit of 170. So let's call it 2-to-1 risk reward. I know it's a little bit better than that, but in that kind of ballpark there, around a third the width of the strikes, which is again kind of a loose guideline I use when structuring some of these credit spread trades. With this though, Tom, you're basically just drawing a line in the sand and saying, I think this is where this dip basically stops, or at least this level can ultimately be maintained over the next few weeks going into the middle of October. It can, of course, break it because it's risk defined. You have some staying power if you're comfortable watching that trade go against you. Perhaps it even could recover. You got a little bit of time, but not a ton of time. So 185, that's the line in the sand for this example trade.
Yep, neutral to bullish. Pretty aggressive here. 185 strike you're selling. It's only about $1 out of the money to the downside, but you're collecting that $1.70 credit, as Alex mentioned, with the break even of 183.30 to the downside. And if you look at the chart on this 100-day moving average is just below this break even, or right near that break even. And we've had this will be the fifth session in a row we're negative if we're down here. Kev, your take here in the short put vertical. Maybe taking advantage of the pullback we've seen over the last week.
The October 18th 185 put is a 54.
Yo. So we're going to go to Jimmy's watch list. China. Baba. Oh, Baba. Hey, hey, hey. What the heck? What happened here? How dare you? What the fuck? Fudge. Okay. Stop acting like that. I said stop it. If you know what's best for you. Don't argue with me. Do what I say, not what I mean. Come on. Okay. Erase. I said remove drawing. Jimmy might have to reboot this thing, get better, because this is slowing me down, and you don't want to do that, Brandon. Brandon? Where's Brandon on these floods? And this natural disaster? Is he at the beach? Just asking. Just asking. Where's Kamala? At a fundraiser? Just asking. Just curious, where is the little bastard at? Just curious. Watch Baba. The prison guy's on television.
Lows, it's about 25%. So anything in that area is going to help Home Depot. So we're actually also seeing that energy usage among pros. That's up 81% on a year-over-year basis. And it's really the first big move to the upside that we've seen in about 2 years. So you can see that back in, late 2022 or early 2023, a nice little ramp up. But now we're getting another one where the pros are really starting to use this app. And the thing about it is this not only obviously demonstrates that professionals are going to start spending more on at Home Depot, but it just demonstrates the stickiness of this product and kind of the way that this industry is moving a little bit more technologically advanced. So loving to see that. And back to the rate cuts, we've got mortgage applications up 11% in September. Refis are up 20% on a week-over-week basis and 175% on a year-over-year basis. Of course, no one's refining at the highest points, but now they're actually talking about doing it, and it's coming from such a low bar. As you can see, both of those numbers were very, very low. Nobody's refinancing.
Tesla paid nice.
And now it's starting to move lower.
Amen.
People are lowering their monthly payments, which is going to
Amen.
And they're pulling out chunks of change.
Okay, I've had enough of you. I need some music. What am I going to play today? I can't. If I decide to go ahead and monetize this YouTube channel, I'll have to stop playing music. So let me see here. I got to think of someone.
As you
From the great Atlantic Ocean to the wide Pacific shore, to the green Florida mountain on the South Bilbao shore. In the mighty rush of the Indian Hills, so the bubbles blow. No changes can be taken on the Wabash Cannonball. Yeah! Swinging pound in this big electric Hawaiian steel guitar. She rolled into Birmingham one cold December day. As she pulled into the station, you could hear all the people say, "Hey, the gal out there from Florida, she's long and she's tall. She's a combination of the Wabash Cannonball." Chuck Jennings and his custom Fender guitar. Houston Daddy Travis made his name forever stand. Always be remembered throughout this great land. His earthly race is over and we're back to a draw. Gonna carry him up to heaven on the
Wabash Cannonball. Listen to the gun, the and the roar. Wabash Cannonball. What's my do 2 for Tuesday?
Something every homeowner needs to know. I thought my insurance policy covered everything.
I've been thinking lately about the people I meet. The car wash on the corner and the hole in the street. The way my ankles hurt with shoes on my feet. And I'm wondering if I'm gonna see tomorrow. Father, forgive us for what we must do. You forgive us.
We'll forgive you.
We'll forgive each other
Till we both turn blue, whistling, fishing in heaven.
I was in the army, but I never dug a trench. Used to bust my knuckles on a monkey wrench. I go to town and drink, give the girls a pinch, but I don't think they ever
See, notice me.
Father, forgive us
For what we must do. You forgive us, we'll forgive you. We'll forgive each other till we both turn blue. Go whistling, fishing in heaven.
Fishing and whistle and fish. Eat everything that
To eat on the dish.
when we get through, we'll make a big wish that we never have to do this
Again, again,
Oh, my
again.
very first job, I said thank you and please. They made me scrub a parking lot down on my knees. Then I got fired for being scared of bees, and they only give me 50 cents an hour.
Father, forgive us for what we must do. You'll forgive us, we'll forgive you. We'll forgive each other till we both turn blue. Go whistling, fishing in heaven.
Fishing and
Whistle and fish. Everything to put on the dish. Big wish. Never gonna do this again. Again. Again.
Father, forgive us for what we must do. You forgive us, we'll forgive you. We'll forgive each other till we both turn blue. Then we'll whistle and go fishing in heaven. We'll whistle and go fishing in heaven. We'll whistle and go fishing in heaven.
Yeah. I seen both of them guys. Boxcar Willie and John Prine. I got to see Bonnie Rhett's titties. Bonnie Rhett, whatever I call her name, titties at the John Prine show. They accidentally popped out. I swear to God, but I don't have a recording of it.
$5. You do really well on this spread. So this is one that it looks like there's limited upside because you're paying $8 for a $10 diagonal, but you've got a chance to extend duration on this, and you've only got 4 days of this trade. So it's got a nice level of theta that you're collecting and a nice chunky delta.
Yeah, and that theta will improve as the week goes on, and that short 410 strike call in the October 4th weekly cycle. You do have some assignment risk on that short call over the next 4 days of expiration, so keep that in mind. But yeah, definitely a way to take advantage if you think this thing's going to continue to grind higher, but it only needs to go at or near 410. But even if it's not hitting 410, maybe 406, 407, you're going to still probably be profitable on that type of call diagonal. All right, that's going to do it for this segment. Let's take a quick break. When we come back, we're going to talk about Home Depot's competitor, Lowe's. Stocks hitting all-time highs today, despite their slowing comp sales the last couple of quarters. Fast Market's coming right back.
Do. Tempting to go for a little walk up down the block before the fat cats get back. 23.60 next to break on GME. Do.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Lowe's, let's get a market update here. We've still got the S&P 500 futures just hovering around that flat line. Dow still off over 100 points, or about 0.25%. NASDAQ slightly in the red.
Flat line.
2000s up a quarter.
What happened to 50?
Leading, to the upside here. So still got some gyrating markets here. We'll see if that volatility picks up into the end of the quarter during today's session. Now let's take a look at some of the other asset classes. Crude oil getting a little bit of a bump here, still below 69 bucks a barrel. Gold off of those all-time highs we saw late last week. VIX has come in a little bit today on a basically quiet session, and the dollar makes a nice move to the upside. Some of those overseas currencies under pressure here, lifting up the dollar here, but not creating any headwinds for equities at this point. All right, we're going to discuss Lowe's now. Let's bring in our next guest. It's going to be Kevin Green, Senior Markets Correspondent. Kevin, we had a nice note out of Piper Sandler, out of Home Depot. We just discussed that with Like Folio. But Lowe's the same way. This stock's hitting all-time highs. And, I mean, it must be pretty nice hitting all-time highs when you've got decreasing comparable sales over the last 2 or 3 quarters.
Yeah, it does seem like this rotation that we've seen in the market has definitely benefited Lowe's and Home Depot. And I think also, too, as you guys kind of talked about earlier with that hurricane, which is an unfortunate event, is another reason why we probably did see a little bit of a bid over the last couple of trading sessions for Lowe's. But I think it's going to be a little bit difficult for them here in the near term. Yeah, obviously, Piper Sandler's talking about the refinancing activity that's taking place. But are we going to really see DIY actually pick up for the individual consumer, which is roughly around 75% of their total sales?
Yeah, this is too much.
To individuals like yourself and myself, and usually during the wintertime, that's not
102 dead, man. Rest in peace.
Maybe that's going to be an adjustment.
I heard 80 this morning. This was a bad storm, and we're not. They're not getting as much coverage as they. I mean, 2 million without power, 102 dead. Storm destruction across 6 states. And where in the hell is Biden? He's on the beach. The only one I've heard anybody say anything about it was Trump. He's not even president. We need him bad. Oh, God. I'm gonna go clean my glasses. I'll be right back. Grab some water before I beat somebody up. I'm so pissed off at him. I forgot about what I was doing. I was getting pissed there. I can't stand Joe Biden. You got to pray for them people, though. So I think as a moment of silence. That's what I'm going to call it.
Strategy, not about the direction. That's based on your assumption.
And the best thing I can say, use the Analyze tab to price things out before you do them and look at the risk reward.
Right, because as
Put them up on the Analyze tab in the risk profile and look at them.
I think it's what, a 1% move to the downside to get to that break even on this unbalanced put butterfly here. So you've got 2.5 weeks in this position, 18 days, so keep that in mind. But kind of flip-flopped it a little bit bullish on the Home Depot example, on the Lowe's example, a little bit more bearish to the downside. But a good couple looks at a different strategy for the same sector. All right, that's going to do it for us today here on Fast Market. Make sure you stick around right here on the Schwab Network. Next Gen Investing is coming up.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great.
How do you? I mean, that's kind of a stupid question.
Able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is...
Oh, God. I hope this don't last very long. These commercials here. It just comes natural to me. I sleep at night dreaming stocks.
Not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
I mean, there's some smart people out there. That lady that
Welcome to Market Overtime on the Schwab Network.
trades a super bloom. There's no way I could do what she does. I mean, she knows.
It's controversial. saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It
to the
is going
upside.
crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
I'm gonna go outside.
Connection Investing. I am Jenny Horn
Just walk up and down the
Alex
block.
Coffee. And Alex, it's good to be back after a week out. Feels like a lot happened.
Clear my head a little bit.
Gone because, relatively speaking, we're seeing a bit of a tone shift with Nvidia. Well, there's strength in so many of these Chinese e-commerce names. So a bit of a mixed session today to kick off this week. But all things considered, really strong week last week, I gathered, and momentum that's trying to fade into today, but we're right now strength led by the Russell here.
You know, Jenny, I was actually out in the latter parts of last week as well. I was tricked into going camping, so I feel a little bit disconnected as well, but a lot of red on the screen. However, we haven't really gone anywhere, and it seems like we've been in this level, at least in the S&Ps, for the better part of the last 2 weeks now. So post-Fed, we saw a jump in excitement to the 50 basis point and how it was framed, and we've really failed to see this market take it by the reins and send it to new heights. Now, we did hit 58.30 in the E-mini S&Ps, which corresponded in the SPX to 57.67 as an all-time high back on the 26th, which I believe was Thursday. But again, one of those days that started near the highs and then faded as the day rolled on. Some weakness Friday, trying to claw back some of that now here intraday today as we're basically unchanged on the session. But you mentioned all the excitement that's happened overseas. We'll have to talk about that for FOMO for sure, as I think the China stocks have really stolen the show over the last week.
I know, so I came back and I saw Alibaba's up 30%, 33% this month. So we'll be diving more actually into that name on FOMO today. But as always on the show, we'll kick things off with upvote and downvote. We'll chart and trade our upvoted names. We'll also be looking at some of these various energy winners and some of the alternative energy winners like Constellation Vistra, which now has overtaken Nvidia as the S&P 500's best performer on the year. And we'll close things out revisiting our Chinese conversation. We'll be looking at NEO as it did gain a substantial amount of funding as we did see the latest benefit from the overall Chinese stimulus. So right now it seems like these Chinese stocks should be rallying as substantially as they are, considering they're getting a good chunk of change, which many could say has been maybe overdue or they've been in need of it for a long time.
You left to go on your time away,
Jenny,
and you said,
it's overdue, but this is way too much too fast, honey. So don't throw all your biscuits in one basket, all your eggs in one basket right now. It's a little overdone. If it was a slow, gradual ride, I'd be excited, but I am not excited. It's just a pump, baby. Just a pump.
sector. So I don't think a lot of people had that on their bingo cards coming into 2024.
No kidding, and especially a good way to close out, I guess, the end of the third quarter, as today does officially mark the last day of trading of the third quarter. Yeah, a lot happened last week. You go to Europe for like 10 days, and it seems like the markets are in disarray. But we'll start things off here with upvote and downvote as always, and we're looking at NVIDIA, which I think is a good place to really kick things off, because NVIDIA now falling for a second straight session, lost about 2% on Friday, down again today, although modestly, about 0.8%. But really, this follows what is the Chinese efforts boosting their own semiconductor sector to counter these U.S. sanctions. Beijing is urging some of their local companies to stay away from NVIDIA's chips. So shares are falling in reaction to such, but they really are just mostly investing in their own AI infrastructure instead of NVIDIA right now, according to reports we first got out of Bloomberg late Friday. But this has been an ongoing battle. We know that these tensions began back in 2022 when the Biden administration did unveil those various restrictions on these more advanced chips, which NVIDIA had to then curtail to make their exports then able to be exported still to China. But it has been a costly and I'd say a long-standing battle between the U.S. and China. China is still a major market for NVIDIA in the first half of fiscal 2025. It did report about 11% of its sales, or $6.2 billion, are derived from China. Beijing is still promoting a lot of these domestic makers, like Huawei, for example. But I do think that this is interesting because while NVIDIA has been able to recover a lot of these dips, we are seeing, I mean, still like higher lows as of late for this name. It's still fallen substantially from its highs. It is still up 145% this year, though, roughly.
What's really fascinating is it does seem, obviously, every single day this stock swings around and it makes big moves, it feels like. But going back to basically the beginning of June, it's basically gone nowhere. And so this has been NVIDIA's kind of script. It's made these big legs higher. It's had these kind of vertical phases. And then it's cooled off by just sort of trading in a range for 3-6 months at a time. It's been a quarter in this case for NVIDIA, and so we'll see if that can continue. It does seem that some of this geopolitical, tit-for-tat, trade war type of activity can kind of add volatility to this stock, but all things considered, this is still one of the bellwethers of the entire market and continues to be for the semiconductors as well. Speaking of important names and big launches and important stuff, Apple, that's the next one here on our list. We've been skeptical, I would say, I think rightly so, of this iPhone launch. I think they're giving them away at Verizon, though, so who knows how many are going to get delivered.
Okay, so I didn't see that also because I've been pushing for it. Like, I need someone close to me to get this iPhone 16 so I can, observe for myself because I've been so critical of the nature in which the AI technology is now going to be on the first iteration of the iPhone 16. I know it's coming, in the next month or so, but I just can't get over that. But Morgan Stanley did say that as of at least September 27th, iPhone 16 lead times are still tracking lower than the past 3 iPhone cycles. However, lead times for the Pro and the Pro Max models are now extending and stabilizing across most of the regions that the firm is tracking. So the analyst did call an unexpectedly positive development as far as the Pro and Pro Max mix is concerned. Did say that while this doesn't change their overall view on the cycle, that they see the elongation of iPhone 16 Pro and Pro Max lead times as a positive leading development worth watching. They kept an overweight rating, $273 price target on Apple shares, which, hey, does imply some substantial upside from where we are currently trading. And Apple, I did want to note, is one of our several but lone leaders of the tech trade today, alongside an Alphabet and Meta, but still hanging on to a near 1.8% rally despite the overall market weakness.
Yeah, I kind of read that analyst note, despite the price target and overweight rating, is not that positive. They basically said, hey, it's actually doing worse than these last 3 iPhone cycles that we've watched, but because it's the more expensive ones that people are buying, it's good. I was told this was the iPhone cycle of all iPhone cycles.
The super cycle.
This was, there's some sort of it was like a constellation in the stars that this was written in stone that this was going to be a big time thing. This is Eric Woodring over there at Morgan Stanley, as you said. What I found fascinating, though, 273 for the price target seems, astronomical. It doesn't even crack the top 5 on the street. You got 300 from Dan Ives. You got 300 from Loop Capital. Tigris is 295. Goldman 276. Wells Fargo 275. So just shy of the top 5 in terms of price targets, and some of these levels are quite lofty. It's not like we're talking about a stock that is growing at some rapid pace. I mean, Apple hadn't been growing in terms of revenue the last few years. So that's a lot of price to happen over the next 12 months. We'll see if it can do it.
And I mean, to your point, we're only about 2.3% off of all-time highs here. So we were arguing it's as expensive as Apple stock has ever been. I just want us finally to get those iPhone 16 sales actually to maybe put numbers to some of these theses, because obviously right now it's just fairly speculative because we're still in like this pre-order phase.
Well, what I think gonna do is I'm gonna go to Verizon. I'm gonna find out what this deal is. It says new and existing customers are gonna get this iPhone for free. So assuming it's the model that I want, maybe I'll get it figured out if it's all worth the hype. But if you gotta give this thing away, come on.
I've never heard of a brand new iPhone like being given away like
Not even for only new customers either. I think it's a new and existing customers. So
wow.
Trade in any phone or something. So that tells me all I need to know. Maybe it's just a lower end model that they're having trouble selling. People only want the Pro Max, but you know what I mean. Like if things are flying off the shelves, you're not giving them away. You're charging for them.
Yeah, well, exactly. And I think anytime something is free, there's an issue there, because I just typically have some healthy skepticism when it comes to like these deals.
And so then let's look at the other side. Would be Apple saying, hey, we just want as many people to have these phones as possible, because when this AI actually launches, we think this is going to be a huge benefit for us. So you could see it the same way that they just wanted you in the ecosystem 5-10 years ago so they could roll out these services that have been a huge success. Maybe they see their AI as that next iteration, this next major upside boom for the stock. But I'm still skeptical. We'll see what happens. But the stock really performing nicely as it continues to push towards those all-time highs.
Yeah, and a name that's also up just to close out. I mean, this month about 1%, but still up about 20% on the year. But now to shift gears here and look at some different areas of the overall tech trade. That is Salesforce, or ticker symbol CRM, which is actually pulled back about 1.9% on this session, and about 15% from its 52-week highs, but still up about 7% this month and around 3% this year. So it has been a choppy and a rather uneventful actually trade for Salesforce over the last several months, as earnings have not really been much of a catalyst to the upside. You can see there we've basically found now this new range between around like 240, 280 a share, where we're just not able to fully break out, although now at the higher end of that range, all things considered. So now we'll look at the street coverage. Wedbush did actually raise its price target to 325 from 315 with an outperform rating, and the firm is incrementally more bullish on Salesforce going forward, given positive customer feedback. And
that's Dan Ives.
And that is Dan Ives, yeah. And I think no surprise based on some of that very bullish language that does typically follow Dan Ives. But recent field checks do indicate that more customers are seeing these elevated use cases for Salesforce's entire product portfolio. Wedbush also continues to believe the stock's risk and reward is very compelling at current levels, and that their Agent Force strategy will play out over the coming years, while the installed base opportunity is still underappreciated by the street. So Salesforce remains actually one of the firm's overall favorite tech names over the next year, which is again amazing, because we're basically done nothing this year, up 3%. So this is a pretty bullish take on a company that has been so neutral.
Yeah, I know. I love that you said that, because it's basically done nothing since the second week in January. But even crazier than that, its 3-year price performance is less than 0.25% down. It's basically done nothing for 3 years after being one of the strongest performers in the market for basically my entire early parts of my career. Just buying more and more companies, growing and growing and growing. Finally missed on a revenue number for the first time last quarter, or 2 quarters ago. So we'll see if it can bounce back, as it's kind of mid-range for the year. Last one on the list, though, all 3 of these names, I think, maybe with the exception of NVIDIA, would trade the performance of this particular stock, which is Oracle. Definitely over the last month or so, they all would take it.
Okay, and this is like the one thesis of the overall market that has not changed since I went on vacation, because, well, Oracle was ripping when I left. Oracle's still ripping. I mean, all things considered, the last week, pretty substantial. I know we're modestly lower today, but we are only off of all-time highs by about 3%. And contrary to the Salesforce chart, this name has actually established now this new range at this higher level, and it's been just hanging out there ever since. Really a pretty strong earnings report from Oracle. So Ernst Group did upgrade shares to buy from hold today, saying that Oracle's attractive software offering has contributed to a significant improvement in the sales situation, while the company is expanding its cloud offerings with new cloud data centers. Bernstein also was one that raised their price target to 202 from 201 a share.
with an outperform rating. This name has 36 analysts roughly that cover it right now. The average price target is around 177, but the high is 210. So that made Bernstein a little bit more interesting to me because their price target puts them at the higher end of the range of all of the coverage. But all things considered, I mean, you got 22 buys, 14 holds, no bears. So the straight is either neutral or bullish on this name, and with strong conviction now at that.
Yeah, and this is a fun one because, you know, I always look at it, it's like some stocks are like, the more you hear from them, just the worse things do. You know, names that come to mind over the years, IBM was like that. It was like 20 straight misses. And then Snap seems like they disappoint every time you hear from the company. Lyft was like that for a while. Oracle's gone 3 for 3 and only kicked their stock into hyperdrive. This is one of those names where it's like, if earnings could be every day, investors would be like, bring them on. They love the earnings when it comes to Oracle. Not always do stocks, are able to deliver as nicely as this stock's been, but really fascinating. We're talking about, CRM being unchanged since the second week in January. This stock bottomed out like the second trading day of the year and has not looked back. It's up like some 60-70% since then.
I know, and it's up now about 19% for the month. So a strong name in the month of September, of course, closing out third quarter on a pretty positive note. So we'll be looking more at our two largest names in tech today of our vote down vote names. We'll be diving into Apple as well as NVIDIA. From a technical and example trade standpoint, stick around. Next Gen Investing will be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chart Master segment. Today, Alex Coffey is bringing the heat, doing all of the charts, all of the trades. Thankfully, we do have two pretty easy names to look at, Apple and NVIDIA here. So, I mean, we'll start off with Apple. Apple's up 1.6% on the session. And walk us through what you've been watching here when it comes to like the overall technical setup.
Yeah, I think first off, it's important to say, look, I'm not a chart master. I'm not pretending to be, but there's always something you can take from the charts, the same way you can take from the fundamentals, the same way you can take from market news. It's all a piece of the puzzle. So I'm going to go through some of how my setups are. We'll talk about some of the things that I'm keeping my eye on. First off, this was the first chart I always look at on everything. It's a 1 year, 1 day chart for the stock or the asset that we're looking at. In this case, it's Apple over the last year. Looks like a pretty good chart. Started on the lower left-hand corner, and it's working its way to the upper right-hand corner. When we're looking at this, the first thing I should note, Jenny, is up in this top corner, I have right up here, price performance on my charts, where basically this is color coordinated. The brighter the green, the better it's doing on that time frame. And now this isn't just me saying it, but the best way to try to figure out, is the stock up over the last week? Well, tell me what it's doing today. Because 1 week is 5 trading days, 1 day is 20% of that. So if you start to see green on 1 day, you start to see green on 1 week. Okay, well 1 week is about 1/4, let's call it 25% of a trading month. You start to get a bigger picture. So as things go gray, it's telling you more neutral, but you can see those longer term time frames very, very green when it comes to Apple, which explains why we see this chart that looks so bullish. I also have some moving averages, which we'll get to in a second. On the bottom, this is something that Rick talks to us all the time about, which is the RSI. Technicians would like to see price making a new high. It's not doing that. But at the same time, they'd like to see this RSI also making a new high. You're not really seeing that either. So we're at this point on the chart that seems to be relatively critical where we're going to have to see something happen. Let's zoom in just a little bit here, Jenny. Same chart, but we're just looking at like the last 10% of it just so we can see these lines a little bit clearer. What you'll see here on our chart is the moving averages. I have a 1 week moving average, a 1 month moving average, and then a 3 month. You're going to see this theme throughout everything.
Huh.
See a short
What kind of moving average?
because you tell me 1 week, I got a better idea of 1 month, I got a better idea of 3 months, which means I got a better idea of the longer term. It's
Never heard of that.
1 week right there. You can see right there. It's above 1 week, it's above 1 month, and it's above 3 months. All of them are pointing upwards. That's also telling us this is trending higher, as those are all pointing a little bit to the upside. And also what we see here is it's starting to get further and further away, Jenny, from those lines, which when you see that, it can tell us that, well, maybe it's getting a little bit in the near term, a little bit overbought.
Okay, so I think that this is a really interesting way. And I think it's also
Spy, 3 black crows.
Everyone, like, conceptualizes charts a little bit different, especially like when it comes to some of the studies you pointed out. But when we talk about time frame,
Or is it?
especially like with Rick and pretty much
No,
most
it's different.
of our chart masters definitely reference time as an important concept about these charts. What do you watch here? Because when it comes to Apple, I mean, obviously we've seen a pretty decent momentum shift over the last couple of months, but it didn't start that way this year.
Yeah, so again, this was that piece of that 1 year, 1 day chart, but we're going to go to a 90-day 4 hours. So this is going to capture some of those overnight moves as well within it. I also have an RSI here, but rather than your traditional RSI, this is the RSI 5. So this is like 20 hours of trading consists of this. This is a little bit more contrarian. When you start to get up into the red zone here on this particular study, what you'll see is those oftentimes correspond to overbought conditions. So you see here, red zone, we saw selling come up. Red zone here, a little bit of selling comes up. So we're in that red zone now on this shorter term RSI, could tell us in the near term, very short term, Jenny, it could be a little bit overbought. Those who are looking for something bullish, this is a nice looking cup with handle pattern, which would tell us, you know, maybe this move.
You still talking about Apple?
From there, which would send us to like 245, if that were to play out the way that technicians would say. I'm not big into the patterns and stuff, but I think that there is something to see when you do see, of course.
He's not big into the patterns.
On this chart. So if those
How dare
all
you.
hold, you're starting to see this stock show signs of life as it trends towards those all-time highs. Level to definitely keep on your mind is going to be that 237, 235 level, which of course is relative to those old highs that it's failed to break through going back to, let's call it July, early parts of July. Got one last one here though for you, Jenny, before we take a look at the example trade. This is just looking at over the last 3 weeks. So this is super short term. And this is another thing that I do that I think is maybe a little bit different, but it kind of correlates to a little bit what Oliver Rennick looks at, which is he always has his lights on his risk radar, the red, the yellow, and the green. I look at it as like a stoplight. We're starting to get above the old resistance. That's in that red zone. That's telling us, hey, this is getting a little bit overbought. The middle is going to be your yellow, and the green is going to be that support level. So I always see it stoplight. I try to keep things simple. I like to use color coordination because it triggers with my mind. Oh, hey, red, that's over. That's getting to the high end. Green, that's the support level. And perhaps
Yeah, you got something there.
to think about. You see it down here on those lows. Some technicians will like to see it break below the support level and then come back through and that coming back through the support level, sort of that failed breakdown, can be that trigger to think about buying a particular stock. So the same can work the opposite way as well.
Okay, and I like this. I also think a good way to look at like a simplified sort of perspective on some of these charts, again, like the red, green, yellow sort of concept here, and I like the reference to all of Christmas radar, which we're all too familiar with. But now when we think, of course, about trading this day, you mentioned that 235 level as an important aspect to watch, and say you were looking at this chart and you thought, hey, we failed to break out a few times, we failed to take out these new highs several times, and say you were looking into lean into some more of the neutral to bearish price activity, given that we're just about 2.3% off highs.
Yeah, we had a little bit of overbought conditions in the short term. Perhaps you just see a test of these levels and maybe it just cools off from there. Short-term trade, Jenny, just going out to the October monthlies, which is the middle parts of October, looking at the risk profile here of a short call vertical. Selling that 235 level, buying the 240 to define the risk. So much to your point, focusing on that prior level for the stock. $1.75 credit. It's about a little bit more than 1/3 of the risk of the width of the spread. So creates a 2-to-1 risk reward. You're risking 325 with a chance to make 175, and that break even at 236.75. It's really close to those all-time highs. I know it's just below them, but you're talking that level, if it were to hold, is pretty close to that break-even point. So when you look at this here, stay below 235 profit, break through, make a new all-time high. Well, you have risk definition. So you do risk 375 with a chance to make 175.
Fat cats are back.
75 to break even. October 18th is that expiration. So as more of this iPhone information starts to come out, perhaps that can be a catalyst one way or another.
More of this iPhone information, that's exactly what I need as well. But now to look at another name that has fallen a bit from its highs, I mean more substantially actually than Apple, that's NVIDIA. And I feel like when I left, like NVIDIA, the sentiment around NVIDIA was all this fear that this bubble had burst. I mean, we are still up so substantially over the last 12 months, almost 180%, 140% this year. But a recent pullback, and a lot of these pullbacks have been potentially, of course, areas of opportunity because it's a way to get shares on sale.
Yeah, so first things first, same setup of charts. Not trying to curve fit, change things around for a different chart. So NVIDIA, we're going to go through the same different setups here. What you're going to first see is, we talked about at the very beginning, that top corner of these charts, what you see, a lot of gray. What is that telling us? Well, this is a stock that's been going sideways over those time periods. That's 1 day, 1 week, 1 month, 3 months, which we talked about in the last segment. This stock's gone basically nowhere since June, so we're starting to see that show up in the numbers of the performance. RSI also has been kind of trending lower, and so it's not getting that same level of excitement on the chart. Now at the same time, you start to see it's not really, setting new lows either. It's kind of in this situation where the market's feeling itself out. It's trying to find out, where the next movement's going to be. You have those geopolitical issues weighing on it. You have slowing growth weighing on it, but it's still NVIDIA. It's still been the market's general over the last few years. And so let's look at a zoomed in so we can look at those moving averages a little bit clearer here. This is another reason I have these on my chart. It is fascinating to me how often these levels can act as significant levels. Doesn't mean they always do, but you see here, it broke through the 1 week and it hit the 1 month, stopped, and that's when buyers came in. You're seeing it right at that level right now. So you're at a pretty critical level here when it comes to this particular chart on these moving averages, Jenny. And so when we're watching that, 120 has been such a critical point, and it continues to be.
Okay, yeah, especially when you think about NVIDIA, and it's just, to me, I still have price shock when it comes to $120, given the fact that it's currently where we're trading, but I just still look at this company, I have this psychological barrier where it's still $1,000 to me remotely. And so, like we said, it's gone a whole lot of nowhere. It's also, I'd say, been able to recover some of these times when it's dipped, but then it hasn't been able to break out ever since. So again, I think time frame is important here. So what are we watching over the next several weeks? Because I know we're in a catalyst-light time with earnings, but that hasn't mattered to NVIDIA. It moves all the time as if every week is earnings for NVIDIA.
Yeah, so this is 90-day, 4-hour, and what you see is kind of a whole lot of nothing. It's been a stock that's moved around a lot. I mean, 90 and 140, that's a $50 range on a stock that's only trading 120. That's a huge percentage, but you look at where it is right now, which is this 120 mark, and you look it back to where it was, way back in the early parts of it, around 120. So it's gone kind of a whole lot of nowhere over this time frame. We talked about that RSI on the 5-period RSI on this 4-hour time frame to 20-hour RSI. It's right in the middle. So that also is telling us, it's not really overbought, it's not really oversold. It's right there at that level. Last chart here for you is just those last few weeks. Same chart, but this one's more fun because it's actually in the range here, Jenny. Red, yellow, green, stoplight formation again. And what we have here, that resistance point that was up around, let's call it 124.5. It has failed from. We have 121, 120. This sort of area has been that kind of neutral light zone. It's right there right now. And then way down below around 115, 115.5, 116 has been that sort of support level that is held. It actually didn't even get all the way there the last move lower, so that's something to think about too. But this 120 to 121 range that you see around that yellow light really, really has been critical and continues to be.
Okay, yeah, so now we shift gears and look at another example trade with NVIDIA shares, and we mentioned we've been a whole lot of nowhere, so finding a range for this name is actually frankly easier because I feel like we have the stopping point for NVIDIA a lot. So now when we watch forward-looking example trades in this name, walk us through your thinking here, looking to lean into perhaps some more of this like neutral price activity.
Yeah, if you're a trend trader, maybe you think continuation is more likely than change, and so if the trend's been sideways until it isn't, maybe it continues that way would be your line of thinking. So I looked at an example trade with that in mind, selling an iron butterfly in this stock, which is really selling a straddle and buying some wings, and so the 120 mark has been that battleground, continues to be. That was the strike selected here for this particular trade. Bought $10 wide wings. Now this is trading for a little bit less than $7, but use $7 for the credit here just because it makes the math a little bit easier on us. It's probably closer to $6.80 or so, but 113 if you were able to get $7 for the credit would be the downside break even. 127 is the upside break even. You're risking 700 or whatever, or you're risking rather the difference in the spread. So that's $10 minus 7. You're risking 300 with a chance to make 700 in this case. It's always going to be a function of that credit received. But what you really notice here is that the straddle, it has a best apex of profitability when it comes to that risk profile right at the short strike. So while there's a $14 wide range where this could be somewhat profitable, this is also a strategy that the closer it goes to your short strike, the better it does. So it's a penny at 126.99. But it's $7 at 120, so that's always important to notice with this strategy.
Our good old throw in the dart strategies, we used to call it, and it takes me back. So yeah, one where you definitely get obviously more benefit from being more accurate, but highly customizable given your strike selection. We'll leave it there though for our Chart Master segment. Coming up next, time to talk a name that has been a point of strength and definitely interesting over the last several weeks. That's Alibaba, continuing to rally, continuing to break out to the upside. We'll dive more into why and how the Chinese government is hopefully helping this company coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge
And shift your perspective into full gear.
real-time example trades, a full hour of trading.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for FOMO. So we're discussing Alibaba, which I keep saying, you're gone for a week, and I was gone for a week, and things really changed in Alibaba's situation. Although I will say it did start a bit sooner than last week, but the momentum of the strength of this name has really picked up. Now 28% higher for this past month. So joining me now to discuss more on some of the recent strength and why shares are now, ripping to the upside. Also, we're initially higher today, now slightly lower, is Caroline Woods, New Markets correspondent for the network. So Caroline, this is not our first time talking Alibaba today, and I'm sure not our last. So walk us through everything that's happening here, although it was higher earlier when we looked at it.
Yes, you probably don't have that much FOMO in terms of today's price action for Alibaba, but as you said, it's seen an incredible month, up almost 30% in September, in really the back half of this month because of those China stimulus measures, the biggest since the pandemic, including an interest rate cut, also reduction in the amount of reserves banks must hold relative to their assets, and then most recently, China's central bank announced it would tell banks to cut mortgage rates on existing home loans before the end of next month. They have to lower by at least 30 basis points below the loan prime rate before October 31st. So in turn, China stocks saw their best day of trading since 2008. Here in the U.S., though, U.S.-listed shares of Chinese companies have come off their highs, and as we said, Alibaba shares have actually turned negative after being modestly higher just a bit ago. They're down about 0.2%. In terms of some analyst activity, though, we did see a bullish price target hike from Citi. Citi already was bullish, but upping the price target to $136 per share from $116, kept a buy rating on shares, so $136 is actually a street high for Alibaba. It's currently trading around 107 right now, so more than 25% upside for current levels, according to Citi. Citi thinks the latest monetary and fiscal policy stimulus in China will likely translate into an improving wealth effect that could in turn boost consumer sentiment and consumers' willingness to spend. So if consumers are more willing to spend, that could help a company like Alibaba, could be a beneficiary. The Citi analyst expects Alibaba to also step up its investments and marketing promotion heading into Singles Day to boost gross merchandise volume and consumer wallet spend. Singles Day, of course, is November 11th. And the analyst there saying the wealth effect from market rally should boost consumer confidence, and anticipation of higher consumption demand could encourage businesses and advertisers to increase ad spend budget, translating to higher ad revenue growth and increase online and offline activities. So Citi, maybe you could say playing catch up a bit with this new price target, although the previous price target of 116 actually is below or above where Alibaba is currently trading. But the most bullish analyst on the street over at Citi for Alibaba, not giving a boost to shares, though they're down about 0.25% right now.
Yeah, Caroline, I was going to say, do we think that it's possible that more of this could be in store? I'm looking at the average price target over time for Alibaba, and it's basically been frozen around this 107, 108 level. Let's call it just below 110, going back to February of this year. And then, on a dime, the stock itself turns over the last week and has essentially caught that level. You see Citi upping it by about, 15, 20%. If that were to happen, I would expect that the rest of the street still feels positive about we'd see more of this.
Yeah, if you take a look at the analyst breakdown, there are 48 analysts that cover Alibaba. 40 have a buy rating. This is according to Refinitiv, Workspace, and I'm not sure what they're calling it now. I think it's called Workspace now. The other 8 have a hold rating, so no all-out bears there. The median price target, according to Workspace, is $111. So that's only a few dollars away from where it's currently trading. But because, from my time co-hosting with you, Alex, I know you like to see the dates of when analysts actually make those changes. We've only seen 9 adjustments from the 48 analysts. There have only been 9 that have actually adjusted their price targets since China announced these stimulus measures in later September. So one would think that we could see other analysts play catch up based on the fact that Alibaba has had such an impressive run higher this month alone, up more than 30% or right around there. So I think that up almost 30% just in September alone. So you would think that maybe we will hear from additional analysts, and who knows, maybe 136 won't be the street high soon enough, but not marching any closer to that level today.
Yeah, and I mean, gosh, an amazing story. One that I've enjoyed actually now, like reading back on, because it's like we've been waiting for some degree of like a catalyst to the upside for Alibaba shares for quite some time. So naturally, it does feel like some of these analysts are a bit late to the call, but they usually are. So no harm there. But we'll leave it there. We'll go ahead.
I mean, I think it's also. I mean, we knew China was probably going to do something to try to get their economy back on track. I think that it still remains to be seen what these stimulus measures actually do to get the economy, in terms of really helping. The economy's been ailing, so, to see the positive impact there. So, yes, they are reactive, but to their credit, it's not necessarily, I mean, they kind of had to react based on what China actually, the measures that they announced.
Okay, and I think also a really good point that you made, I believe it was earlier, that we don't exactly know what the stimulus means in terms of like dollars and cents exactly yet, which I also think is a good point. So I can understand being a bit late to the call, as I'm late to the story myself, so I fully understand, but we'll leave it there. Appreciate it, Caroline Woods, New Markets correspondent. And now we look at trading this name. And so when it comes to trading this name, we've already looked at a neutral example trade, a more neutral to bearish. So now when it comes to Alibaba, we're leaning into a more bullish stance, for example, versus of course.
Yeah, and a couple things too, building on what you guys said. I mean, when you have something systematically changed, you kind of got to throw out old information, right? Because it's a new game essentially being played now with all those measures being announced. So previous analyst reports, to Caroline's point before that, probably don't carry the same amount of weight. But how could you expect a 30% move in 1 month either? So at the same time, I give analysts a hard time, but this one would have been tough to catch fully. As far as a trade, though, the stock peaked out in the early parts of 2023. It made a run similar to this, and it peaked out around 120. So that's sort of the next level on the chart that if it were to continue to kind of
my RVX is ready for pickup.
The target, and that's what we targeted with this particular example trade. What we looked at was buying a call calendar, so another one of our kind of throw the dart strategies here, Jenny. 120 call calendar, selling October, buying November. $2 debit means $200 in risk, with the chance to, of course, watch that swell if it does go towards 120 over the next few weeks. Best case scenario would be a move right to 120 and have it be right in that expiration of that short option, as that's when that short option will work towards zero, but that longer dated November option would still have some value and it'd be really close to half the money.
Yeah, and I would say this has become, again, not to discredit the analysts, but I've actually enjoyed stories where there's like a fundamental shift and there's reasoning behind so many of the price target raises or at least updates. So I appreciate the shift in story to then warrant so many of these analysts coming in, updating their coverage. But we'll leave it there for FOMO. Now coming up next time, talk another area of the market that is definitely garnered this FOMO type feeling, that is anything involving these alternative energy stocks. Constellation Energy ripping, Vistra Energy ripping. Some of these nuclear names seeing some phenomenal strength as of late. We'll dive more into why coming up next.
Inverse head and shoulders on Tesla. I don't know, I think we just need to relax. This station's talking bearish. Do. Da 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 da. Yeah, Pow's coming up.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to look at some of these energy stocks like Constellation Energy, which is now, I believe, the third best performer in the S&P 500 this year, making a phenomenal run. We're up 122% this year, 32% this month, slightly higher today, while still being off of its all-time high by about 4.6%, off of lows by 153%. And Alex, this is, I think actually we're following, Alibaba has been very interesting over the last week, but so have a lot of these energy stocks. This Constellation, to give them credit, has been somewhat interesting all year, but then you look at names like Vistra Energy, VST, which is now the best performer in the S&P 500. I mean, this is amazing. Again, gone for 1 week, no longer NVIDIA at the helm or the crown of the S&P 500 best performer.
Yeah, one of the things I think is more, kind of interesting about just this utility space as a whole, of which Constellation and clearly Vistra have been sort of the best performers and are very indicative of this, is that you could lay out a scenario where they did well in a couple different scenarios. And what I mean by that is, oftentimes utilities as a whole, because they do pay a dividend usually, and they have so much debt to kind of maintain their operations, they're very, very interest rate sensitive. They're oftentimes, particularly for portfolio managers who maybe have a mandate,
I'm here.
To be only
Randy,
some facet.
I went for a walk, and then I went and made me a
risk off.
I'll tell you exactly what I did, Randy. I went into the kitchen, grabbed a lemon and cut it in half. Then I squeezed the juice out of the lemon and put it in my water. Now I've got to ask you a question. Do you think it's healthy to drink cold water or warm water, room temperature? I'm getting mixed reviews. Ask your lovely wife. You Mexicans say warm water. That's what I was thinking. But they live in Mexico. I've been drinking cold water out of the fridge. No ice. I never put ice in my drinks. No ice. But I am hearing different. I think it depends a lot if you're unhealthy. It's better to drink warm water. But I'm debating if I want to start drinking it warm. I don't get the upset. I get a nice little tingle feel. I just love cold water. I might do an experiment for a month. I never put ice in it, so it's not cold, but it's refrigerated cold, which is still cold. I've also heard that it burns more calories. Jenny,
great rating on shares. They raised their price target to $279 a share from $265.
I love you, Jenny.
And the new price target is based on this valuation of around 30 times their per share earnings, which they're expected to produce in 2025, reflecting that investors now have a clearer view of how fast profits may grow over the long term. The analyst also did mention historically that Constellation stock has traded between around 12 and 28 times earnings, so it is at least being projected now to be a bit more costly on a price to earnings ratio, but they do believe this is an important catalyst and demonstrating the overall AI momentum will continue to grow, with nuclear becoming a really interesting part of that conversation. So, I mean, I think that, again, understanding the ways in which energy is going to be required to build out AI, everything fits together. It's like a puzzle I like. It's worth solving, I think.
Yeah, and I think that's your upside, right? That's how you get these charts that look like Constellation, look like Vistra. But then I also kind of laid out how they can have that defensive component as well as a sector. And so I think whenever you can have sort of this kind of, this is what we always argue about Microsoft. It has such like a staple component to it within technology. It's in all these different devices across corporate America, but then it has these investments into OpenAI that have sort of these upsides to it as well. So I think some of these utility players have a lot of those same kind of dynamics.
I totally agree. I think this will be a fun one to keep watching into the back half of the end of this year, as we're already there as we enter fourth quarter, which is ridiculous. But we'll leave it there for this segment. Coming up next time to revisit these Chinese stocks, we're looking at the Chinese EVs now, specifically NIO, which is up 5% today. Kevin Green will be joining us to break down why, coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Do-do.
Welcome back to Next Year Investing. It's time for Under 30. Today we spotlight NIO. Joining us now for more is Kevin Green, Senior Markets Correspondent for the Schwab Network. Kevin, all right, now I might be a believer in this China stimulus. It's even got the lowly NIO turning around as the stock's up 70% over the last month. That is just astronomical price performance for a stock that had largely fallen out of favor with all the competitors that have come online within China for EVs.
Yeah, I'm right there with you. I mean, even today up 5%. I mean, this is after some of this China stimulus news that has come to the market, and then also some investors actually getting into this name here. Now, NIO is actually reporting that strategic investors are willing to put up around $470.7 million worth of investment into the new shares of the company, as well as NIO investing around $1.4 billion into the car company itself. Just shows the optimism that they have for this name, as well as the competition within the space, maybe some of the technology that they're able to offer compared to their competitors. But once again, this is just the enthusiasm and some of the ways that Chinese investors are really trying to express their optimism when it comes to their markets. And this has been a company that has been, as you kind of said, like left for dead, and now we are seeing a little bit of a revival. I think the big question now, Alex, is if this is going to be sustainable when it comes to the price action. Could there be more in the tank for this name, or are we going to see maybe a little bit of a reversion once we get closer and closer to earnings? But these stimulus measures that have been put into place, these new strategic investors are the reason why we are seeing the stock catch a bid. And I think it's a welcoming sign for those that have been holding this name for a very long time and have not seen a price appreciation like they expected.
Okay, so Kevin, I'm curious your thoughts on any potential for this to be a short squeeze, because I'm not discounting that they got a massive amount of funding, don't get me wrong, and that obviously anytime that you're able to get extra cash, it's huge, but NIO has also been a bit of a failing trade for quite some time. Zoom out.
Come on, man.
See this nice move to the upside. So, I mean, is this like right now a lot of these investors trying to take advantage of the current stimulus situation?
I think so. I mean, there might be a short squeeze component that is taking place, also a little bit of a gamma squeeze. I mean, there is a lot of options activity that does take place on this name, well, a fair amount on a relative basis. So there might have been some market makers caught off guard for now, and this is kind of the result of that taking place. You know, when we kind of talk about some of these other names, though, you know, outside of NEO, talk about the Alibabas of the world, JD.coms, the Baidus, they actually were not significant short targets in the market. So a lot of these investors, a lot of this price movement has been new investors coming into these names. I would suspect that that's also the case when it comes to NEO. So maybe initially a little bit of a short squeeze, but I think there's more longer term vision for a lot of these investors than what we've seen in the past.
Kevin, when you look holistically at this, as you're kind of tying it to, you know, the Alibabas, the Baidus, I'm just looking across kind of the Chinese EV names in general. XPeng, after popping earlier, has actually turned red on the session. Li Auto, of course, it's had a really nice, you know, month, over 30% to the upside, but it's only up 1% now. I know this story is a little bit more NEO specific, but the China stimulus in general is kind of broad, and it's kind of, you know, kind of this giant sweeping performance that we've seen across all these names. Are we starting to see signs that that kind of euphoria around that announcement is starting to maybe peak out a little bit, and it's going to take more specific stories like what we're seeing in NEO to keep some of these moves
like
on
the
same trajectory?
That might be the case. I think that's the biggest.
Wouldn't you say the fat cats got ahead of themselves?
When it comes to the China trade, need to
just like Tesla.
I mean, the economic data is probably not going to be that.
How Walmart nailed its digital overhaul.
It can take 4 to 5 months, or even longer than that, to actually be reflected into the economy.
I hardly ever trade Walmart.
These new measures are actually holding. You could look at 3 different data points. I would look at industrial production for China. I would also then look at the import-export data, and specifically the import data when it comes to energy products. Are they importing more crude oil? Are they importing more gasoline? And then the last one that's a higher frequency data point is the USDA import-export data, or the export data that we have for the USDA. And if you are seeing an increase in exports or orders being placed from China for soybeans and for corn, those are going to be your 3 areas where, you know, last 30, 40, 50 years have been really good indicators that China stimulus measures have been, successful. And so I would say that keep those in your playbook here. Are we seeing maybe a little bit of a fizzling out of the enthusiasm? That might be the case, and rightfully so. A lot of these stocks have maybe moved a little bit too far, too fast for the time being. Doesn't mean that China shares themselves cannot continue to rally. Maybe some of the ADRs over here might be a little bit more expensive.
It's going to be hard to drink water warm.
The options market, which IV for a lot of these names has just skyrocketed.
Yeah, and I mean, definitely an added interest in some of these names. I mean, the volume on NEO is the whole reason I was drawn to it today, just because it trades in substantially so. It was one of the heaviest traded, at least across platform that I could see. So we'll leave it there, but great breakdown and great insight on some of the strength we're seeing these Chinese names. Kevin Green, Senior Markets Correspondent for the network. And that'll do it for Alex and myself for Next Gen Investing for this Monday. Of course, we've got a whole week long of lots of coverage. But we have the watch list coming next with Nicole Petalidis.
Nicole Tetalini. Here's a disclaimer. I don't think I've ever seen a disclaimer on here.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means.
Analysis.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader.
Oh God, her job.
With a history and a geography degree.
My job as a trader is to make money. Unions sell on a stake talks. Pensions are a problem. No shit. I don't see how people can pay pensions these days. If you still, I mean, they are depleting, that's for sure. I've never had one. Mercury System has delivered processing boards. I want to get updated about the wars. It's now 1 o'clock.
For you, David Dietz from PPAC Private Wealth Management will join us and share a few stock picks to consider for your portfolio. And Christopher David from Hudson Value Partners will join us to answer the $300 billion question. What will Berkshire Hathaway do with all the cash? He has a very interesting theory. And our panel standing by to break down earnings from Carnival, which sent the shares of that stock lower, even though it did well in this quarter at record sales, has a good outlook as well. Stocks have been under pressure. I mean, this is the last trading day of the month of September, so it is a winning month. It's unusual because we haven't seen that in some time. But despite it being a winning month for the Dow, NASDAQ, and S&P, we are seeing some down arrows today. The S&P right now is down 0.5 point at 57.37. The NASDAQ's down 0.1%, 19,991. The Dow is down 128 points, trying to give it a go, but then drop back down further. Materials, consumer discretionary, financial staples, all with down arrows. That's the big picture. Oil and gold are mixed. Gold is pulling back by $8.50 after hitting some records last week. Oil's at $68.32 the barrel, but down about 6% this month, roughly. And there you have it, $16.74 on the VIX. For some of the biggest market stories here, Kevin Hinks is with us, host of Fast Market here on Schwab Network. A lot of folks want to know what's the latest on NVIDIA under some pressure.
Hi, Nicole. Yeah, NVIDIA under a little pressure as not only U.S. regulators are putting pressure on NVIDIA, now it's China regulators putting pressure on NVIDIA. What they're doing,
China,
they're pushing their own people to buy AI chips locally. Here's the story. NVIDIA stock was falling early Monday as renewed
I don't blame them.
efforts to boost its own semiconductor sector to counter U.S. sanctions. Beijing urged local companies to stay away from NVIDIA chips. Now, you know, this is a communist country. When the government tells you to do something, chances are you probably do it. They're promoting Huawei chips and Cambricon Technologies Corp chips is what they're pushing for. So not only is NVIDIA falling under the scrutiny of
Oh man, my throat's killing me.
now they're getting pressure from China to buy local. So a little bit of news. Remember, we talked about
Go have a glass
what
of
could
milk.
possibly disrupt or stop the NVIDIA rally. Well, it's valuation, one thing, and then it's regulators. Nicole?
Right, understood. I mean, we started to hear some of that.
Understood.
But the pressure is on there. But to your point, I mean, it certainly has been a great performer, but under some pressure now. Let's talk about Stellantis, because, you know, this outlook from Stellantis is weighing, and we were talking about Tesla and some of the other automakers, but it looks like they all have some pressure to a certain extent. Let's hear what Stellantis is saying.
Yeah, Stellantis, the maker of
We'll be right
Jeep
back.
and Chrysler and Ram.
That's something
They're
tickling my
under
throat.
pressure now because of downgrades. Remember, a week or so ago it was General Motors, then it was Volkswagen, now Stellantis. Stellantis, shares of Ford, General Motors, Stellantis, after the Jeep maker cut its 2024 financial guidance, citing deteriorating industry dynamics and Chinese competition. They now see full-year adjusted operating income margins coming in 5.5% to 7%, down prior from double digits, Nicole. Free cash flow is now expected to be negative 5 billion euros to 10 billion euros from the prior expectations of positive free cash flow. So the softness, the lowering of earnings expectations and numbers in the big automakers, making its way from GM to Volkswagen and now Stellantis, Nicole.
All right, thank you for all of that, Kevin Hinks. Great to see you. Thanks. Now let's take a look at the bigger picture. Pete Najarian's with us, co-owner at Market Rebellion. Pete Najarian, great to see you. I'm so glad you're with us today. What stands out is we have the Powell headlines breaking. We're ending the month. We had the 50 basis points and some records for stocks last week. What's on your mind?
Well, I think when you look at September, you've just got to be shocked at all of the different things that were going on throughout the month. And if you go back 3 weeks ago, we were looking at CPI, then we were looking at PPI, and there was a huge pause in the markets. It seems like the data has truly taken over the trump card, even over earnings. Now, we're a couple of weeks away from getting earnings season getting going again, but if you just go back to that CPI, PPI, obviously we had that huge reversal move after we flipped around, and we've been off to the races. But it was 3 days of being very silent in the options market. We were trading about 40 million contracts a day. We actually averaged so far about 48 million per day for the year and for September, and it was interesting to watch, because suddenly after the 40 million and everybody all of a sudden got CPI, PPI in front of them, the volume came right back, and people got very excited again, and that lifted up the markets once again. But then the next week, it was about the Fed. And then the next week, there's always something about the next week. And we've been very much on pause for a while the first couple of days. And as a matter of fact, today's a great example of that. It seems a little bit quiet out there right now. It's the end of September. It's been a pretty amazing September, especially when you look across and you see where the different lifts were coming from. Obviously, the Chinese cutting rates, that was another piece of the puzzle. And it just seems like there's some sort of a category that's going to be very macro, and we used to look past that a little bit. We're no longer doing that. That is front and center. And then, of course, anytime you hear Powell talking like we're talking about now, that is something that's going to be very market moving.
Yeah, without a doubt. I mean, when you go back to August, on August 5th, we had the down over 1,000 points. I mean, you know, the question was there further to go to the downside? But people stepped in and bought, even though there wasn't clear capitulation, there wasn't clear panic or heavy volume. People stepped in and bought. And is that your feeling, that each time we pull back, people will step in and buy? Would you buy the dips?
Yeah, I think that is the trend. I mean, we've been watching this, as you pointed out. I mean, August 5th is a great one to go back to. You can even go back into September, where we had that big flip around as well. And then suddenly we started lurching back up to the upside. It seems like one of the ways that you can keep an eye on this, at least I am, I will tell you, is the volatility index. Because on the most recent drops that we have seen, we didn't see that spike in volatility that you'd normally be looking for. We did get it back in August, yes. But in September, when we had some of these moves that were to the downside, we never really saw the volatility get over much more than, I don't think it got even over 22. And that was a little bit surprising, because the markets felt like everybody was trying to put their palms out. They were selling. They wanted to get out. and the next thing you know, we flipped completely around throughout the same day. And that, I think, is where volatility really did step up, because we didn't get that big spike to maybe 28 or 30. We got a spike towards 22, and now here we find ourselves between 15.5 and 17.5. That's kind of the new range, and it's something where people feel certain comfort, it seems.
Yeah, understood. And I know you're really a big fan of options. You think everybody should be using options. I think a lot of people are still buy low, sell high the old way, but you're a big believer in using options. You can explain that along the way. But I do want to get to your ideas on what might work in this market. We talked about power, nuclear power, data centers, and the other would be financials and investment banking. So let's hit the data centers and power, that side of it first. You have a few names that you're featuring. I'd like to hear why you think that's a win.
Well, when we look ahead, and we talk about NVIDIA every day. Well, part of that talk should also be, all right, well, what is that going to do to demands on the system when people need power? This is going to be a bigger jump than we have seen in a very, very long time when it comes to this jump for power. And I think a lot of that has to do with how are we going to get that power generation? It can't possibly come just from solar and wind. They aren't efficient enough. But nuclear is certainly an area that everybody's talking about. I think I heard you guys talking about this a little bit as well. This is a very, very hot topic, and we are seeing more and more of this coming to pass. And when you look at CEG or any of these various names that are in there, you could go to the power sources themselves. You could go over to the uranium side itself. Or you could just even go straight towards the CCJs of the world, the Kamikos of the world that are out there mining all of this. It's an amazing move that we are seeing right now. That is where people are going for their energy. The demands are going to be there. We can't keep up with the present that we've got. You can add in a little bit of the natural gas side of it as well. But I think if you look at nuclear, that is the direction that we are going. Whether you like it or not, I'm not trying to be political. I'm just saying with the demands that we have, that is the answer, and that is the answer that people are going for. Take a look at Vistra for just one example. Do you know that, and a lot of people probably don't follow that name, you probably feel like it's a little bit boring. It is not, and it's
Jarian, you know you're going to have an uphill fight with that.
Performance in the S&P. So it gives you a little bit of an idea that, yes, there is that magnificent seven, if you want to say that. I don't believe in that term. There's a lot of others out there that are competing, and they're part of this move as well.
Oh, how dare you?
Yeah, I mean, you mentioned Vistra, you mentioned Constellation, you have the Uranium ETF, URA, and CCG. Those are the names to follow when it comes to nuclear power. And yes, you're absolutely right. We've talked a lot about nuclear power, and even trying to do it with nat gas and CO2 to provide power. I had a very interesting CEO on KV last week about the IPO. And Vistra was a big mover last week, had some huge moves. So if people haven't looked at it, they better start paying attention. How about financials, Pete? I mean, this is something that you're also keeping an eye on. Investment banking, is that going to work better going forward?
I think so. We had a great first half of the year. Investment banking was really what helped carry a lot of these various financials to the upside. You look at somebody like Goldman Sachs and Morgan Stanley, Bank of America, Citigroup, you can go through down the list. But those that are involved in investment banking right now, I've been talking about this for multiple months. I continue to bang the table on this is the place to be. And I think it's because of the fact that the profits that they're able to gather from this is absolutely astronomical. I think deals are still going to be out there. There's so many different pieces of the investment banking side, but I can tell you, it is a huge performance side of what we're looking at when we look at Goldman or JP Morgan or any of these various names. I like those names a lot. I think that there are reasons I can understand why people would say, well, these have run, they don't have much more room. But I think because of the investment banking piece, they do still have room, especially those that are very, very deep into it. And we're going to see more and more deals happening, I think, over the next couple quarters.
Yeah. Are you worried, just quickly, we're out of time, that the port strike potentially for the East Coast and the Gulf, could this be monumental, or
yes.
Is it just going to be quick and done, or what?
I hope that it's quick and done. I don't know that I think it's going to be quick and done. This is something where I think they seem to be digging in their heels, and these are the kinds of things that really, when they do pop up, we've got to be very aware of what's going on and what some of that lag time is going to look like, all of that. Hopefully,
watch the spy.
I don't know how stuck into the ground that folks are on either side, but I'm hoping that we can get some sort of a deal done. this affects all of us. This isn't just affecting the rich or the middle class, but this affects all of us. So we really need to have this get done.
Yeah, JP Morgan saying 3.8 billion to 4.5 billion daily. That's what it's going to cost. Everything from retail to pharma, auto parts, produce, etc. Pete Najarian, thank you. We'll keep an eye on that story. And also Powell, who's speaking throughout this hour. Thank you. Pete Najarian, great to see you from Market Rebellion. Coming up next, Tom White standing by, and he will highlight unusual options activity for the day. How investors are looking to trade on recent news of Amazon, JD.com, and Ford. Stay with us. We'll be right back.
Oh yeah, here we go. You ready?
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
SPX. $280. I got one at 280.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12
The
p.m.
5735s.
Network.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. Tom White is with us, host of Fast Market here on Schwab Network. You have a few names that we're keeping an eye on. Amazon, which hit a recent high of 201, but then fell off, but it was clawing its way back up. Some interesting news to follow always on Amazon. Some of your thoughts on what's going on with Amazon, and you found a bullish trade today, Tom.
Yeah, there's some analyst commentary in Amazon today. Truist came out with a positive note on it, reiterated their buy rating, but they jacked up their price target to about $265 from $230 per share, calling it their top pick in big internet at this point. If you saw that dip there on the right side of this chart, that was post-earnings, right? The investments in capital that they're spending on AI investment has really, expanded, and that was, put some fear into investors after that report, and that was just after hitting those all-time highs that we saw in July. The analyst is basically stating that, the retail side of their business continues to do well. They've seen a resurgence back into AWS growth, which is that higher margin portion of their business. And then also advertising spend continues to pick up this year. And Amazon's already fulfilled $1.8 billion worth of advertising pre-sales into next year. So that's a positive there. And then Adobe Analytics came out in the last couple weeks and said, hey, they expect online sales during the holiday shopping season to increase 8.4%. And that's right in the wheelhouse of Amazon at this point. So, yeah, having a bad week. Of the last 4 trading sessions, it's been lower, but still up 22% so far this year. And I think some traders trying to take advantage of this little slide that we've seen over the last 4 sessions, because saw a call buyer in here out in the December monthly cycle, so 81 days to expiration. They bought 10,000 of the 170 strike calls, paid an average debit of $23.90 on these, so they're paying a hefty debit for these calls, but these calls are $16 in the money at this point. So the break even for this trader where they start to profit is going to be $193.90. That's about 4% above the current share price in Amazon today. And as I mentioned, 4 days in a row lower for Amazon when stocks are just below all-time highs. Pretty surprising there, but I think this trader continues to build on a position because the open interest levels on this strike in December 170s is pretty massive at this point already. They added on to that today by buying this 10,000 lot.
And Cantor's right in there with Truist, because Cantor also came out today, reiterated their buy rating, and they overweight, I should say, and they also maintain their $230 price target. So also in this buy camp, so very interesting. So you have Truist, Cantor, and then this big trade that you just brought to us. Let's turn our attention over to JD.com. Many of these Chinese names doing so well on the China stimulus last week, still holding an up arrow even today. Many of the names are up 10, 20, 30, 40% last week. But still, with that vibe going, tell me a little bit about the bullish trade you found on JD.com.
Yeah, some of the moves in this space.
They must piss somebody off.
Headline names, pretty astronomical. I mean, just this month, JD shares are up 50%. But if you broaden out that chart, maybe to a 3 to 5 year chart, it kind of reflects that, hey, these stocks have been severely underperforming. They trade at low valuations because a lot of investors don't think that they're investable. They think they're tradable, but not investable. But that stimulus, the bazooka of stimulus that the Chinese government's putting into place, has a lot of optimism going into a lot of these names over the last week or two. They did just authorize another share repurchase of up to $5 billion through the next couple of years, so that's been a positive. Also, the government lowered the reserve requirement ratio, cut interest rates on a seven-day reverse repurchase agreement, and then also trying to stimulate the housing market there. So yeah, a lot of optimism in a lot of these names. Remember, China's Shanghai was up 8% today, biggest day since the financial crisis, but at the same time, they go into their prolonged holiday week where the markets aren't going to be open, so maybe we won't get that lift that a lot of these China stocks have been providing. But with that said, we did see some unusual option activity in here, and this was shorter term positioning out in the November monthly cycle that expires on the 15th, so about 46 days to expiration. Trader bought 4,000 of the 48 strike calls, so these are far out of the monies. They paid an average debit of about $1.98, so that break even of $49.98 over the next 46 days. That's 23% above the current share price. So yeah, taking a long shot here on some far out of the money calls to the upside. I think the key with this trade, what this trader trying to set up, is you're going to get an earnings event, but then also giving themselves duration of about a month and a half in this position.
All right. And then last but not least, by the way, there are still people who think China's going to provide more stimulus, right? There are still people who are hoping for more. And you mentioned the holiday. Thank you for that. Okay, let's turn to Ford, because with Stellantis's guidance, warning, sort of a little bit of a cut there, and just
5706
come out, Ford and GM have been a little bit cautious. Volkswagen and Benz have talked about China slowing down. Ford here now, year to date is down 13%. I mean, it's all red. You want to pick 1 month or 6 months, 1 year, red.
Yeah, I think, the Stellantis, guidance cut and the deterioration of that the global industry dynamics may parlay into some of the older legacy names like Ford and GM, which are both down today. on this news, and I think it's rough treading for a lot of these domestic automakers just due to the impact from China that's having on their sales globally, right? China's pushing into Europe pretty hard at this point, some other areas across the globe, and they're undercutting prices severely. They're trying to build plants down in Mexico to make their cars to get around the tariff problems that they have down there. So yeah, a lot of problems, I think, maybe for the auto sector moving forward as affordability remains an issue. And while interest rates have come down, Nicole, that 10-year yield's kind of firmed up a little bit. So will interest rates on purchases of new automobiles remain at these levels or elevated at this point? Because everybody's waiting for them to come down to kind of spur growth in this sector. And I don't know if it's going to come, but we did see some bearish, unusual option activity in Ford. Not surprising with that Stellantis downgrade on guidance here. Out in the October 18th monthly cycle, so just 2.5 weeks to expiration, trader bought 25,000 of the 10 strike puts in Ford. Paid an average debit of only 11 cents. These are, not a lot of option premium in these out of the money puts to the downside here. By paying 11 cents, that break even for this trader, $9.89 over the next 18 days. That's only about 6.5% below the current share price in Ford, with put volume about 3 times normal daily average volume that we've seen over the last week of trading. So yeah, not surprising. I wouldn't be surprised if we saw
one hell of a knife.
Some more guidance cuts from some of these legacy automakers as competition heats up and slowing sales kind of takes hold.
Yeah, look, we're out of time, but I can't ignore the sell-off in the market. While you were talking, Powell's talking at the same time, and he acknowledged that he's looking at Powell expects 2 more quarter-point cuts this year. A lot of the rest of it was all decision-making by meeting, inflation is better. The rest seems status quo. That seemed to be the one line. Maybe a lot of people were still waiting on the 50 for November, but the market just sold off. And you also have, as you talked about Ford, the ports, and that's sort of looming.
Yeah.
Any final quick thought here, Tom? Because, obviously you have a lot of thoughts on the market and wanted to bring you into 2 hot topics that are happening this moment.
Yeah, as you mentioned, Powell just kind of, gave his commentary and saying that inflation was coming
Let's do it.
Everything's more balanced between the jobs market
don't stop.
and the 50 basis point cut to not see any more deterioration in the jobs market. But the market wants what it wants, Nicole, and I'm not surprised that we're seeing some weakness now with the S&P down at 0.5% due to the fact they want 50 basis points in November. And I don't know if it's warranted.
They do not want it.
GDP growth and economic data that's pretty decent.
All right, Tom White, thank you for that. The Dow is now 362 points. Tom White, every day here on the watch list with Options Corner, and I'm glad he was here for some of the Powell breaking news. Coming up next, David Dietz is standing by. He has some stock picks for your portfolio. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the
We're down to that 125 area.
Schwab Network's by the numbers coverage of the president.
That number I love.
Does this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Knock, knock. Number 1 broker here for the number 1 hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust
I've heard 25, not a 50.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Petalides, live on the floor.
Might see it break the 9.
Just saw a quick sell-off as Jay Powell is speaking right now. We'll continue to follow the comments. But we have some stock picks for your portfolio and big market commentary, of course, as well. He's a pro, been around a long time. David Dietz is with us, managing
Keep going.
and senior
Break it.
portfolio strategist, PPAC Private Wealth Management. I'm glad you're here, David Dietz, because we noticed the sell-off.
I got 199 average.
We heard everybody wanting 50 basis points in November. They got spoiled in the last round, maybe.
Well, we just got comments from Fed Chair Jerome Powell, and certainly they were bland.
There's 3 white soldiers.
Conviction about exactly what the path of monetary policy was going to be going forward, and so that slightly more hawkish tone, I think, has caused the market to trade down a little bit here. I mean, let's face it, we had on Friday the PCE numbers.
Yeah.
When you strip out food and energy, the core was just a little hotter than expected. We've got markets continuing to hit all-time highs. You've got massive stimulus, both fiscal and monetary, starting to emanate out of China.
125 to 170, 180.
For Jerome Powell to predict, a really cooler than expected.
And I've got others at 199.
But you said Friday is going to be key, right?
All eyes at this point are on Friday's September jobs report. Right now, most people are expecting around 140,000 jobs created. If that comes in light, I think people will again place those bets for a 50 basis point cut in November. And conversely, if we start to drift towards 200,000, you'll see people starting to, second guess the Federal Reserve and why they did a 50 basis point cut.
So we got to wait and see what the Fed does. You got to wait on the election. China stimulus has been done, but there's hopes for more stimulus. You may have the port looming, the port situation. That being said, how would you categorize how you feel about the market? Are you just in a wait and see mode? Are you bullish long term, or are you worried?
I'm getting a lot of messages on my phone.
Reasons to be cautious for market action through the election day. I mean, this is an election where nobody knows what's going to happen, and there's nothing that Wall Street hates more than uncertainty. Who's going to win? I've heard, for example, one major brokerage company said they like emerging market stocks, but don't do anything till after the election, because if one candidate's elected, then the tariffs are going to be so great as to put a wet blanket on
Now
the
hold this
prospects of those
115.
emerging market economy. So there's a lot of uncertainty.
I'm going to grab some more right here.
I do believe that once we get past the election, barring any kind of unforeseen catastrophe, I think that could be an ideal time. Why? You're going to see earnings grow as much as 14% next year. That's always the most important metric. Second, you've got basically a dovish Fed. As they say, don't fight the Fed. But of course, it's not just our central bank. Look over in Asia, we've got China, and they basically are all in now on stimulus. So your second largest economy is also adding a stimulus. Interest rates continue to come down. You've got the 10-year treasury under 4%. Most people say, I can't make my long-term retirement plans with 3.7% per year over the next decade. So I got to keep pushing money into stocks.
Look, everybody always wanted their money manager to make 5, 6, 7%. That was sort of the status quo, right? I mean, 3.5% or so, 4% wouldn't be enough. Let's talk about your picks. I know that you mentioned emerging markets, international, small caps, and real estate. Those are a lot of the areas that you like to follow. You're not saying Mag 7. A lot of folks think, oh, that's overvalued. You do have a couple of key names here. You have Bristol Myers, Hershey, and HP Group. Let's go through those one by one. Why do you like those, and why could those work over the next, 6 months, 12 months, 5 years? What are we talking about?
All of the above. All of the above.
Okay.
So let's start with the theme. The theme is all about dividends. 2 of the stocks have dividend yields that are almost 4 times the S&P 500. That would be Bristol Myers and BHP. Hershey has a dividend yield that's at least twice what the S&P 500 is. And if interest rates are coming
115
down,
to 130.
you're getting that 5% 5% of your money market, but you could be closer to 3.5% by next summer, people are going to say, where am I going to find the income? They're going to look for the income-paying stocks.
Right.
But history shows that it's not just a high dividend that makes
Blake
you a
it.
successful investor. It's a growing dividend. And what I like particularly, for example, about Hershey and Bristol Myers, these are dividend aristocrats. That means not only do they pay the dividend, but they cranked it up annually each year for at least the last 25 years. Just to drill down a little bit, let's look at BHP. I'm not going to give you Chinese names, but I love BHP.
Okay,
It's
go.
kind of an indirect way to play two things. One is the revival of the Chinese economy. It has not revived yet, but we can see they're going to do everything possible to get it back on its feet. And
220,
the green
one more
revolution.
little
So,
punch.
For example, just today, BHP is talking about 1 million more ton demand in copper every year for at least 2035. Copper is going to be needed for the Chinese real estate market. Copper is going to be needed for much of the new technology which is going to try and green our energy production. And of course, they're big on iron. Iron is a cyclical commodity, but if China is successful in getting back on its feet, BHP is in the pole position. What if I'm wrong? What I love about BHP, this is a company that's been around for about 170 years. It's the largest of the commodity players. And so industry bad news can actually be good news for them as the smaller, less well-capitalized competitors go by the wayside.
Yeah, it's interesting because you go for these dividend payers, they're dividend aristocrats, meaning that they've raised or they kept the same or raised dividends over 25 years, right? That
Blake
shows
it.
the longevity, that these are not
Get to the
no-no,
63.
they just show up. Hershey, where does that fit in?
Hey, tomorrow is the first day of October, and what comes at the end of October? Halloween! Your biggest holiday ever for chocolate.
I'm going to sell some here from 115.
A no-name player that you want to bet on, or would you like to bet on the largest provider of chocolates in the United States with a 35% market share? That would be Hershey's.
Yeah.
I'm thinking of Reese's right now, that combination of chocolate and peanut butter. So, here's a company who's got all these brand names, and if the economy, falls through the trap door or the economy starts to soar, I think people are still going to be eating chocolates. Now, it is true, their margins have been under pressure with huge
Fucker,
price
come on.
increases in cocoa and in sugar. But one thing we know about commodities, it is cyclical. As prices go up, more acreage is put into production. I think those prices will go
One more
down.
little
Again,
spike.
if you're the largest player, tough industry conditions are good because the smaller wannabes go away back into their caves.
Yeah.
I'm out.
Michelle Brush, excuse me. She's the CEO, very, very well thought of. Also, there's a lot of people who prefer salty snacks, not just chocolate, and they made some strategic acquisitions in the salty snack food.
I'm all out now.
They may be able to make some combos, get a little salty and chocolate in one bite.
Yeah, and they do. You're absolutely right. All right, good to see you, and happy Halloween.
Thank you, Nicole.
We know who's going trick-or-treating. Somebody, I love chocolate. I can't speak for you. But anyhow, David Dietz, great to see you. Thank you so much for being here. David Dietz of PPAC Private Wealth.
Okay, that's worth it.
For joining us on the show today. Coming up, we will answer the $300 billion question, and that is, what will Berkshire Hathaway do with all that cash? Our next guest has a very interesting theory. Stay tuned.
Yummy. Shit, let's keep going. Oh well, what's it at now? The 35s. Oh God. I did it again.
every morning.
I was in the 35s.
Always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network.
Here's one of my trades. I did about 1,200.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms.
I'm happy.
Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Room temperature. Mustang says room temperature. I think I'm going to start drinking at room temperature because there's more side effects with your organs.
But the Dow went down about 384 points, but has been clawing its way back. And this has all happened over the last half
It might be hard, but I'll do it.
Has made his comments in the National
I'll get used to it.
for Business Economics. It was there that he did say some of the status quo, like the
Man, I like that. That was nice.
Solid but cooling. Inflation has eased, but also sort of alluding to or mentioning 2 more quarter point cuts this year.
Had me going there for a second because I got in that one trade and it dipped all the way to
Points, and maybe the market sort of
95 cents.
came back on that. But we're
I mean, I was a little worried there. 90.
that things are more in balance to his point on employment and
But that just seemed like an overreaction. I mean,
sort of sold off and came back, and that
it could be a catalyst to be bearish for, for a little bit also. But something like that looked to me like a little bit overreaction. Now, why did I trade the SPX over the SPY? Because there's a lot more money to be made on a less amount of money. It's like I had 4 calls. My average was on this one was 199. I got out at 255. And I could have run it up to 360. And my other ones, I got in at 125, sold them at 180, and then I got in at 115 and sold them at right around $2. So that, to me, is a pretty good trade for fast money. I mean, they're at 470 right now. I ain't got the balls to hold them. Oh well. But that there was well worth it. Glad I didn't jump in them before the Powell speech. And I was eating a sweet potato. I just fell in love with these sweet potatoes. Throw a bunch of butter on them. In my diet, I'm not supposed to eat carbs, but I have this chick keep telling me you got to eat some. I mean, she's bona fide, smart, gets paid good money to talk about that stuff. I said, well, give me a couple good carbs. Anything. If I throw a bunch of butter in it, it makes it even better. I like my diet so far. The amount of money I'm going to save eating just meat. No more buying sweet and sour sauce or ketchup or pickles. I mean, that stuff can add up. If I just go buy hamburger, eggs, and butter, steaks and butter, and eggs and bacon. Steaks are a little expensive, but add some cinnamon. Might do that, but man, these things are sweet. I love them. And I've been a rice eater for most of my life. I left about $3 grand on the table. Again. I can eat that up, man. Fucker, 440, 470. Jesus. Oh. 24 calls. What's 24 times 300? Or, yeah, about the average of 300. I'm just guessing. On average, $7,200 I left on the table. No, that ain't right. Yeah, that's about right. Damn. God. I mean, you have to be thankful, but yet you get nervous. I get shook up sometimes when I'm stuck in a trade and it drops on me like that, and I'm down like $300, and then all of a sudden you hit the bottom and you buy the dip and you scalp it once and it dips again and it goes 90 cents, and then you're going, oh man, should I take it back? Should I jump in again? I'm stuck in the first one. I knew it was an opportunity, but it might not last. I've seen that happen so many times. You know, just a market reaction, and then they recover pretty fast because people are stuck in the trade, you know. From the initial, before he's speaking, you know, they think it's going to go up. They're ready for it to go up. Or they get it, like I did, halfway down the knife, and you get excited and you want to jump in it. Then you get stuck. But dang, who's keep? Whew. Yeah. Still, yeah, it was a good trade, but man, leaving that much money on the table. Oh well. God. Randy! I'm still happy. Oh boy. Sweet potato pie. I was eating a sweet potato, trading the SPX. Turned around, went in the kitchen, and I didn't know what was next. So when I come back, I about had a heart attack, and she knifed on me. So I bought the bottom and added a few, and I climbed up that tree.
A lot of upside here.
Yeah. And you would call today a buy.
There's another buck right there.
A fair value of, I believe, $28. It's at $18 and change.
I mean, them 57.35s are right outside of the money.
I think, you know, where it stands now.
They were 6 notches down.
For investors that are looking to get into shares.
And Ed Batowski is Carnival.
250 to 390.
Norwegian and Royal Caribbean, even
Boom.
Viking. Tell me a little bit about the other names. Do you dabble in those as well?
No, I'm strictly,
right there.
When it comes to cruises,
140
I've been
bucks.
very focused just on Carnival. Why? I have no idea why.
God darn it. Now they're at 4.
But I know
Shit.
that Royal Caribbean is also, you know, going to
470.
They're going to kind of, you know, correlate with each other. So I don't think there's much of a difference. I do believe Carnival went through some refinancing that
Carnival?
Royal Caribbean.
Who the hell are you talking about?
So I think
Carnival.
there's some details there that Jamie maybe can cover, but I do just focus on Carnival Cruise Lines when I look at cruises.
It seems that a lot of the guidance was good news, but there was one part where they were focused on the adjusted EBITDA forecast for the fourth quarter of 1.14 billion, which was a little softer than 1.16 billion from the analysts. And maybe is that why it sold off, or was that just
that was a lot of fast work.
We also saw, by the way, Royal Caribbean and
Here, I want to show you this.
what's with the sell-off today, do you think, Jamie?
Okay, we had the knife. I'm going to show a trick. If I could have a day like this every day, man, I'd be so satisfied. I spilled sweet potato on my keyboard. Three White Soldiers is a trading idea that maybe you'll have a continuation to the upside. Well, it could have been a nice little tritz. Yabba dabba doo. Still killer reaction. Thank you, Pow Pow. Fuck, we're down to 180 already. I'm not going to trade this. I don't know. I don't want to push my luck. Shoot, man, I left 7,200 on the table. You don't know. I mean, I'm listening to Schwab today. They're talking bearish all day long. So I mean, they were spot on. You listen to CNBC, it's a whole different story. I feel too damn full to go out and get something to eat and celebrate. I am going to go in there and get some water. I'm going to start drinking warm water for a month and see what happens. After I finish these 2 jugs of cold. Here. It's power hour.
Move over time to a neutral stance. Well, the market wants neutral tomorrow, as you know. They want rates to come down quickly with a machete every quarter. And I don't think Jerome Powell's going to do that. I don't think he's set up to do that. And his comments today allude to a more slower path, paying attention to the data and making adjustments based on that. That right there goes against the spoiled nature of the markets that want everything quickly. So I think remember, Jerome Powell also said the economy's in solid shape and we intend to use our tools to keep it there. I mean, these are positive comments that the overall market should like, yet they found disappointment in some of his comments on the pace of interest rates going down or the fact that he'll pay attention to the data. How dare he?
How dare he?
So if that's the case, we'll of course get
bunch of jobs data later this week. What is it that the market wants from that data? Because you talked about the labor market being solid but cooling. Is this the whole bad news is good news thing, or is good news again? What is it?
Well, the problem with navigating
It's a diamond ring on your finger, baby.
Is that you don't want it weak, and you don't want it strong. What I think.
If I make $100 million, will you fall in love with me?
Data point for Friday is something at or near expectations, like 130 to 140,000 jobs, 4.2 interest rates, wages that go up 0.3 and maybe 3.6 or 3.7. Remember, they came down from 3.8 last month. So moderate numbers like that don't shake the confidence of the market on either side, frankly. And is that a difficult job? Yeah, you bet it is. But there's the problem of a soft landing. It's a great theory. It sounds wonderful. It's just never been done, Caroline.
I guess my question, though, Kevin, is will inline data be what's going to move this market higher from here? Or is it just drift?
Listen, I think inline or data that doesn't surprise the market will ease the fears of the overall market, and that could mean a good good fourth quarter. But the data's got to set up. The rhetoric on interest rates has to be there. I don't know what lies ahead in terms of economic data, but the market navigating for a soft landing has to get the data right. It can be strong. If you pick a side, we'd rather have slightly stronger data and work on the consequences of that. What you don't want is data that starts to greatly weaken. Everyone can stomach yields going slightly higher, but they don't want yields spiking higher or spiking lower, frankly. And that is what Jerome Powell has to navigate here, Caroline.
Right, because he said he's lowering interest rates because the economy is strong and can sustain, and lower interest rates will sustain that strength. We don't want a Fed cutting because the economy is weak, although some say that that's the reason after all. All right, we'll leave it there. Kevin Hanks, thanks so much for kicking off the show with us. All right, now for a look at a few stocks on the move. I'm joined by Jenny Horn, markets correspondent here on the network, and of course co-host of Next Gen Investing. So Jenny, you're taking a look at a few transport stocks today. FedEx, UPS, C.H. Robinson, all higher today as this strike looms for dock workers. The deadline is midnight tonight. Sounds like we could have, 25,000 people walking, and that could complicate a whole bunch of things if they do. So bring us up to speed on that potential strike and why FedEx, UPS, and the likes are rallying today.
Yeah, so this is a really interesting story, Caroline, because it doesn't seem like we're expecting any relief from now until, of course, what would be the deadline today. I mean, starting at technically midnight tonight, so Tuesday tomorrow. But the strike that we're expecting could linger as far as the U.S. East Coast all the way down to the Gulf of Mexico, beginning again tomorrow if we're not able to reach a conclusion. But the United States Maritime Alliance, known as the USMX, does represent all of these employees, that 25,000 roughly employees that you mentioned, and they do refuse to address. They said that right now the United States Maritime Alliance is refusing to address a half century of wage subjugation. So the union members walk off the jobs. That lingers from Maine all the way to Texas. It would be the first coast-wide ILA strike since 1977, affecting the ports that handle about half of the nation's ocean shipping. So you can understand why it's a pretty big deal. A source did say that no negotiations have taken place from Sunday, at least, and are currently planned again before tonight. So that would lead many to believe that this strike is imminent unless we are able to reach a last-minute agreement. The union did say previously the strike would not be impacting, though, military cargo as well as cruise lines. But I do think it's worth noting the White House has said, according to a spokesperson as of Sunday, that senior officials have been in touch with USMX representatives, urging them to reach an agreement fairly and quickly.
Meatloaf.
However, President Joe Biden has said he did not intend to intervene to prevent a walkout if dock workers failed to secure a new contract by this October 1 deadline, saying that it's collective bargaining and he does not believe in Taft-Hartley. That is basically an 80-day cooling off period under the federal Taft-Hartley Act, in which right now a lot of labor disputes can sort of be elongated. He is saying he's not going to take that path. So they're not expecting any sort of last-minute savior from the president or the White House right now. A later stoppage, though, could cost the U.S. economy billions of dollars. That's putting it lightly, but hurting American business outside of just these 25,000 employees. For months, the union has threatened to shut down these 36 ports that it does cover to right now appease a lot of these automation projects and just various advancements that have caused employees to work significant overtime. So the dispute is worrying. I think that we're expecting that it's pretty much going to happen, which is maybe why we're seeing some relief in like a UPS FedEx today, is that we're not really expecting anything to change between now and, again, deadline at midnight.
Okay. All right. Well, we'll keep an eye on that story, and it sounds like we'll know soon enough. Jenny Horn, thanks so much.
You're doing a good job, Caroline.
All right, I want to bring in my next guest. Joanne Bianco is investment strategist, client portfolio manager at Bond Blocks. Joins us now. Joanne, thanks so much for joining the show. Really great to have you.
Thanks for having me. Thank you.
So, Joanne, I want to ask you, because the Fed has made it clear that interest rates are moving lower. Kevin Hanks was at the top of the show saying maybe not as fast as the market actually wants, but we haven't
stick a big old diamond on that necklace of
play out
yours.
in the Treasury market. We've seen it tick higher in the 10-year yield, including
On the
today.
first
So
date.
just explain to me what's going on there.
Yeah, Treasury rates have backed up a bit since the Fed meeting, but that's
She was
really
just sizing me up right
alarming
there.
in our opinion, because if you look at how big the move has been since the beginning of July, it's still a pretty sharp rally since if you look at it overall.
Okay, so strong month, strong quarter for the fixed income market. What comes next?
Yeah, it's been a very strong quarter for the fixed income markets, and it's increased the year-to-date gains in all the top performing sectors. And so we think that there could be more of the same in the fourth quarter, that investors shouldn't wait necessarily to increase their allocation to fixed income, and in historical data suggests that adding to credit sectors or extending duration tends to outperform cash-like instruments in a Fed rate cutting environment. So we're telling our clients to focus on these resilient credit markets that we're seeing, both BBB and high yield corporates, and then also to move out in duration in U.S. Treasuries.
Okay, so let's talk a little bit more about what that looks like in terms of specific investment ideas. Starting with duration, you say move out on the yield curve. Just explain a little bit more.
Sure. I mean, if investors are invested ultra short or in other cash-like instruments, we're recommending that they swap out now to reduce their reinvestment risk in this declining interest rate environment. So if they're in like 3-month, bills or whatever, then we're saying just even start with our X-half ETF, which is a 6-month target duration U.S. Treasury ETF. But then if investors are interested in the potential for more price appreciation, they should go out further on the curve, maybe 3-year, 5-year, 7. We have ETFs for all of those time periods in our Treasury suite.
Okay, and then your next specific investment idea is prioritize income. How so?
So that's where we're still talking about investors adding to credit exposures. People talk about spreads being somewhat tight. Yes, but they're tight for a reason. They're tight because fundamentals are really strong in corporate credit, and they especially are benefiting asset class like corporate bonds, BBBs in particular on the investment grade side, because why not get the extra coupon income that you can get from BBBs. And so we have 3 BBB products, the short, intermediate, and long BBB ETFs. And so we're recommending that investors consider the intermediate exposure in BBBs, 5 to 10 year exposures, because we think that they'll be able to generate great income plus total return from price appreciation.
Okay, and then finally, tap into opportunities in U.S. high yield.
Yeah, and the high yield continues to be one of the best performing asset classes in fixed income, triple C's in particular. They're up over 11% this year. They still have the best yield that you could get in the public high yield market or across most of fixed income. And so you're in this supportive economic environment where we are recommending that investors continue to consider going all the way down to triple C credit quality because we think that they're being paid for the risk.
Okay, so talk to me about your expectations for the Fed's next moves. We were talking about it at the top of the show. The market might want the Fed to get to neutral ASAP. Powell made it seem like, it could take a little bit longer. Between now and year end, how many more rate cuts do you think, or what are the amount of rate cuts that you think we'll see from Chair Powell?
I mean, we take them at their word in terms of their data dependency. So we will have a big number on Friday with the non-farm payrolls. We'll also have more numbers in terms of inflation before the November meeting. And so what they have indicated in the dot projections is another 225 basis point rate cuts before year end. If that's what our idea is that they would do. It's just if we could see much weaker data than expected, then maybe there would be another 50 basis point rate cut in there before year end.
All right, we'll leave it there. Joanne Bianco, investment strategist, client portfolio manager at Bond Blocks. Thanks so much.
Yeah.
Thank you.
All right, sticking with fixed income investing, our next guest has recently pulled out of his 10 and 30-year Treasury positions. Stay with us and find out why he did just that. Coming up next, Market on Close. We'll be right back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Since I've started my diet, I hardly ever have any plaque on my teeth now. I mean, that's got to be excellent.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. Joining me now is Lee Munson, President and CIO of Portfolio Wealth Advisors. Lee, thanks for joining the show. Great to have you.
Thank you.
So we were talking about fixed income investing ahead of the break, before the break, and you actually say you've recently gotten out of all of your 10 and 30-year Treasury positions. Why and where is that money going?
So a little bit of context. I started nibbling last August. I really started loading up the boat as much as I could back in October of last year. I mean, you know, you're seeing the 10-year almost at 5%. That made sense to buy. Remember, people were saying that the 10-year was going to go to 8 to 10 to 13% if you watch some other stations. So now that we've had this first Fed cut, I just simply looked back. I talked to my analyst. I said, you know, get on your Bloomberg terminal. Tell me what generally happens about a year later. And there's really only been one instance, about 2007, where those long-term yields are actually lower a year later. Usually they're floating up 25 to 100 basis points. So when I look at what I can sell, you know, my 10-year now at, below a 3.8, a 3.7, that makes good sense to me because I still got short rates at a 4.7, and we're not, 65% of people think the Fed's only going to cut a quarter back in November. So I've got time before those short-term rates start matching the 10-year. Here's what I'm doing. I'm taking profits, because I bought my treasuries right during a panic in October. Now I'm harvesting them. And now I want to see if that 10-year over the next 12 months, that 30-year over the next 12 months, floats a little higher like it does over the last 5 decades, right? Especially if this economy heats up. See, I have a fundamental different belief about the system right now. I think we're going to have next year a rhino market, a recession in name only. So we'll probably see a broadening out of markets. What everybody was talking about that shoulda, coulda, woulda happened maybe a year ago, I think we'll start seeing that. If the Fed is really, going to accommodate and jack up the system with liquidity, then we should see markets go higher, and we should see growth expectations go higher into next year, not go down. And really, the 30-year is about growth expectations. Short-term rates are about inflation. So you kind of got to separate those two. I think for somebody at home, I would be cautious about jumping into longer-dated treasuries right now. I would like to see how it goes. I want to see what earnings are going to look like over the next month. Because if we don't get a lot of downward revisions to equities, and we're still looking at 295 or better, cash earnings on the S&P going out the end of next year, you could have those long-term rates start floating up, reflecting the growth that we're going to get. And so I think people need to be cautious. And also, I'd rather own treasuries short or long term than mess around and jump because the spreads are low. And if I want to take risk, I'll buy stock.
Okay, so explain to me this idea of recession in name only market, because to me this looks like a market right now that's very much pricing in the soft landing scenario. So I just want to understand what you mean there.
Well, I'm with you on that. I think that in general what we're seeing is that you get people who say we've never made a soft landing. What about 1984? What about 1994? We've had soft landings, but I get it. Not in this century. That's kind of like, boy, doesn't that make you feel old? So I think that if we can get a soft landing, I still think investors are going to, they want those Fed cuts. And why is the Fed going to cut down to 2.5 or lower if we don't actually get to see a recession, which we're probably not going to see? So I think a lot of people will be talking about a soft landing, but I'm saying, why are we even going to have a soft landing? Why can't we expand and grow into next year? I think people are probably a little bit too pessimistic. And when you say soft landing, I'm thinking of 94, 95. There's still some tough times. There's still issues with earnings back then. What I'm saying is, if we don't get any revised earnings down, there's not going to be a soft landing. There's going to be a continuation of this cycle. I am not of the opinion that this is just late cycle right here. And I know that's a bit out of consensus, but when you look at manufacturing, you look at the consumer sentiment numbers, there's a lot on the pro side that we're going to keep expanding versus a landing where we moderate growth and slow down. That's why I would caution people about diving into long-dated treasuries right now.
Okay, so what does this mean in terms of opportunities in the equity market and where the market goes from here?
Well, I think you hear it in the background. Everybody's super excited about it. I think there's a lot of good opportunities. I think there's a lot of good turnarounds, but also take a look at what's doing well. You have a lot of the AI sort of semiconductor trades kind of
He's
fading
smart.
since the summer and not really able to break new grounds. But then you've got things like, places that make eggs, places that make fridge, just like aerospace, the value stocks. It doesn't have to just be some beaten up thing. I mean, we're going to see tomorrow if Nike's going to be able to turn around. We're going to see a lot
Randy,
of
were you able to get a trade off?
continuation, see defense contractors still making money. So I think if you're looking towards next year, look at some of those things that have been doing well on earnings but haven't quite popped. Look at home builders; they're still doing great. Aren't home builders supposed to be selling off right now this late in the cycle?
Back there when we had the
I
knife.
think that you've got a more of a secular trend going. I think the economy will be stronger than people think. We'll see. I really think that this is going to be an important earnings season, more so than the last year or two.
Okay, so tell me about your expectations for Nike. As
I'm
you
quite
start
impressed.
Tomorrow after the bell, shares have gotten a nice pop in September. The China stimulus seems to have kind of worked
Always clean as
through
Jim.
to Nike shares up about 6% this month, but still down almost 20% year to date. What are you expecting from their quarterly report, and would you be a buyer here?
So here's what I'm expecting to hear. I'm trying to get a feel for whether or not the new CEO has a real plan and that he's going to get away from just, redoing 100 colors of some shoe they made in the 80s and get back to athletics. Start competing with the Hokas and the On shoes that are eating their lunch right now. I mean, for full disclosure, I'm long Decker. My 12-year-old son is long Nike. Obviously, I'm winning this year. He's losing, but I think those tables might turn. Here's why I'm waiting. I don't want to trade ahead of it. I get the China story. I don't think that that's a story about Nike. I think the story about Nike is getting a new CEO that's going to bring it back to its roots. And if that happens, I want to wait to make sure there's no last-minute disasters that we find out tomorrow. If it's good news, let somebody else make the first easy 10%. If it's going to work out and turn around with their strategy with the new CEO, it's going to take 2 to 3 quarters for have that happen. I think you have time to come in afterwards, make sure the coast is clear, and then invest for the next 2 to 4 quarters. See if you can make money. So that's what I want to hear. I want to hear no surprises. I want to hear things aren't as bad as they appear, and I want to get away from legacy, and I want to basically selling shoes they've already sold in different colors. And I want to hear about how are you going to get more people with these shoes, and how are we going to get back to athletics, which is just the culture of Nike is ruined right now from the last CEO.
Okay, all things to consider when Nike reports tomorrow. We have to leave it there. Lee Munson, President and CIO of Portfolio Wealth Advisors. Appreciate your insights. Thanks so much.
Thank you.
Coming up, it's time for Options Corner. Kevin Green will join us with the levels to watch this week for the S&P 500. Market on close. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to Market on Close. It's time for Options Corner. Kevin Green, senior markets correspondent here on Schwab Network, joining us. So Kevin, you're breaking down a few different things for us. Let's start with open interest with S&P 500 options. What are you seeing there? What does it tell you about sentiment?
Well, Caroline, we are having the end of month options actually expiring here today. So we did actually see a pretty significant amount of volatility in the market as the Fed was actually talking, or Chairman Jerome Powell was talking. We also had JP Morgan adjusting their collar position. Now, we've been following this for the last couple of weeks here, and we now have the new strikes that we'll be putting on, that they had put on in the market. They actually did look at the 45.80 puts, as well as the 54.25 puts. Those are expiring on December 31st. And then also the 60.20 calls. That's going to be the higher strike price area here. They did around 39.6 thousand contracts here. And so what we look at for those areas is just a concentration of positioning. And so that 60.20 area to the upside is going to be an area of resistance for us. If we're going to be able to get close to that by the time of expiration, even before that, that might be a hurdle for us to be able to try to break through. On the other side of that, 54.25 to the downside is going to be a major area of support here. Hopefully buyers will step in. But for today, we saw the same levels for the most part. This will actually update for tomorrow. 57.50 continues to be an area of resistance for the market. Today we got really close to the 5,700 level. We did have buyers actually stepping in. What's interesting about that JP Morgan collar is actually the low of the day is exactly when they placed the trade. Around 2:23 Eastern time is where we saw that trade taking place, and that's really where we had the low tip of the day, and sitting around 57.03. So when we follow these flows, it really does kind of coincide to either upside movements or downside movements in the market. So the whole sell-off is not just Jerome Powell, it was also this position taking place. And then we also have that negative deal level sitting at 56.50. But overall, it's actually a decent day. If we end up flat on the session, I think it would be a win for the bulls as we try to navigate these markets. And we do have some data coming out over the next couple of days, like also manufacturing, as well as ADP. And we cause a little bit of volatility.
Okay, so it's not just that investors are very impatient and want more rate cuts faster.
Yeah, exactly. So right in that position was put on, just so I can make sure everybody understands. As soon as that position is being put on, market makers also have to cover that position. So as soon as that actually hit the marketplace, they went out and actually sold a significant amount of futures contracts.
I knew a guy named Mr. Green. He worked for Schwab. He's the prettiest black man I ever seen. And when he makes a call, they're not that small. I trade with Schwab. I ain't no slug.
participants in the markets, and this is really just reflecting the E-mini S&P futures. We're utilizing that as a gauge of liquidity, and the size on the bid and the ask continues to rise at a pretty healthy pace here. Obviously, we had that drawdown. That drawdown that we see in the middle of that chart is actually the rolling of that contract. We also had some volatility during that time as well. So when we have low liquidity, we tend to have higher volatility and vice versa. Now, obviously, we're talking about today elevated VIX, flat type of market, but we have some event risk that's also a catalyst for that VIX moving to the upside. So if we do not see liquidity actually coming out of this market over the next 2 to 3 trading sessions, you would hope that maybe some buyers will step in the event that we have these minor pullbacks or these minor corrections on an intraday basis.
All right, we'll leave it there. Kevin Green, always appreciate your insights. Thanks so much. Coming up, we'll take a break from equities and look at what's moving in the commodities market with Scott Bauer and a developing story on a report of an activist investor taking a look at a beaten-up stock. More market on close when we come back.
336. Oh, the coffee's getting ready.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice,
Oh,
invest
she
on
broke
my own,
out.
and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Oh boy, 440. 190 to 440.
You invest with Schwab.
I'm right here.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies.
It just jumped $300.
With nearly endless customization.
Just like that. That one candle.
Up to the minute news and insights.
That was impossible.
Trade brilliantly with Schwab.
Oh no. No.
Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. Let's discuss the commodities market with Scott Bauer, CEO of Prosper Trading Academy. Scott, always good to have you on. Thanks for joining us.
Hi, Caroline.
All right, so let's start by taking a look at Bitcoin because it held its gains through the weekend and it's dipping now today back below 64,000. What's behind the weakness?
Well, a few things here. First, let's look at how it's performed the entire month. And just like the equity markets, where September is typically the worst month of the year, same goes for Bitcoin. So even though we're seeing this dip back below 65 and even below 64 now, overall for the month,
That was a missed opportunity.
very good month here. There was a lot of bullish momentum here, but as I had spoken with Oliver towards the end of last week,
Oliver,
he said, are you buying into this? What are you looking for? I said, no, I had to see this pull back to 65 and then hold there.
are you the one he argued with?
65 had been really massive resistance, and I wanted to see that now become support. So the fact that we broke down below that here definitely gives me some pause.
Oh.
Okay, so what levels are you looking at now before deciding to get in?
62.5 would be really critical. I know that's a little bit further low, down from where we are right now, but 62.5 would be really critical. And I'll be honest with you, if it does recapture 65 and kind of looks like it, may go up from there and holds that level, I would actually get in on the upside there if it can recapture there. But here we're kind of in no man's land. 62.5 on the downside would be the next level.
Okay. All right, so we'll keep an eye on that. Shifting to the dollar, it did see some weakness today, but dollar is back to being higher right now. What are you expecting for the dollar, given that the Fed is now in this easing cycle? We got the 50 basis point cut. We know that we'll get more cuts eventually. Should we expect to see continued weakness with the dollar?
Well, some of the pressure is off a little bit after Powell's comments today, and that's why you saw the dollar rally a little bit here. And I think this sell-off is overdone. And I say that because, not that we're not going to get more cuts. We absolutely are. But when you
He
look
needs
at
an
dollar
updated
versus other
station.
central banks and other currencies that are out there, I still think that it is the best that is out there. So I'm looking for other central banks to cut, whether it's...
He's got 2 or 3 computers. He don't need...
Bank of Japan is not raising rates anytime soon again, like many other people had assumed. Could be, in England, what we're seeing there. So I think the dollar has remained really steady in this, just above 100 range. If it does dip below there, 99.5 is critical.
Okay, so we'll keep our eye on 99.5. Moving to metals. Taking a look at gold and silver today, it's interesting. I'm curious about what you think about the moves higher that we've seen, especially in gold, which of course has always been the safety trade, but it was trading near the highs at the same time that the stock market was trading near all-time highs. So we're seeing some weakness today in both gold and silver. But what do you make of, I guess, the correlation between gold and equities at this point?
The correlation is one that we haven't really seen. Like you just said, with the markets at all-time highs, gold at all-time highs, we typically don't see that. But I do think the trade for gold and for silver is higher for the next 3-6 months or so. Not that I want to buy into a rally, but on any dip, if we get another dip tomorrow in both of these, I'm going to be looking for an entry point, because until that pattern is broken of buy the dip, which has really been, the trade for the last 9 months, 12 months or so, I've got to follow that pattern. And we might...
Even after 9 months?
Now. So if we can see gold dip another 1 to 2%, silver maybe a little bit less than that, I would look for some entry points.
Okay, so you'd be buying the dip. And then just finally, when it comes to oil, it's basically flat right now, trading around 68.22. And we have seen a lot of that China stimulus rally kind of fade out.
I want to get updated on the war.
Shares of Chinese companies, but overall, we haven't seen.
I think what Yahoo or Wahoo did was very strategic. He just wants peace. God darn, these things are at $9 now. Randy, $190 to $9. $970, 1,000. Oh, 2 notches in the money now. That could have been, I don't even want to do the math. It's 700 times 24. That's almost $17,000. $115. 115. Let me see. So I have 115 minus 9. That would have been 10. Oh, God. I would have never held them that long. Never. Unless I had an emergency and I just had to leave. And I still wouldn't have held them. I'd have sold them for a loss. $11? Are you kidding me? So that would have been $1,000 times 24. My average was 170. So let me see. Yeah. Oh shit. Yeah, every bit of 1,000. I can say 1,100 and get away with it. Times 24. Oh my. Let me try that again. 1,100 times 24 equals what? $26,000? Yeah. 27 rounded up. And how much would taxes been on that one? 27,000 times 25. Times 25%. That'd have been 6,700, 6,800 in taxes on that trade. So I'd have netted 20,000. I really don't need to trade anymore the rest of this year. I'm going to end up paying a lot more taxes than I want. They're at $1,370 now, $1,400. Damn it. $1,570? You got to be kidding me. $1,620. $1,950. They went to $1,950. So let's just say easy 1,800 times 24. God, 42 grand. 43 grand. Spank. You get the Spank Award. You think it's funny? I would have bought everybody at least dinner tonight. Oh my gosh. Can you believe that? Nobody would have ever thought. Jesus. My original entry was 280. Even that would have been good enough. 20,000. I mean, $20.50. I didn't see this coming. Not at all. I talked about opportunity. I didn't mean, come on. Randy, will you give me mouth to mouth?
What the fuck is going on? What the actual fuck is going on? What the actual fuck is going on?
What's that? Hey, you got your mic on. Unless you don't know it. Ugh. Ugh. $2,300. What's your excuse, Magnificent, for telling me to get out? Why'd you tell me to get out of that trade? I think I'll write a blues song tonight. Fake news. He's a fast typer. How about 2,400? That could have been one of my biggest trades of the year. Let's just say 2,250. 2,250 times 24 would have been what? $54,000. I think that would have probably been my top 3 trades of the year. It reminds me when I used to trade Tesla. And that one time that option went up to, what, $10? It went up higher than that. I mean, it was a big time $120,000 trade. Okay, well, hurry up and get over with, Day. When I say continuation, I didn't mean nothing like that. I mean, that's just taking good advantage of the situation. I knew I had a great opportunity, but man, not that good. When I said continuation, I sure the heck didn't mean that. $28.20. La 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 la. Hurry up, get over with, Day. I don't want to look at this no more. God, 36 frickin'. Okay. Hurry up, bell ring. I can only smile. It's one of them life. You could see a trade like this a couple, 3 times a month, but not like this one. We'll come in tomorrow and there'll be a big knife on it. We'll do the same thing again. This is one of the craziest. I've been here 20 years sitting at this desk. And the last 2 years have been probably the 2 craziest. I mean, I was here during the Obama run, during the Clinton. I watched the Clinton run, and I didn't trade then. I started trading with George Bush Jr. And even after 9/11, it was still, you know, we had a big crash. We had a crash during the Clinton years when he left. And then we started recovering, then 9/11 came and we had another crash. And then it ran until Obama got in office, and then we had another crash. And then we had a Biden crash. So it was a good 12 years that we didn't see that kind of action. And then we had the Biden crash. We'll get another crash eventually. But this market is probably one of the most, since the internet and retail traders have come into the scene, you know, we were laughed at. COVID, you know, people taking their, how do they know? People taking their little checks that we got from the government and trading stocks. Most of these kids still lived at home under their dad's basement. And now what's it been? Some of them are still about 24 now, 26, and they're in the prime of their life trading a market like this. I mean, it took me years to get to a market like this. And I've seen all kinds of changes. The penny stocks would barely run, and then COVID came, and then all the volume picked up on the penny stocks, and people made millions. And now those same people are trading these options, and they're trading the Nvidias and the Teslas and the. So a new generation, you know. I don't think the pennies will ever move like they did during that period of time. But I traded pennies when I first started because I didn't have much. And I went through, I think, probably $8,000 before I started trading good. 10,000. And then, it still wasn't, I don't think I really started getting good until I broke up with Vegas. And had to sit here and come up with a new strategy. And I came up with a new strategy, and I'm comfortable now just trading a few stocks. I mean, I don't have to have more than 10 on my watch list. Then we had AI come, and that just kind of changed everything. But today, I mean, I knew this was a great opportunity. I was very excited, so I jumped in a bunch of calls. And after I made $1,200, I was done. It could have been a $60,000 day. But I would have never, ever held them that long. Never. I would have never done it. I don't think anybody else would have either. Or at least, I know I wouldn't have. Because if I'd have got up to 20 grand, I said, I'm taking this money and running. But it was definitely a great opportunity, and I explained why, because it was just a market reaction from a speech of assumptions. And the market is so wrapped up in these rate cuts, I haven't heard anybody say they're looking and expecting another 50-point rate cut. 2 25-pointers I heard by the end of the year, and nobody that I know of said 50 that I listened to. And all of a sudden this guy gets out here on Schwab and says they were expecting a 50-point rate cut. I don't think so. I never heard it until he said it. But that was just it's something you got to remember how good of an opportunity that knife was. And I knew that was a continuation, and I would have probably sold it completely when I hit the 200. I would have definitely got out of the trade. And then I called this dip, and I don't know why I didn't take that. That would have been executed that from 190, and it run up $3,000. I executed it, but I didn't. Took it to the double top and got out of that sucker. Oh well. You got to make every day a learning lesson. If you learn something new, remember it. I mean, you won't remember it. You'll remember some of it, but you won't remember all of it. But every day I sit in this desk, I try to make it a learning session. I never stop. I won't stop. The only way I'll stop trading is if I go blind. I could lose my voice. I could still trade. Maybe if I lost all my fingers, I probably couldn't. I'd be telling somebody, okay, buy here, or I'd hire somebody to push the buttons. But, I grabbed them at 115, 125. I grabbed them at 180. I grabbed them at 280. I grabbed them at 145. If I'd have held all them 24 contracts, I probably wouldn't be here tomorrow. I'd have to take a day off. Go out and buy my mama something nice. So, yep. I want to wish everybody a happy day. Make every day a learning lesson. I'm so thankful to have people in this room like Randy and Magnificent and Mike and all you newcomers, Livid Goose, Roaring Kitty. I mean, you make my day go by so happy, and I think you'd be a fun guy to hang around with. Ricky, M, so I'm very blessed to have you all around me. I'm going to take some time off and I'm going to study up on what's going on in the Middle East and watch Dan Vangino on Rumble. See if I can handle an hour of him. Probably not, but I like him. He's the only one out there that knows what he's kind of talking about because he's been there. I'm surprised they ain't got a hit out for him yet. We live under a country that's authoritarian, autocracy. It's not where one power wants to rule. It's not like the United States I used to grow up in. And this election will probably get stolen too, because I don't see how anybody could vote for that frickin' idiot. But they will. She's got a record. So does Trump. I wanted somebody in the Republican Party that had a little bite to him, and he does. I mean, it took years to get somebody in there like that. They can, the other side can yak and do all they want and get away with it, but if a Republican did something like that, they would be yelling and screaming democracy. So I'm going to get out of here, and I just 1,200. I could have had 60 grand. I mean, I made more than 12, but I mean, I knew there was continuation, but I didn't think it was going to be like that. So everybody take care, and we'll see you tomorrow. Think about monetizing my YouTube, but I'm not for sure yet. I have to quit playing music. Or at least put on a headset.